right, what is going on, everybody? I am happy to welcome everybody to our 6th annual Global Fintech Awards here at Benzinga. Today we have a lot to celebrate. If we think about when we did this event last, a lot has happened since then. The world had its GameStop moment. We saw brokerages start moving commission-free in Canada. And if we think back to when we did this event for the very first time 6 years ago, we have had massive systemic changes in the market. Accounts weren't commission-free. There were minimums to get started. There were not advanced mobile tools. All of that has changed, and that's what this event is here to celebrate. So let's talk a little bit about what the day will entail. So we're going to hear from thought leaders in the brokerage and trading space. We're going to talk to all of your tools providers. We're going to talk to your brokerages. We're going to ask them what's next, what's important to you, what are your users telling you that they need? And of course, we are going to be having an award ceremony. Think about this as the Grammys for individual investors. All right, we asked the crowd to vote. We asked a panel of judges to vote and tell us out of the entire space, all of the brokerages, all the tools, all the information providers, out of the communities, the chat rooms, the social media influencers. That's another thing that we've seen rise since we started this event 6 years ago. Who has made the biggest impact on your life? Who should we really be celebrating? And that's what this event is all about. We are going to celebrate all the innovation that's happened. We are going to be talking about what is going to come. What can you expect from the tools you use today? What are other tools that you should be trying out? And guys, anybody out there on YouTube, you are empowered with the chat, okay? We do this in a public venue for a reason. We had some conversation over at the Benzinga team. We said, should we keep this as a private event for just people in the industry? Because there's going to be a lot of industry lingo going on. There's going to be a lot of conversation that you probably don't typically hear. But we said we want to bring this to the masses. That's what we do here at Benzinga. We want to make markets transparent. We want everybody to be able to participate. So you are empowered with the chat. If you have questions, you have comments, you have topics you want us to address, put them in the chat. We'll be watching it all day. We'll either be responding to you live. We'll be asking questions on the stream, whatever it may be. Again, I just want everybody out there to know you are a part of this discussion. We wouldn't be having this day without any of you. And so without further ado, I want to bring on Benzinga editor, Justin Roberti. He is going to be getting us kicked off with an amazing thought leadership discussion. We're going to be talking about, what's changing in the space. This one's going to have an angle more towards digital assets. And then we're going to be diving into some of these tools, platforms, brokerages, and awards. Justin, if you're out there, join, hop on with me. All right, Brock is just coming straight in. So no, Justin. Brock, welcome to the Global Fintech Awards.
Well, glad to be here.
Yeah, absolutely. And I guess while Justin's having some connectivity issues, why don't we get started and give us a little bit of background on yourself?
Well, happy to do that. I've been in we got Justin now, so we'll I guess let him take lead. Justin, can you hear us?
Not yet. All right, keep going, Brock.
Again, I'm Brock Pierce. I've been a digital transformationist or futurist, working with technology well over half my life, starting with digital media, trying to build what you'd think of today as YouTube, Hulu, or Netflix back in 1997, 98, 99, and the internet 1.0 boom. I then moved into virtual reality, where I was the primary market maker for virtual currency or digital currencies in online games like World of Warcraft and Second Life. We were PayPal's largest merchant for years. We were instrumental in the launch of Alipay. And we were buying and selling all the digital currencies with hundreds of thousands of people mining out of those games professionally, which then led to cryptocurrency, where I'm chairman of the Bitcoin Foundation. I was chairman of Mastercoin. We were the first ICO back in 2013, changing capital formation. I was co-founder of Blockchain Capital. We were the first venture capital fund dedicated to the cryptocurrency or blockchain industry, funding the Coinbases, Krakens, BitGos, et cetera. That's on Fund 5. I was co-founder of Tether, where we invented the stable coin, doing $100 to $300 billion a day, 50 plus trillion a year. Started the first crypto bank. I've gone on to start a few banks. BCAP, the first digital security. Block 1 and EOS, the largest ICO ever. Now there's Bullish and Helios, and I'm skipping over about 100 different things. And so I recognize how technology has the ability to transform the world in positive ways. Remember, it's amoral. Technology is a tool. How we use it will determine the impact it has. And at its core, what we're attempting to achieve with these technologies is to bring greater accountability back to the world, bring transparency to the world, and the democratization of access to tools and opportunity. And so I'm really happy to be doing that. I know what Justin was going to ask me about, at least initially, is some of the work that we're seeing are the results of this. And so I'll quickly, I guess, dive into the things that we're seeing in El Salvador. It's worth noting that 4 to 4.5 billion people on the planet are on or underbanked, meaning a majority of the people on earth do not have the financial tools or access to the tools necessary to have that life, liberty, and pursuit of happiness, the opportunity of a life of prosperity. If you were going to re-architect Maslow's hierarchy of needs today, basic financial services are essential to that, obviously, along with connectivity. And so let's double click on El Salvador. As I think some of you know, and if you don't, President Bukele and the government of El Salvador this summer announced that they were going to make Bitcoin legal tender, legal currency within that country. They decided to implement this law in 90 days, a completely entrepreneurial government. I mean, unheard of. Even as an entrepreneur, I thought that was a pretty aggressive timetable. And so 37 of us came down to El Salvador as the first formal delegation into the country since COVID, with a group of visionary entrepreneurs, investors, technologists to assist the government in that implementation and rollout. It went live in terms of the government providing a wallet on September 7th. We call that Bitcoin Day. And in that country, only 30% of the population had access to basic financial services. 70% of the population of El Salvador were unbanked. When you use an Uber there, you pay with cash. It's not like connected to a credit card. It's a cash economy. Within 30 days of that law taking effect, a majority of the population of El Salvador had downloaded that digital dollar Bitcoin wallet called Chivo. In 30 days, a majority of the population. Now, 90 days later, within 90 days, over 70% of the population have done so. So from 30% being banked, we effectively now have 70% banked in a matter of 90 days. The data doesn't lie. This stuff works. Other amazing.
And Brock, if you don't mind, let me hop in with a question really quick. When you went down to El Salvador, were you warmly received? Was there a lot of opposition? Can you talk a little bit about that process that you went through in making this transformation?
Well, I mean, we were the ambassador from El Salvador, the United States, came over to my house in Washington, D.C., and said what it is that they were hoping to accomplish during that time period. And with the aggressive timetable, we organized as a group, 37 of us coming down there in under 6 days. And we had the most warm welcome possible, met with pretty much almost every major government official, from tourism to healthcare, obviously central banks and otherwise. And it was a very brief trip. We were there for 2 or 3 days, and many members of that group stuck around to actually facilitate the implementation or rollout of everything that's happened. We came back again to celebrate Bitcoin Day on September 7th. You should actually go watch some of those videos. Brought one of the most amazing drone shows, actually directly from Burning Man, to put the Bitcoin logo in the heavens, along with the El Salvadorian flag. And actually, just around the corner, there's going to be the big culmination of all of that is LaBitConf. It's the leading Bitcoin conference in South America. had moved their event to El Salvador to honor and to celebrate everything that's happened there. And that'll be happening from November 15th to the 20th for anyone that's interested in checking it out and seeing for yourself. Well, since then, I've gone and spent time now with the presidents of Ecuador, Honduras, Guatemala, Panama, et cetera, working with all the neighboring countries there in Central America, because what El Salvador has done, again, the data doesn't lie, has created a lot of interest amongst other governments. I'm in talks with 30 other nations around the world that are interested in seeing how this or other ideas, how digital transformation or innovation might serve their people in their countries, and even things that we're seeing here in the United States. Mayor Suarez of Miami has obviously leaned in a big way, saying Miami wants to be part of the future. Miami wants to be a 21st century city, and Bitcoin is part of it. Mayor Suarez announced just a few days ago that he's going to take his next paycheck in Bitcoin, which then was immediately followed by the new mayor of New York City, or mayor-elect Eric Adams, who then quickly followed up saying, I'm taking my next 3 paychecks in Bitcoin. And now we're seeing a number of mayors across the United States doing the same. This has just been an extraordinary year. It started out with, call it the developers and the early adopters that were really leaning into this industry for philosophical reasons, which then was followed by academia, then followed by venture capital, then followed by big tech, then followed by big finance or the financial institutions of the world. And we're now in that final wave of, call it adoption, which is government. And we're seeing it happening all over the world. It's been an incredible year for those of us that have been building a long time.
Hey, Brock, I just want to jump in for Justin here. And I want to ask you, you were talking about El Salvador. What is your take? What is your impression right now on, I know you're all about access, right? Access to wealth. What is your take on how it's gone so far down there? Because I know there is, like you said, it was started with a couple months notice, right? And a lot of confusion on the ground for individual consumers, for businesses. What is your assessment of how it's gone so far?
Well, I mean, I think it's about as successful as you could possibly have hoped. I mean, they put an aggressive plan forward to roll out this Bitcoin law in 90 days. I mean, what government is like, we're going to make a major technological rollout? Yeah. I mean, even for a startup, a 90-day plan would be aggressive. And we're talking about a government, which I love the entrepreneurial nature of Bukele and the El Salvadorian government. And considering that timetable, it could have gone horribly bad. It could have been a disaster. They got it done. You know, was it perfect? No, but perfection is the enemy of progress. And when people that need financial services have an opportunity to get them quickly, it worked. And again, over 50% of the population were adopted or onboarded within 30 days. It's now over 70% of the population within 3 months. I'd say it's a phenomenal success, but that doesn't mean that there's not still a long road to go. I mean, for all of you, I mean, did you understand what Bitcoin was in a matter of months? Did you really understand the value proposition? Well, I mean, the good news, though, is Bitcoin has gone up since then. And so all of these people that have been onboarded with this Bitcoin wallet from the government, the Chivo wallet, which also has US dollar, digital dollar capabilities within it, at least their first experience with Bitcoin has been a positive one in the sense of appreciation. President Bukele, because the government bought Bitcoin for its balance sheet as well, just announced that they're going to be using these massive Bitcoin profits to build a bunch of new schools throughout the country. So far, obviously, it's been, I think, as big a success as one could hope, but that's not to say that it's been perfect. And clearly, there's a long road of education, the educating of the masses. But you know, the fact that every store, every McDonald's, everywhere you go accepts Bitcoin. I mean, El Salvador is the most probably advanced country in the world when it comes to financial services at this point, from being, you know, basically far low call it in the maybe the top 150 as of 90 days ago. So I mean, it's been it's evidence that as countries, as leaders of nations, if we embrace the future, amazing things can happen for the benefit of our people, and it can happen quickly.
I'll be honest with you, Brock. Some nights I wonder if I even understand anything about this. Because it's just it never stops. There's always more development. There's always more changes. If you zoom out from away from just El Salvador for a second and just zoom out on the entire world, if you could put a number on it, like what inning do you think we're in terms of true democratization in terms of the masses really understanding and having access to this entire asset class?
Well, I'd say we're in the back half of the second inning, so these are
Okay.
still early days. You've got call it a couple 100 million people that have cryptocurrency, tens of millions here in the U.S., about $3 trillion of aggregate market cap, meaning this has been the largest largest wealth creation event in the history of the world.
Yep.
And what's really interesting, and a point that's often missed, is let's say the venture capital industry is about $250 billion. Venture capital as an industry is supposed to be investing in innovation or disruption. And as a sector, the VCs almost entirely missed this opportunity. They just didn't get it. They just couldn't see it coming. And remember, those VCs are asset managers that normally manage money on behalf of pensions, financial institutions, endowments, things of that nature. And because they completely missed it and the normal beneficiaries weren't it, this $3 trillion of wealth that is created has effectively all ended up in the hands of the people, which is an extraordinary thing to put this much wealth or this much power into the hands of the masses and not in any one place around the world. This capital is everywhere. We are getting pretty close to the point where a majority of the world's billionaires made their money from cryptocurrency. Just
Wow.
think about the dynamic, the power shift. And the fact that we all made our money faster and easier than anyone basically before us, at least at scale, means that we're going to have an impact on politics in the world. We're going to have an impact on philanthropy. We're going to have a big impact in innovation because we're willing to do things that traditional, call it members of the elite weren't willing to do because they felt such possessiveness of the money and the wealth that they accumulated. We're kind of a different ilk. And so and we're single issue voters as we talk about the politics of it. Tens of millions of Americans that aren't Democrats. We're not Republicans. We're single issue voters. We only care about the future. And we care about politicians recognizing that the future is important to us. And I think it's an amazing thing to see. And we're going to watch the impact of that. And clearly, things have the ability to scale, from these numbers to a billion or a couple billion users really quickly. I don't think that it's going to take another 10 years to get, to double from where we are. I think that we're going to see massive growth over the next year, 2 or 3. And I think we're at that tipping point.
What are you more interested in? Are you're more interested in price appreciation or mainstream development, institutionalization of this asset class, or maybe they're the same thing?
Well, I'm not motivated by money, so the price itself is really just the primary barometer of sentiment and adoption. I've never made money my focus. I believe that making money is the byproduct of doing good work. Figure out what your mission is and what you're passionate about, and do whatever you're going to do really, really well. And money is likely that thing that will follow as a result of doing that. When you make money your focus, I find you tend not to get it. And so as adoption increases, as utility improves, as the promise of what this technology can do to better the lives of the people of the world, price appreciation is the byproduct of making that happen.
What is the number one thing, though, standing in the way of all that? Is it people using bad actors, right, in the community? What is the biggest thing standing in the way of mass adoption?
Education and usability. It's kind of like the internet in the early days. It takes a while for people to change their habits. I mean, just think about when Apple Pay came out. How many people stopped using their credit card once you were able to pay for things from your phone? The reality is most Americans took a very long time to make that migration. I mean, if you even have at this point, because it's hard to change human behavior. It's hard to change habit. And so the process of education, informing people, getting people to take their first step, which I've never encouraged people to invest in cryptocurrency other than to say, go buy your first $20 or buy your first $100 worth of Bitcoin, because I'm not encouraging you to make a financial investment. I'm encouraging you to make an investment in yourself, in your own knowing, so that you can see what this is all really about. And from there, you can make informed decisions for yourself. So let's call it education on the one hand. The other side is just usability. Really good user interfaces that make it easy to use, make it super secure. These products were built by, some serious techies. And, when you're dealing with really serious techies, consumer products that are easy for the masses to use is typically not their skill set. And so it's taken us a while to get to that point. And it's definitely a lot better than it was 5 years ago. But there still is a lot of room for improvement.
Last question for you, Brock. Of all the things in your career you've done, of all the businesses you've been a part of and all the things you've started, what are you most proud of?
Well, I think it was my run for president last year. Obviously, I had no chance of winning, and it wasn't about that. It was an exploratory mission to understand the mechanics of our political system, our government, or our system of governance. And to do that, and most people, you just have to think about, to step into the ultimate ring of fire, is to put your life, liberty, and all of your resources at risk. It's a very high stakes game, but it's one of those things like if you see a child in the road and a bus coming, there's an obligation to act. And I think there's an opportunity to make a big impact in our system of governance. And now, having done that, I have so much I have so much respect for anyone that runs for political office, because it requires an incredible amount of courage, because the risks are real. But if you want, be the change you wish to see in the world, the future is going to happen to us or with us. So let's get involved and co-create a future that we all want to live in, and one that works for all of us.
I got to say, I did not see that answer coming. Brock Pierce, General Partner, Board of Directors, Space Fund, Bit Digital, and many, many, many other ventures, doing fantastic work in the space. Mr. Pierce, thank you so much for being our keynote speaker today at the Benzinga Fintech Awards.
Thank you for having me.
Luke.
I'm back, Spency.
What's up?
How about that one? I loved that last question. Most proud of run for president.
Didn't see that one coming.
We have some impressive people we're going to hear from today. I don't think anybody else has run for president before.
No, I think you might be right about that. Yeah. Who's up next, man?
So next we're going to be bringing on Benzinga's Neil Hamilton.
Ooh.
And for anybody out there who's just joining us again, this is the 6th annual Benzinga Global Fintech Awards. This is where we not only celebrate all the innovations that have come to capital markets, but we're also taking a look ahead to see what's up next. Again, everybody, you are empowered with the chat on YouTube. If you have questions, comments, topics you want to see addressed, drop them in there. We're going to be hearing from the brokerages, the tools, the information providers all day today. This is your day to learn about the space and what's really out there for you. And with that, Neil, I'm going to send it your way.
Thank you very much, Luke. I agree so much with what Luke just said, and it plays into part of why I'm so excited for this next talk. We are in an inflection point. Many have said it. You can see it. You can feel it. Cryptocurrency, stock markets, access to the retail investor, access to normal everyday people able to grow their wealth with new technology and new understanding in markets. That's why I'm very excited to introduce our next session with Victor Wang, CEO of Stockpile. Victor, how are you today?
Good. Morning, Neil.
Morning, sir. For the folks that are not initiated yet, would you mind letting us know a little bit about what Stockpile is and a little bit about yourself?
So Stockpile, we're a brokerage centered around new investors and helping them build long-term healthy investing habits. We want people to make investing. We want to make investing simpler and more approachable. And we want the investing opportunity to be open to everyone, not just a chosen few. It's why nearly half our customers are women and 25% of our customers are under the age of 18. The face of investing is definitely changing. And we're here to bring equal financial opportunity to everyone. We want to make it easier for everyone to get going, easier to get help, and easier to get it right. So we just want people to start investing.
I really enjoy that mission, and I love seeing the actualization on the app. I got a chance to check it out. I know with the holidays coming up, that I'm going to be utilizing you guys quite a bit for some people that I think will really like it. So I want to ask a little bit about Stockpile itself. I'm hoping that you can tell me, you can tell the folks that might not know about you guys, how does Stockpile make it easy for people to start investing?
Yeah, I think that's been our core to our mission from the inception. Initially, we have custodial accounts to help kids get started investing early. We have gift cards to help people get started in a way that's easier and familiar. And we're the only place you can buy a gift card to get people started with investing and help them get stock. We have a streamlined interface to make investing more straightforward. And we have a simplified onboarding so that people can get started in under 30 seconds. We remove the complexity from investing to make it easier for everyone to take their first step and help other people take theirs and help people buy their first stock.
That's great. And for those that haven't tried to do this, it's not necessarily an easy process if you want to gift a stock to, a younger person, a child, if you've got great nephews, nieces, you've got grandkids, you've got kids you want to get started. There's a bit of a process. Would you mind sort of illustrating what the alternative looks like to Stockpile?
Yeah, I think, challenging on most other brokerages, if you want to start a brokerage account for somebody else, you have to get social security numbers, you have to get information, you have to go, often go to the brokerage itself. For us, it's simple. You go online, you buy a gift card for somebody, you don't need social security numbers, you don't need any information, you just need either their email or the phone number, and that's all you need to get someone else started. And that person can be 10 years old, they can be 40 years old. Really, we want to make sure that everyone is comfortable taking that first step.
Yep, absolutely. And guys, the holiday season is coming up, so make sure you pay attention to this, because I really think this is on the top of a gift that you can get for almost anyone. So I want to know a little bit about how you guys over at Stockpile look at this time that we're at, where there's a shift in market structure, right? More retail folks are getting access to the markets. And I'm just wondering if from your point of view, you could tell me which trends you've identified that have led to the creation of Stockpile.
Absolutely. Well, I think the big thing is that the customers of today are not the customers of the last 100 years. So the brokerage business can't stay the same. Historically, wholesale pricing, trade fees, those were big barriers for people starting to invest. But with, everyone offering fractional trading, which we invented, by the way, and commission free trading, those barriers have disappeared. So the barrier for today's investors, it's really, literacy and confidence. The barriers are now really emotional. The feeling of exclusion, people feeling like the investing opportunity isn't open to them. So we try to help everyone get started. We want people to cast aside the fear and uncertainty in favor of confidence and literacy. So ultimately, we want everyone to just, build become informed and be able to make responsible investing choices.
And this is a mission that resonates a lot with us over at Benzinga. Very similar to what you're doing with enablement and providing the tools to get access to the markets. Our mission is to provide information that is equally easy to consume for everyone.
Absolutely.
So I very, very much this mission resonates with me and the other Zingers here. So I'm curious. We know that there have been sort of these trends happening. We know that there's a lack of financial literacy among people who really just need to take a step forward and can really get access to the markets. Have there been any key inflection points for you guys at Stockpile? Any external events perhaps that have gotten you to where you are today?
I think the big change obviously was the introduction of free trading. I mean, really, that removed so much of the financial barrier. But, I think what we do is we work with, not only our customers, but behavioral scientists to really understand how people can start to emotionally, feel open to making those decisions. We want to help everyone make confident choices, and not just based on like random confidence, but informed confidence, right? We have a quick start guide to help people make those first steps. It's something that that's really centered around kids, but we see a lot of adults reading that as well. And so, it's how do we help people make that first step, even in spite of all the removal of fees and, making that all simpler. The vast majority of Americans still don't invest in the stock market. And really taking that first step is really, really difficult. I mean, when you think about anything that you start, right, getting back in shape, learning a new language, whatever it is, that first step is the most difficult part. And that's why we say starting is everything. There's a great quote that I heard, from this Olympic runner. He said, the hardest part of every morning run is a trip from the bed to the floor. And investing is the same way. So really, we want to make sure that we are helping people take that first step and see that they can have an opportunity for success as long as they simply start.
I love that you're setting this foundation with young people and getting them in and making them feel comfortable. Imagining folks going through their adolescence and going into an adulthood with that, as you said, that knowledge-based confidence is unprecedented, at least in mass for most people. So it's very exciting to see that. And that leads me into my next question, which is, how do you see brokerage and investing evolving over the next few years?
I think it's really just making sure it's more approachable. And I think it's got to be, just a completely different way that people think about investing. People aren't comfortable even talking about money and finances. So we really have to get people past that and really build a, overall confidence and comfort level. And that's not from, I think we see that a lot where, I think if you look at most brokerages, when you land on that first login page, it's all charts. Right. And the chart is actually what makes it confusing for a lot of investors. So how do we make it more approachable? How do we make it more comfortable so that people can, understand their finances and introduce others to it as well? I want to mention real quick, it's like the nature of the way we look at the community as a whole is different. So I think that's one of the reasons why Stockpile actually created the Stockpile Foundation, to basically change the way we look at investing and creating greater inclusion for everybody. So, the Stockpile Foundation partners with Summa Wealth, which is, financial literacy toward the Latinx community, Cool Kids, which serves at-risk youth and underserved communities. So the nature of the way we look at our business and outreach and inclusion is very different than I think the like I said, the past 100 years. When you look at customers over this entire time, the way we represent brokerage and investing has been pretty much the same. And really this change with new investors coming in, wanting to understand what they're doing, looking for that opportunity, we need to make sure that doors open, that we're approachable to people, and that we're representing information investing in a way that they feel that they can be successful with.
So you mentioned a few communities with your foundation that are certainly, we know, statistically underrepresented in the retail trading community. And I'm wondering if you could tell us a little bit more about what the average Stockpile user looks like, because I have to imagine that's quite different than the average user of one of those more advanced brokerages.
Yeah, it's absolutely true. I think, when we started, oftentimes we looked at, people looked at, our average balances or average portfolio value and, just ridicule and say, oh, that's not, that's such a small amount. Is that really a real investor? And what's happened is those customers that have simply started, the average portfolio value has increased significantly over the past 2 to 3 years. And not just because of, stock market improvement, but really, additional investment into their portfolio and creating a pattern of behavior where the average brokerage is, 20 to 25% female customers. We're almost half our customers are women. And, the fact that, almost a quarter of our customers are under the age of 18 and are actively, looking at how to inform themselves about investing in a responsible way with parental approval. Those are the things that get people engaged and feel like, that they can be successful with that. And so I think that's really key, just making sure that we're getting more people looking at it, being confident enough to even make that first step.
Yeah, confidence sounds like a big theme here, and I'm wondering. So confidence is one of the challenges, one of the barriers to someone who's outside of the markets, taking that first step and getting in. I'm wondering if you can talk a bit more about some of those challenges that you see out there, with whether it's underrepresented groups or if it's differences between children, adults, getting into investing, and how you guys are approaching them and how you see that evolving in the future.
Yeah, I think one good point is our custodial product. Our custodial product has a supervisory element to it where kids can initiate a potential trade, but it will go to the parent who will then make an approval and then say, okay, yes, Billy can make this trade. But I think the most important part of that element is not simply that they're able to make a trade, but that we're able to create a dialogue between kids and parents. And I think we want that same dialogue to be among peers. And I think when people are talking about simpler tools like gift cards or anything else that can initiate that discussion, those are people that would have never talked about finances before. I mean, we know that, from studies, people would rather talk about death and disease than about finances. And how do we make that be an approachable topic for people? And it's looking to these different communities, making contextually accurate representations that are relevant to those audiences in the right way. That's what we need to do, and I think that's what we've done with a lot of our community partners, is to make sure that we're welcoming to those people and making sure that that they feel that they can start investing. I think I'll kind of start with one key thing. When I started investing, the most intimidating step for me is to walk into a brokerage and wondering, do I even belong here? Is this the right place for me? That's what every customer goes through when they start out, and that's what we need to change.
That's incredible. Any final things that you would like folks to walk away with when they think about Stockpile? What do you want folks to think?
We want to think that for everybody, that if you're willing to learn and start, that you can start investing. And it doesn't matter who you are. It doesn't matter if you have $2 or $2,000 or $200,000. You have the same opportunity to start investing, that your chance of being financially, having financial opportunity is not dictated by, where you live or the color of your skin or your gender. It's everybody. And I think as long as everyone understands that, they can take that first step and have the opportunity for success.
Fantastic. Victor Wang, CEO at Stockpile. Victor, thanks so much for being with us at the FinTech Awards today.
Thanks so much, Neil.
All right, back to Luke. Oh, hey, Jordan. I think Jordan might be muted. Jordan.
Good?
Yeah, you're good now. Go ahead and take it away. I'll see you guys later.
Bye, Neil. Hi, thank you. Welcome, Heather.
Hi, Jordan. Good morning.
Good morning. How are you?
I'm well. Thank you. Thank you for having me.
Of course, Heather Wilson is the CEO of Clara Analytics. I'd like to actually start there. So can you tell us about the core business at Clara and maybe some highlights from the past year?
Sure. Thank you. So if you think of Alexa and Siri, that's how you think about Clara. Clara is an artificial intelligence tool. It's an end-to-end AI service. We focus in commercial insurance. So think about that adjuster, that claims adjuster who has hundreds of cases for workers' compensation. We work within that product line, specialize in it, has hundreds of cases. There's more data. Data is, faster data, more data, digitization. And so they could miss something that's going on with that case. And so our artificial intelligence models alert them, send them triggers and tell them this particular workers' comp case needs to get back on its optimal path so that the worker sees the right physician, that the worker becomes healthy and gets back to the family and to the workplace. We really think about the injured worker, obviously with what's going on now, Jordan, with worker shortage. We've got workers that are the gig economy, obviously taking on roles that they may not be skilled for. So there's a lot of, workers' compensation cases out there. And so our artificial intelligence, it works. We know sometimes there's a lot about AI. can you explain it? Is it truly working? And ours does. And it not only helps the carrier by cost containment, saving them millions of dollars, but it helps that adjuster at the end of the day. They have Clara as their Siri and Alexa to help guide them with that case. And we want the injured worker to have compassionate care and get them back to work. And that's what we do.
Wonderful. Thank you so much for that overview. I actually want to pivot to talk about women in tech. So you started two groups, one at Kaiser and one at AIG. Can you share a success story and maybe talk a little bit about why you organized those?
Right. So, I had the privilege not only to be, the first chief data officer at AIG, but also at Citigroup to be, the first female chief data officer. And that was really a privilege. And, such a large agenda, and had wonderful mentors there, male mentors who believed in me and gave me that opportunity. And so whenever I've held a chief data officer or chief data science role, whether it's at Kaiser Permanente, Citigroup, or AIG, I always felt this passion and this responsibility back to help those that were in the organization to look at how we were hiring, how we were promoting, how to build a community for women who, this started 15 years ago for me, that were very underrepresented in a lot of the technology functions and operations functions. So how do you create the awareness first? How do you put something to action? And then how do you build a community for mentoring and to build confidence in these women so that they could understand their role and their opportunity to grow in the organization? And so we started to see, the stats we saw promotions happening, and we also saw new slates of hiring happening. We saw people getting skilled. We saw, people being able to have mentors that would help them think through how to think of a career trajectory. So it's always been something for me over, the last 20 years. And, the stats really still aren't where they need to be. And so, even myself being a female CEO of an insurtech, there's not enough of us. And I'm really proud that organizations and CEOs and chairmen of the board are putting, more women and underrepresented groups on boards these days, because you need that diversity, you need that opinion, and it's just been a passion of mine.
Yes, I have so much respect for that. Thank you for doing that. So would you say the biggest impact is the diversity or something else?
It is the diversity. And every time I see a LinkedIn article or something coming on Wall Street that, there's a new female CEO, or there's, a new female put on a board or chairman of the board, I get so excited because, listen, I'm a different generation. Jordan, your generation has to continue to carry the torch and continue to help us bring that diversity and inclusion to the workforce.
Absolutely. And when it comes to women in STEM careers, especially at C-suite level positions, how do you think that shifts society's perspective, or does it?
I think it does. As I said, when we see more women in those leadership roles, especially in the C-suite, I think it does open up people's eyes. And I think it does say, wow, they can balance everything, and people are giving them an opportunity out there. And, kudos to even, my board at Clara for giving me this opportunity. And I'm on the board of Equifax. Kudos to that board and to the CEO of Equifax for giving me that opportunity. I mean, yes, it is an earned opportunity, but it's also, they have a choice to make. And, and for them to choose to go with a female or someone, African American or different gender, it matters, and they have a choice to make. And so I have a lot of respect. And so I do think the more that people make that decision, it brings more exposure, and we continue to carry that forward.
Amazing. And what is your advice for women who want to start a career in STEM but maybe be feeling a barrier to entry?
Yeah, I know, like myself, 20 years ago, whether you're sitting in a computer science class or you're sitting in a data science class, or you're sitting in a coding class, sometimes you don't see yourself. I remember then, the 30-year-old Heather and the 40-year-old Heather walking to a boardroom, never saw, other Heathers in there. And so it created that passion in me. I think that it's really important to find that inner courage in yourself and to find that mentor. And that mentor doesn't always have to be another woman, right? I mean, I've had a lot of male mentors that have just been my advocate and just said, listen, Heather, you deserve this opportunity, and have propelled me in organizations. And I think finding that mentor, finding the confidence, and then just really digging heel and having that tenacity and knowing that this is the path that you want. There's also, when you work in STEM, it's a changing landscape all the time. So you have to be a student and a learner. So, what was here yesterday is different today in technology and in engineering and in data science. So you have to be a student always. And, and for me in my own career, what started out as a chief data officer of data governance and data standards, and now, 18 years later, I'm in artificial intelligence. And that evolving yourself is really important to continue to stay, really at the forefront in this technology landscape.
I love that. Thank you so much for your advice. And bringing it back to Clara Analytics for a final question, what are some short and long-term goals for the company?
Sure. So, right now when we think about, Clara has the beneficiary of, listen, we're saving, anywhere from 5 million to, 50 million multiple for a carrier. We're helping that adjuster, whether it's a new adjuster who thinks of, listen, I want my Alexa, my Siri, I'm a STEM extension. So give me my Clara, or someone that's been an adjuster for 20, 30 years, give me my Clara to augment, my human intelligence on this case. Or we think about the injured worker. Right now, we focus on workers' comp, but we're also going into commercial auto, Jordan, because there's a lot of propensity for litigation in there, and our artificial intelligence can again help the case, help the adjuster, and help the carrier. So we're really on a good trajectory of growth right now, and I'm looking forward to going into our next product line.
Amazing. I can't wait to see what you guys do. Do you have anything else to add? Anything you want to tell us more about Clara?
No, I would just say that we have a lot going on with our artificial intelligence. It's a very unique offering that we have. A lot of times people don't think about artificial intelligence of really helping someone when it comes to claims. And so that's really at the end of the day where there is a lot of costs in the carrier. And so when we think about how do we help that injured worker, that's where we think about compassionate care. And we think there's also a social responsibility around that. There's safety in the employer environment, but there's also how do we take this injured worker and get them back to health for their family and for the employer. And so we think that's a social responsibility to help make that happen.
Awesome. And it's bringing COVID into it. Have you seen a change in the business or not really?
Well, there was a spike, obviously, in those cases with COVID. Also, folks did have, they pushed out maybe some of their procedures that originally were, scheduled just because of COVID. But I'd say now, if you think about what's happening in the supply chain, right, and also with logistics, there's a lot of overtime. There's a lot of hiring of workers that may not have that skill set. There's also the gig economy, people on 1099s, and so all of that can cause the opportunity for accidents to happen. And so, when it does happen, we want to make sure we help the employer know the trends and the patterns, but then help the carrier to find the right physician and help the adjuster to make sure that case actually gets taken care of exactly as it needs to in the most optimal path. And that's where our artificial intelligence really does help that adjuster and that injured worker, because we are dealing with, this, supply chain and logistics, interesting time. And the workers really we need to help them and make sure they get back to a good place of health.
Yeah, the supply chain is interesting. So has that impacted the business or not so much?
It has, because, as I said, we are seeing a lot of these injured workers in the environments. And so what we like to make sure we do is we have one of the largest claims databases. Our clients contribute to the database, and so we're the custodians of it. And so we help them with trending and help them understand the patterns of maybe, where those accidents are happening and what is the risk of the claims that are happening in their environment, so that we can also, think about prevention going forward. We also think about, how do we look at getting that worker back to a good place of whether they need physical therapy, whether they need additional treatment, and making sure they get back to that health. So I think that, yes, post, this pandemic, because of the supply chain issues, we are seeing a big effect as it comes to workers' compensation and also commercial auto, and it comes to that trucking industry and the trucking carrier. So again, Clara is there to help the worker, help the adjuster, and make sure that, we're efficiency, cost containment, and get that worker back to health.
Heather, really appreciate all your insight here and being with us today at the FinTech Awards. I will kick it back over to Luke. I hope you have a great day.
Thanks, Jordan.
Thank you, Heather.
All right. Luke, I feel like I look blurry. Am I in focus here?
You're always in focus to me, Jason.
Okay, but
I hope we are for our viewers as well.
Are we?
All right, we're getting a nod. We're getting a thumbs up from producer Rohan here.
Because Jordan looked very in focus. I don't know about me. I gotta lose weight here. Okay, so hopefully we're in focus. If we're in focus, press 1. If we're not, press 2. If you're tuning in right now to the Benzinga Fintech Awards, you got to see Luke Jacoby introduce the Benzinga Fintech Awards. Sometimes you've seen me, but Luke Jacoby, he introduced us today. We know why? Because Luke started here 10 years ago as an intern from the University of Michigan. And it's his 10-year anniversary. I said, you should introduce the FinTech Awards. And that's what he did today. We have an exciting day planned. Many award winners, many awesome panels. I don't want to bloviate, that's our vocab word of the day, too much, because I want to get to the panels, but I also want to get to the different award winners. We're very excited to announce them. And we have producer Rohan here. So producer Rohan, I need to know what slide you're going to have up right now. Is the slide going up? Because I have the award for Best Investment Research Tools. I saw it go up, producer Rohan, then you took it off for Best Investment Research Tech. Okay. All right. There we go. I'm going to keep skipping. And the set is in third place is Schaefer's Investment Research. Second place is Innovestor. And then the winner of the Best Investment Research Tech at the Benzinga Fintech Awards, if you want to check the site out, go to fintechawards.com, is Market Chameleon. Woo! Rohan, give me the bells. Let's go. Give me the snaps, Rohan. No, louder. There. All right, here's my main man, Luke. What do you think about that one, Luke?
That was a good one. Market Chameleon. They've been building for quite a while.
Yes, they have, and they're a passionate bunch. Passionate bunch. All right, Luke's going to take the next award.
All right, guys. Second award, and again, this is the Grammys for our space, right? This is where we're really celebrating and recognizing who's been building, who has been driving this space. The second category we are going to be announcing today at the Benzinga Global Fintech Awards is Best Trading Technology. Best Trading Technology. We had a lot of people apply for this category. In third place, drum roll. You can make a little drum roll while you're at home watching, on your lap. Third place, Flow Trade. In second place, Iris Social Stock App. And the winner of Best Trading Technology, 6th annual Benzinga Global Fintech Awards is TrendSpider. Round of applause for TrendSpider, everyone.
So, Luke. All right, that was exciting. Trend Spiders out of Chicago, Illinois, as I recall. Okay, we are moving right along. We don't want to bore you, and that's why we want to dance. We want to be lively. If you want to get more information on the awards and you're listening to, go to fintechawards.com, and then also follow us on Twitter, twitter.com/Benzinga. So moving right along, we are going to the best Canadian brokerage. Ready, Rohan? Yes, he is. All right. The third place is, are you guys ready? Fundmore.ai. Okay. Number two, a Tamaqua camper is a CEO, but the second place winner goes to, they just raised a big round of financing. Wealthsimple. And the winner of the best Canadian brokerage at the Benzinga Global Fintech Awards has a nice person there named Purnell. And the winner is Questrade. You guys, you got to remember why we're here. This is the Grammys. This is the Oscars of fintech. There are others that try to copy. Obviously, no one has fintechawards.com. We started this. We are the originators. But why are we doing this? It's to honor the hard work, the blood, sweat, and tears. Maybe it's not blood, but the sweat and tears that your team members put in on a daily basis. What credit do you get? Yes, you build a tool that helps people save money, make money, balance stuff, just makes people's lives easier. What credit do you get? Listen, Tom Hanks stars in a movie. He gets Oscars. He gets all these awards. What credit do you get? So we started the Fintech Awards to honor you. So take this, celebrate today, have a glass champagne. Rohan, will you send every winner and finalist some champagne to their office today, Rohan? You know what DoorDash is? Okay. If you can't get a hold of me to do it, call producer Rohan. I'll get his number on the screen shortly. All right. So we're going right now to the best brokerage for Forex. That's currency. All right. In number 3, CMC Markets. Ding, 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 ding. In number 2, IG US. IG has been on the acquisition, Tasty Trade, Tom Sosnoff, Christy Ross, very good friends. And the winner is Forex.com. I think we should keep the music on when we're doing the awards.
And we actually have Dipesh from Forex.com here. We're in a suit today. I don't want to, throw you under the bus, Dipesh, but I've talked to you on Zooms before. Maybe not a thing you wear a suit, but you dressed up for the Global Award. You have a few words to say.
I just want to say on behalf of StoneX Group and Forex.com, massive thanks to you guys, Benzinga, and obviously congratulations to yourself on the 10 years.
Thank you, Luke. He's congratulating you.
I appreciate it, Dipesh. 10 years in side by side with Forex.com, so we appreciate it.
You guys have grown to a pretty large company. What's next for Forex.com?
Still continued growth. There's still more coming over the next year. So keep an eye out. Keep following us. Keep trading with us. You see, there's plenty more coming.
All right. Well, congrats to you. We know there's a lot of hard work, and what we see takes a lot of hard work, a lot of stress. So congrats.
Thank you very much.
Okay, Luke.
All right, guys. Without further ado, we are going to keep the content clipping for everybody who's just joining us again. This is our day to celebrate the brokerage space, to celebrate everything that's been brought forward for the individual investor. The day is going to be filled with additional awards like we had now. We're going to have a couple more award segments throughout the day. We're going to hear from thought leaders. We're going to see demos. We're going to see the next generation of brokerage tools coming out. And right now, I want to pass it over to Benzinga editor Justin Roberti, who's going to be leading us in a panel on crypto regulation and what that means for the individual investor.
Justin, where's your tuxedo? Like Luke.
I didn't realize it was that kind of affair. If you'd let me, I could have gotten one.
Yeah, we'll go with the rental over there. Luke ended up buying his rental. What do you think about that?
Did you? Well, it's worth it if you're going to do a bunch of these shows. Yeah.
Yeah, we're going to do a bunch of awards. Every industry. We're taking over the movies. We're taking over the music. We're taking over the scientific awards. We're going to do a bunch of them, Justin. Great idea.
Maybe he has red carpet events planned. Where's your tuxedo, sir? You're the MC.
Justin, it's a funny story. I have a tuxedo here. I think I brought the one when I was 15 years old. I brought the wrong tuxedo. I will put the jacket on for the next segment because I do have the jacket. It's a little small, but it works. The pants, I didn't know what happened. I almost like stapled them together.
That is the thing about jackets. I find the same thing. All of my jackets shrink. So, if I have a coat from 20 years ago, I can't wear it anymore for some reason. I don't know what's happened.
All right, Justin. Good luck. Have fun.
Thank you.
All right.
Hey guys. So we want to keep the momentum going in a positive way. So we're going to be talking about regulatory structure, the two words that get everyone in the crypto world as positively hyped as we possibly can be. So we have a pretty killer panel joining us in just a few minutes. Thank you so much, everyone, for joining us today. I hope that everyone's having a good time. Everybody want to drop a GM into the chat. That seems to be a thing these days for everyone in the NFT space. And oh boy, that's an active space for us right now. But thank you so much for joining us. I just wondering if we're going to have. Yes, there's David. Okay, we've got Steve too. Good, everyone's here. Earlier today, PennDOT parked outside my house, and I lost all my internet connection. So maybe that's PennDOT trying to repress our, make sure that this information is not shared, I suppose. Anyway, I'm going to introduce. We've got Steve Ehrlich, CEO of Voyager. Good morning, Steve.
Morning. Thanks for having me here.
Stephen Ehrlich, I should say. Do you prefer
No,
Steve?
you can call me Steve. Call me Steve. Okay. Only my mom, calls me Stephen, which is, you know that old joke.
So I'll say
that's a lot, actually. That means she's mad at me a lot, which is true.
I'll save that in case I'm admonishing you. I'll save it for that. We've got Ben Samaru, CEO from WonderFi. Hello, Ben.
Hey, how's it going? Good to be here.
Good to have you. And we've got David Packham, CEO of Chintai.
Hey there, guys. Good to meet you all.
So thanks so much for joining us, everyone. As we know, an eventful time from a regulatory perspective is a happy time for so many people in crypto. I remember, honestly, I'd have to say that regulation maybe seems to make people less angry than it did in 2017, just by way of comparison. But it's still a bit of a necessary evil, it seems, from most people's perspectives. So recently, of course, about a month ago, SEC sort of followed through on what they've been indicating for a while, which is the further regulation of stable coins and of fractional sales as commodities. And recently, the IRS chimed in to talk about apparently making it so the purchasing of NFTs that exceed $10,000 in value, they now treat that as cash. So if you don't declare that as a taxable event, you could, within 6 weeks, you could be found in violation. I have a feeling that these are two pieces of news that are going to bum out a lot of people, especially the last one, which just dropped on Friday. Stephen, what do you think's going on right now? Is this just the U.S. trying to wrap its arms around this thing that's already gotten wildly ahead of them?
Look, I think and we believe at Voyager that thoughtful regulation is actually going to expedite this market. But that said, I think that some of the things that have come out in the past week, nobody's surprised by the infrastructure bill and what happened and how that got signed into law on Friday. There was a tremendous amount of lobbying going on by participants in the industry, either individually as companies or through the Blockchain Association, where we're a participant of, to try to change some of those rules, because it could have a materially negative effect on DeFi and some of the other areas and NFTs. But I think that rules there now, it now has to go to the implementation phase and some guidance on implementation. So I think there's still a lot of legs left for things to change on that, how they're going to do it. A lot of DeFi will not be able to comply with this. You know, think about it from, you know, a DeFi world where I'm selling you something and you're paying me for that. Who's going to report that transaction under the infrastructure bill? That's a tricky situation. So there needs a lot of guidance from the regulators and the IRS on that. So I still think we have a lot of legs to go. It clearly doesn't seem to have affected the prices in the market. We're seeing a continued bull run, Bitcoin over 68,000. We're seeing this run. So I think there's a lot of things to play out still over time.
But Ben, I would take this question over to you. Do you think that it will have an impact in the market? And if nothing else, as they get a more restrictive framework in place, certainly there are some players, certainly over the past 5 years, who would have just been non-starters in terms of projects if they had to enter this kind of regulatory framework. Are we going to end up with consolidation and less innovation in this space as regulation continues?
I'm with Steven. Regulation's part of the process here. And I think for people that have been in the crypto space for a number of years, will know that every year or more frequently than that, there's new regulations or proposed regulations that come out that spook everybody. And in some cases they get implemented, and then that does stifle innovation. And in some cases they do get adjusted in that implementation phase that Steven talked about. So I think the key thing is that regulation can stifle innovation if it's too overreaching and it's too broad. And that's the risk that we run with something like crypto and DeFi right now, where we see what the applications are. They're really broad. They're super exciting. But they're also changing all of the time. And so I think it's the challenge that regulators face is, one, they have limited resources, and the technology talent that wants to work on this stuff is not going to work for regulators. They're going to work for companies like, Chintai, Voyager, WonderFi, et cetera, that are building in the space. And so even kind of grasping where the technology is at and where it's heading, that's a big challenge. There's a big resource constraint for regulators. And so I think that's contributing to the way that some regulators will look at the space and looking at it at a point in time saying, okay, this is what's happening. This is how we need to regulate it. But really what needs to happen is there needs to be regulation that is a bit more forward looking to be able to accommodate some of the innovation that happens. So it'll be interesting to see how it pans out. I think we're seeing different approaches across the world. The US obviously has been making headlines most recently, but a number of different things I think that need to happen for this to get to a stage where it's meaningful regulation that still helps the industry to grow.
Well, and clearly, the government has trouble handling any issue that, like, frankly, they have where there's a steep enough learning curve that they have trouble understanding the subject matter. I mean, and if you listen to the Senate hearings about it, it's clear that there are varying levels of understanding of what they're talking about. It does get to be fairly complicated stuff. Most of the people, on these boards are usually lawyers by trade. Not economists, they don't necessarily have a background in this. David, how do we address? I mean, like, obviously they've made some efforts to partner with some major names in the crypto space and the blockchain space, but how do we bridge that gap where they potentially don't understand this new class of instruments that they're regulating?
Yeah, and I think you're completely have hit home with the fundamental underlying point here, which is that they are trying to regulate things they don't necessarily fully understand. And actually, I would go so far as to say nobody fully understands them yet, because we're still in the infancy of digital assets generally. It's a new asset class. The last
last new asset class that appeared was in the early 80s in the form of derivatives. So it's really a once in a generation max type event to get a new asset class. And if you just generally look at what that means in practical terms, just take a step back and look at the DeFi landscape as it was 2.5, 3 years ago. I recall, for example, when Shintai deployed a first token leasing exchange for token utility back in early 2018, DeFi wasn't even a concept. It was not even a phrase that existed back then. And now look at the size of it, look at the level of innovation that's continuously rolling out, and really people are experimenting rapidly. And with that comes continuous changes in the nature of the digital assets being deployed out as well. They are configurable, highly programmable, and from that, you could argue that you get a completely different underlying asset class with different properties from maybe one that existed 6 months prior. So it's that level of nuance that makes it very, very hard for regulators to just take a strict set of rules and say, well, it's this, and therefore we're going to treat it like that. I think what we're actually going to see by way of how this plays out personally, and I'm sort of speaking somewhat from our own strategy here, is that we have an entity that's very focused out of Singapore with regards to getting full licensing and be able to handle the clear-cut use cases such as security tokens, real estate, that kind of thing, commodities. And they'll be regulated very much along a set of frameworks and structures that can be handled that way. But the problem there is we have a lot of clients coming in who are very, very innovative, and they don't want to be constrained by those types of things. They want to issue utility tokens. They want to effectively pioneer and innovate and disrupt industries. And so they are going to need to operate out of a jurisdiction that's not so constraining. So I think generally what we're actually going to see is a global competition forming for DeFi business or digital asset business generally, where you'll see a range of different regulatory landscapes that go from very, very strict and restrictive through to completely open in a variety of ways. And they'll have the strengths and weaknesses. And I think really then companies will pick and choose, because if you look at this entire space, we're global. We're a global community. We're distributed all over the world. And therefore, people do have those degree of options to some extent. And I think that's probably, to answer your question, how this is going to play out. And what will end up happening then is that you'll see certain jurisdictions slowly losing their competitiveness and needing to maybe re-examine their rules until they find something that is broadly competitive. And if you look at financial centers globally, that's exactly what happens ongoing anyway. You'll see certain ones thrive, and you'll see other ones start to maybe wane, and then they'll have to adjust their rules to compete. And I think that's what we're going to see.
I know that you just spoke at a show that's going on in Singapore right now, and that Shintai has opened up its base of operations in Singapore as well. Singapore has somewhat lagged behind for the past few years. But how much of an opportunity do you think there is for, the U.S. can easily get pretty complacent in its position of primacy and tech space, with a few challengers, in different spaces, China to a degree, India to a degree, at different times about different things. Do you think it's possible, actually, I don't know necessarily right now that the U.S. is the best place to be starting a blockchain business. Are we going to lose that innovative edge? It's who's coming for us and doing it better than we're doing it right now?
Well, that's an interesting one. I think the innovative side, if you look globally, some of the most innovative entrepreneurial individuals in the space are American. But a lot of them, of course, are choosing to locate offshore, elsewhere in other countries. And that's been largely due to the environment domestically related to that. I think what's interesting is the US, as usual, is a conundrum. It's complicated and different from everywhere else. So there are some really good places within the US now that are passing different types of sets of rules. And this is why we're looking at Austin and Miami as good crypto hubs. And you've got New York starting to at least talk about trying to be competitive and attract the businesses there. So I don't think it's so much about the US necessarily not being able to be innovative and competitive at a local level within the country itself. But I think if you look at it from a countrywide level, there's definitely power structures at the top who are not comfortable with crypto in general and DeFi and so on. And until you see a point where the regulators themselves produce a cohesive set of frameworks that kind of are more comparable with what we've seen come out of Singapore and, say, the UK, where they actually differentiate between a security token and a utility token. That's a kind of big fundamental thing they need to be able to do. Then yeah, ultimately, I think you will see the US certainly not achieving the potential it should, which is that it ought to be absolutely dominating in one sense right now. And instead, I think it'll just be a major player until such times it really decides at a higher level to actually go all in, as it were.
Yeah, there's been a lot of mention of DeFi. I know, for example, that any NFT projects that are offering tokens to incentivize their bases and then payouts on those tokens are finding that they have to backtrack very quickly. Ben, what is it about DeFi that's attracting such scrutiny? Is it simply the newness? Is it it seems like a whole phenomenon that you've got people of a completely different socioeconomic strata talking about passive wealth in a way that they never have before. What is it that's making regulators want to kind of clamp down on that?
Well, it's bank accounts without a bank, and I think that's really what's drawing in people into DeFi. Well, globally, I think North America, Europe, it's people that are chasing yield. So it depends on where in the world you're located for what the reason is that you're really interested in the space. So I think just at a very high level, when you look at it like that, it's banking services without a bank. You can see why the regulators are so focused on it. And so I think where we hope things go, and I think I can probably say this on behalf of everybody on the panel, where we hope things go is that the regulators can get to the stage and understand, appreciate how there is a role for technology in regulation. And so especially within DeFi, when you have smart contracts that are carrying out a lot of the functionality that your centralized party would in the traditional setting, there's a really good case for having higher scrutiny and reporting, et cetera, around that smart contract, what it's doing, how it's audited, et cetera. And so not to say that would be the sole mechanism for regulation within DeFi, but it really is this acceptance and understanding that we're shifting from a world where you have a bank with hundreds of people that are going through the process to onboard somebody, help them through conducting a transaction, and help them through reporting and everything after that transaction, to something where technology is doing almost all of that. So I think we'll see. What I hope is we do see a middle ground where there's more focus on that technology component, and I do think there's a lot of burden that's on the regulators for really looking at it from that perspective, understanding that, and then there is the importance of collaborating with people that are in industry to help sort of see those trends. And then this goes back to what you and David were talking about. There is a need for collaboration between regulators as well, and we've seen some efforts there, but at least from my line of sight, there hasn't been anything that's really meaningful. Even within Canada, which is where I'm located, we have provincial regulators, many different provinces, and they do collaborate, but it takes a long time. So you can imagine Canada and the US, or Canada and the UK, or the US and Japan, et cetera. It takes a lot to get to that stage.
Canada has some interesting things going on, trying to encourage growth in areas like Alberta, where traditional energy has sort of failed them over the past few years. The industry has failed, and businesses that have literally pivoted over to mining from traditional energy. So hopefully there are some positive policies that are helping to stimulate that growth, or I would assume that there are.
Yeah, there's definitely a lot of incentives in place, and that's really driving. It's all about driving talent and talent to those centers. So we're definitely seeing, outside of crypto as well, major technology companies that are coming into places like Alberta and British Columbia, which is where Vancouver's located. So that's really good to see. I don't necessarily think that's happening at a regulatory level at this. I can tell you it's not, but for sure at the technology level, which is part of the whole puzzle. It's not regulation's not standalone. It does involve a number of different segments.
Right. So Steve, what will it take to restore order to all of this? I mean, if I am a blockchain developing or blockchain concern, looking to come to market with the next brilliant idea, how do we go about reassuring ourselves that we can operate? Because really, it's not just a puzzle domestically, of course, it's a puzzle globally. I don't think I've ever spoken to a single blockchain concern that was only targeting one country. I mean, I'm sure I could think of an example if I think hard enough. So, like how do you piece together this incredibly dispersed and nuanced situation that we're living in?
Yeah, with a lot of time, a lot of effort, a lot of struggle. I mean, I think it's symbolic of the change that is happening. And it is change. We're effectuating change in everything that happens through blockchain and through distributed ledger technology. Everything is changing, but the rules have to catch up. And I think it is very difficult when you bring a project to market, or you're working on a project, working with different frameworks and different jurisdictions, and you just have to be mindful of it. I think anyone who brings a project to market is mindful of regulation today, how it sits in the US versus what it sits in the EU versus what it sits in Singapore or Canada. And Ben brings up a really good point. The Canadian regulation itself, just to offer kind of brokerage services or exchange services in Canada, is considered a broker-dealer activity. And not only is there, provincial rules, every different province has their rules, but to get a license from the Ontario Securities Commission, you have to become a broker-dealer to offer crypto. And they give out very few of those as well. They've been very slow in that process, and they're evaluating every company. So you have to be mindful of that. So I think the old school way in fintech was, move fast and break things. You got to kind of move fast and break things, but at the same time, the regulation isn't keeping up with us. So you've got to be mindful of that. And I don't think anyone should ever stop their projects they're on, but just be mindful of how you're going to launch and how you're going to, is it going to be this country that, how you're going to do it. It takes a lot of lawyers, a lot of conversations to make sure you understand that, but that's not going to change anytime in the next few years. So it's bringing innovation to the market still needs to happen and will continue to happen. You just have to be mindful of it.
And it's definitely a cost of entry kind of thing. I mean, you can't, you need to have your technology in line, you need to have your concept, your tokenomics, and your regulatory compliance. You're kind of a non-starter without any of those things. It's like putting it together. Well, David, I know that you that your platform aims to manage regulatory compliance on a global scale, and that's a huge picture. Wow. So would you have any tips for us in terms of managing compliance with an eye in the future? I think we lost David. Okay. Well, all right. I'll take that back to you, Ben, because David's gone momentarily. Hopefully he'll come back.
I mean, to be fair, that's a really hard question to ask, so I would probably leave as well.
I figured it's kind of, I do ask a couple of sticky questions. I ask questions I know are going to be hard. But
you said something about compliance, so I ran away, obviously.
I don't blame you.
You hit the escape hatch. David, you just hit the escape hatch. You're like, I don't feel like answering.
Yeah, exactly. I'm Homer Simpson going back through the hedge at that moment. It's like, must we talk about that? Yeah.
How can you look at this?
Sorry about that internet connection issue.
How can you look at this from a global perspective? It's such a complicated puzzle.
It is, and apologies if my internet isn't too good for you guys. Broadly, yeah, it's a very, very complicated minefield for anybody who wants to actually carry out any form of issuance or market operation of digital assets with any kind of asset, even a utility token, because in some regimes like the US, for example, they treat them much more like a security. And so the broad problem, therefore, is as well that there's no standardization amongst the regulators. Globally, they all operate completely independently almost. And even just the way they publish their rules out is non-standard as well. Some of them do it in a more structured format with data. Others just publish them as PDFs whenever they feel like it on a website, if you have to search through. So it is very complicated. And I personally think, therefore, there is a need for compliance services for digital assets that can help automate that process and enforce it on chains. And that's one of the things that we've been really focused on building out. So it does mean, if you look at what that requires, building a fairly sophisticated rules engine that can actually enforce it on a permission chain. It can still interface with DeFi, but operate in those senses. But in practical terms, what does it mean? It means you have to carry out a global regulatory rules mapping and then maintain that as live data. That's not a small undertaking, and it's certainly not something beyond in the reach of the average issuer who just wants to get on and do something related to their own business. So yeah, I think, as with all these things, where you get something that sounds quite onerous, actually it typically provides an opportunity for businesses to come in and fill that with a service. So I think we'll see multiple compliance solutions starting to come out in this space.
Well, you make an interesting point. Then, in a sense, obviously, a way to manage this would be to manage this, through rules applied on chains themselves, which causes it to be a question of interoperability in some ways, as well as interoperability cross jurisdiction in terms of people getting along with the rules, but also cross chain interoperability if you're looking to have on chain compliance management. Which certainly,
well, totally.
Yeah, go ahead.
So a good example of that broadly is that, if you're operating, you go through all the hassle of going through compliance and doing it the right way, you can't really just send it off to a public blockchain where anything can happen. But you would definitely be able to connect, say, to another chain that has a compliant solution that's broadly comparable, because then you could migrate across and or dual list and do all sorts of things. So I think we're probably therefore going to see a variety of these compliance solutions come into play, and it will just enable these types of assets to operate effectively alongside the completely unregulated DeFi space, at least in the interim.
Mm-hmm. So we just have a few more minutes left. Going back to you, Ben, because David changed the order by dropping off there. Going back to you, Ben. What advice, if I were launching a blockchain concern right now, this would be a big deal in my mind. This would be the cause of a lot of anxiety. What advice do you have for new people looking to bring, the next big idea into the blockchain space?
Steve said earlier, it's not a cause to not launch a project. So I would start there for sure, because I think there's a lot of new talent coming into the space. And so for people that haven't been involved in crypto or DeFi before, you look at the regulatory landscape and you probably think, oh shit. But I think that's probably the most important part, is I would say, don't let it discourage you from getting into the space, from starting to build. And then the second piece of advice I would give is, it's great to have conversations with people that are also building in the space. So I think it's operating in a silo is probably not the best way to go when you're a startup and new in the space. I think there's a lot you can learn from having conversations with people that have gone through that journey before or are on the same journey. And then, third piece would be hire good lawyers.
Just as a cost of doing business. I don't know though, Steve. Is it not a reason to consider I'm playing devil's advocate here. I'm not trying to tell people not to launch. However, I will point out, particularly in cases of NFTs, we've had a couple of instances of Sports Star goes ahead and takes their best moments, creates some NFTs, get shut down by the SEC for being an unlicensed vendor of securities, selling an unlicensed security. It's already happened a couple of times. So there can be drawbacks, of course, to blundering into the space, I guess.
Yeah, look, I think, but Ben hit on it, is first and foremost, have an idea, speak to others in the industry, speak to others who've built stuff. There's always structures. There's lawyers come in. I know it's kind of like the dirty word, right? We hate to say, hey, let's go to the lawyers because we know it costs something. But at the same token, it helps get you structured right and make sure that you're abiding by rules. And as David and Ben also said here, is that there is no set. I mean, everything in this the rulemaking here it's gray. It's not black or white. So it's interpretive because there are no set rules yet. So interpretive means you've got to go find lawyers and work with lawyers to make sure the interpretations of what you're doing is appropriate. So it sets the ground, the ground rules, and sets where you're going to start on how you're going to take on a project. And then you move from there. But I think that's always the beginning, is what I'm trying to do. How does it fit into the regulatory framework? Let's get some work on that done. It's almost like part of a business plan when you're putting together. It's very core. Here's what I want to try to accomplish from a business, but is it regulatory compliant in a jurisdiction or multiple jurisdictions? And you could choose one place and work from there. But that's where it has to start. When we started, same thing. We went through and learned pretty quickly about how you have to get state licensing when we thought we can start with just doing a broker dealer. And that didn't work. Broker dealers don't, in the US, you can't put cryptocurrency in broker dealers because there are no rules and regulations yet. There are nothing in the regular FINRA regs that talk about customer protection rules when it comes to digital assets and custody. So those, we had to switch directions, and that's where you always have to start. It's the regulation's coming. It's just going to take more time, and everyone's got to be careful and pragmatic about how they make those decisions.
Excellent. So, David, what advice do you have for new ventures looking to enter the space? Why? Whether it's DeFi, blockchain.
I think broadly, echoing what Ben said, actually, I mean, broadly, nobody can let the potential risks related to, or the uncertainties related to the regulatory side, deter them from doing. And broadly, if you look at just generally history with anything that's disruptive in the technical space, I mean, even if you just look in the existing established major players right now in the crypto space, like Coinbase, for example, and others, they didn't go in and start operating in some sort of defined regulatory environment without a lot of uncertainty. And the reason they've reached where they have is by focusing on execution, but also by virtue of being in a particular area relatively early, and therefore be able to capitalize on those changes as they've grown out. And so the same should really apply for anybody looking to do something now. Don't worry unduly. If you always are able to say that you've been trying to do things the right way and you've taken appropriate steps along those ways, then I think broadly anybody will be able to work through such a path. And regulators also, it's easy to demonize them, but actually, if you spend time talking to the individuals within them, that they're very much focused on generally consumer protection as their top number one thing, which is where they had such an issue with the ICO boom, because we saw that being abused with no regulations in place. And so broadly, I think we have to just remember that this is very much going to be an ongoing partnership where we can help shape their thinking. And so broadly, anybody looking to get into this space, the top advice to them for sure is to formulate out a well thought through plan, get involved in one or more community projects and learn and form a network within the space and pull together a really high quality team and definitely get a good lawyer as well.
Right. Since I started out the panel by bumming everybody out, the audience, talking about the regulatory movements that have happened lately. Ben, any encouraging signs in terms of people who, the new head of the SEC? There's been some buzz that she understands crypto is a little more crypto friendly. Is there any encouraging signs in terms of projects out there, people innovating? Leave us with some hope. We've got 2 minutes left.
I'll just say, talking about regulation doesn't just bum out viewers; it bums us out as well. But I would say there's a lot of encouraging things, and not getting into specifics, but I would say as you get more, so regulation evolves as the industry evolves, and so that means more adoption. That means more attention from the regulators, and to a point that somebody made very early on. Regulation is part of this. It's been part of the ecosystem for 5, 6, 7 years. And so I think the encouraging thing is just the level of growth that we're seeing in crypto and in DeFi. More and more newcomers into the space, more and more transaction volume going through DeFi. It's really growing at an incredible pace, and more institutional adoption, and the way that participants are looking at the space is it's getting more involved. And so I think that's really encouraging from a very broad perspective.
Hey, Justin, I'd like to throw one quick thing before you close up.
Okay.
20 plus years in the equity markets, and the equity markets went through the same thing. I mean, if everyone thinks the equity markets were this efficient 40 years ago, 20 years ago, they don't understand the history of the capital markets. There was 1975 is when all of a sudden commission pricing went in, variable commission pricing. Was fixed commissions before that. Day trading rules of the early 2000s. People thought the SEC was going to eliminate day trading, but they put in the pattern date. This is just the evolution of an industry. And you can look at the comparables to the history of the traditional capital markets and see how it got there. We're just early here, and we're all working within that framework, but it doesn't scare me. It actually excites. It should excite investors and excite customers, because you're on the forefront of something new and exciting that could create tremendous wealth for people. So it's not terrifying. It's super exciting, because that's what all three of us are doing, is trying to help consumers and build the future. And that's what we get up in the morning to all do. And to me, I wouldn't want it any other way.
Well, that is a great sentiment to end on. Thank you so much, David, Steve, and Ben. It's always a pleasure to put together smart panels like this and just be able to ask questions while you guys do all of the heavy lifting in terms of cogitation. Thank you so much for sharing your thoughts on this today.
Thanks.
Thank you.
All right, guys. How about that panel? So we just went crypto. Now we're going to bring it back to the equity side of things. And if you are just joining us again, this is the 6th annual Benzinga Global Fintech Awards. We are here celebrating all the innovation that's happened in capital markets. I mean, Steve on the last panel, he was talking about changes in the equity markets from 20 years ago, 40 years ago. I mean, even in the 6 years that we've been doing this, there have been radical changes in how folks have interacted with equity markets. You think about commissions, you think about account minimums, you think about accessibility of information. I mean, it's been drastic. And so what I'm going to do is I am going to get off of the stage here. I'm going to bring on our next set of speakers. It's going to be Dan Carlin and John Ferrara from TradeZero, and they are going to give us a little sneak peek as to what they've been up to over at TradeZero. Guys, I will let you take it away.
Thanks a lot, Luke. Appreciate the introduction. My name is Dan Carlin. I'm the Vice President of Product and Marketing at TradeZero. Excited to be here at the Benzinga Fintech Awards, where TradeZero has been nominated for the 2nd year in a row for Best Broker for Short Selling. We hope we win. We hope to repeat. I'm joined today by John Ferrara, one of our co-founders, and we'll be hearing later on from Dan Pipitone, another co-founder and our CEO. And what we thought we would do today is really first start off by saying, what are we up to over here at TradeZero? Our goal here is to build the platform to optimally serve the global active trader community, right? And what that means is all the tools that you need to be able to, as a trader, execute your strategy, mitigate your risk, and make sure that you can trade the way that you want to trade day in and day out. And so let me introduce John Ferrara, who has been here since the beginning. Great to have you here with us today, John. First question for you, what are some things that active traders need to be successful?
Dan, thanks for the introduction. That's a great question. Very happy to be here today. I wanted to discuss 4 general things active traders need, 2 of which I'll quickly touch on, and 2 that I want to go into a little bit more extensively today. The first, active traders need a trading platform that encompasses all of their needs. Traders have different levels of experience. TradeZero has built a variety of platforms that suit those different levels. And what that means is desktop, that means Mac, that means PC, it means a free entry level version, and it also means a pro version like our Zero Pro that's designed for professionals that are doing this day in and day out in the market. The second thing that I wanted to discuss and that traders really need is access from wherever they are, and that means international access. In many cases, TradeZero provides access to trade US stocks and options from over 100 plus countries and from 53 US states and territories. Two other things that we should probably dive into a little bit deeper today is customer service and innovations around short selling.
Awesome. Yeah, let's take that next step into customer service. My next question for you: why should a trader care about customer service? And then maybe you could build on that and tell us how TradeZero is doing with respect to customer service.
TradeZero and I firmly believe that customers are the center of every business. My partners and I built TradeZero with this in mind. Online trading can have its difficulties, internet issues or computer problems. They can happen. Your access to the online trading world can be cut off at any moment. So my partners and I decided that we should deliver that old school personal customer service, real live, 24/7, 365 days per year support. Getting a live representative on the phone or chatting with a live qualified representative is fast. It usually happens within seconds. Customer support that can help a trader get out of a trade or answering a simple question without having to dig through an entire website. The reality is that active traders, they have money at stake, and our customer service is the backbone for that active trader.
So John, like I said before, how are we doing with this with customer service? What are we looking at here?
Well, let's take a look at this slide we have right here. Almost 2,000 Trustpilot reviews, and we're nearly 5 stars. Now, these are real reviews from real people, real traders, and I'm very proud of the work that we've done in this area.
Awesome. Great. So now maybe we can pivot to the other topic that you wanted to dive into a little bit deeper, which is the innovations that we have around short selling. I know that some folks in the audience, though, may still be unclear on what short selling is. So maybe we could hit that first, and then we could dive a little deeper into what TradeZero is doing around short sellers, or short selling, rather.
Yeah. Well, first, it's important to recognize that many of us have been conditioned to think that as stocks go up and we see green, that we should be happy, and that's how we make money. The opposite case is also true. As we see red and stocks go down, we've been conditioned to think that that's bad and we're going to lose money. But if a trader executes a short strategy, they can make money as stocks are actually declining. And short selling is pretty simple. So when shorting a stock, you want the price to decline. As you can see in this chart we have right here, the ideal price to short this particular stock would have been around $50 or so. And you'd want to close out of that trade by covering around the low point of $20. And in doing so, you capture that spread.
Interesting. So I feel like maybe that is intuitive for some folks, but also might be counterintuitive for others. You know, sort of like in my mind, it's how do you actually make money as price goes down?
Well, this is where the mechanics come into play. The first thing you want to do is you want to locate shares and hello?
We can hear you.
Can you hear me now?
Yep.
Yeah, the first thing you want to do is you want to locate shares and make sure that there's availability with that. And so what you're trying to do is actually short at the high point and then buy back the shares at a lower price. And the first thing is to make sure that we are I'm having just a difficulty here. to make sure that you're buying those shares back at a lower price. And that's how short selling works.
Right. And so what do you think is a pain point, or what have we discovered in our business that short sellers have as a pain point pretty often?
Well, the pain point is usually the locating of the shares.
Right. So can you say a little bit more about that? What does that mean? Do we have?
So usually we have these. I'm sorry about that. So usually we have the Apples of the world, the Microsoft of the world. These stocks are generally easy to borrow, and there's a lot of shares out there, so traders can actually get a hold of those shares quite easily. But not all stocks are like that. Many stocks have low floats and they're not easy to borrow, and that's where the locate comes into play.
Right. So really it's this first step here, this locating or the borrowing of the share, that is the key, which becomes the pain point of the short seller with respect to whether the stock is easy to borrow or not easy to borrow. Is that fair to say?
That's fair to say. Yes, it is, Dan. So
Great.
That's what we do here.
What are we doing over here with locates? Like why is it so critical for us?
So what we do is we're at Trade Zero, what we're doing is we're identifying and sourcing the shares that can be located. And that's what we do very well. So we have a whole team of people that are day in and day out working to make sure that we have ample supply, and that we're finding these hard to issue stocks, so that traders can get involved and have potential profit opportunities that they sometimes can no longer get at other brokerage firms.
Great. So is there anything else that's necessarily different about Trade Zero's access to shorting and locates?
Well, number one, that's a great question. Number one, we give the ability to sell back locates when a trader is done using them for the day. So unlike other brokerage firms where you can find the locate, use it, and short the stock, the locate at Trade Zero, you can sell that back and get a credit for the initial locate price that you used up.
Right. Excellent.
So that's the first thing. We also have, like I said earlier, we have a whole team of people that are working to scour and get us locate and available supply. That's two. Yeah. Mm-hmm.
Do you want to skip to how it works and what it looks like on the user interface?
Let's show the locator window. So what you have here is our locator window. On the right side, you have your watch list, which is where you can see if a stock is easy to borrow or if it's going to need a locate. Stocks that show in green, easy to borrow, and otherwise you would have to locate the stock before shorting. The top left will show your open orders. The open orders for either locating or for pending credits. And the bottom part of the window will show your current inventory of stocks.
Right. So, and this is only for the locate of the share, not the actual trade of the share. So this is if a trader wants to go short and not easy to borrow stock, they get the locate, they can manage all of that inventory in here, they can credit back in here. It's a very sort of end-to-end ecosystem where traders can execute their short strategy. So great overview of all of this stuff. I'm curious, what do we have in store here for the next year?
For that, I'm going to kick it over to one of my long-term friends and co-founders of Trade Zero, Dan Pipitone, who will tell us what we have coming in 2022.
Hey guys, Dan Pipitone here, CEO and co-founder of Trade Zero. Happy to welcome you all to the Benzinga Fintech Awards, where Trade Zero is up for the best broker for short selling. We're hoping to repeat last year's victory to have that title 2 years running. I'm here today to tell you guys about some exciting stuff that we have planned for the fourth quarter at Trade Zero. First and foremost, finally, coming back to Canada. TradeZero Canada is in the works. We hope to be licensed by the end of this year. Secondly, we're imminently launching our crypto offering. We're going to be launching with 20 plus tokens across all 52 states and territories here in the US. We're really excited about that launch. So if you haven't already, you can join our wait list so you can be the first to know upon our crypto launch. Our multi-leg options platform arriving next week. We will be onboarding customers and users onto our multi-leg options platform, giving folks the ability to trade not only single leg buy to open, sell to close, but spreads, strategies, 2, 3, 4 leg option strategies and trades. We're also talking about releasing new routing options for our customers. We've recently become members of the New York Stock Exchange and NASDAQ, as well as the CBOE. This is all an effort to provide our customers and our traders with better market access. So when we're talking about the New York Stock Exchange, they have what's called a retail price improvement plan, which is going to allow our users to put orders in at fractions of a penny for stocks above $1. We became members of ARCA. So through ARCA, we're going to offer folks the ability to interact with the midpoint and route orders to the midpoint at no additional cost. And finally, when we're talking about the New York Stock Exchange, they have something called parity, which up until the New York Stock Exchange came out with this retail attestation program, parity was something only achieved by market makers on the floor of the NYSE. Now, once we launch this feature, our traders, because we're now New York Stock Exchange members, can send orders to buy at the bid and sell at the ask, where for the first time, our customers are going to get filled, not based on the time that they place their order, but will actually receive a pro rata share of all trades done at the bid or all trades done at the offer allocated across New York Stock Exchange members for a good percentage of those orders. So in effect, we'll be offering the ability in certain situations for customers to buy at the bid and sell at the ask. So all of these things are imminently coming to TradeZero. So if you don't have an account with us, we encourage you to join the platform today so that you can realize some of these new and exciting features that we have coming down the pipe. Thank you and enjoy the rest of the show.
Thanks to Dan for making that video for us. And thanks to Benzinga for allowing us some time to talk here at the Benzinga Fintech Awards. We appreciate the time.
Come off. Guys, can you hear me?
Yeah.
All right. Thank you, John. Thank you, Dan. Thanks to other Dan. Guys, TradeZero doing some fantastic stuff in the space. So thank you both for joining us today here at the Benzinga Global Fintech Awards. Let's move right into our next what do you want to call it? Interview, conversation, fireside chat. I don't have a fireplace anywhere, but that's okay. Look, there she is. Melissa Watrous is Director of Product at Trillium Labs, specifically for their Surveyor Trade Surveillance Solution. Melissa, welcome to the Benzinga Global Fintech Awards.
Thank you so much, Spencer. So excited to be here at the awards today, representing Trillium Labs and Surveyor.
So excited to have you. Before we get into the theme of this conversation, which is diversity and how you're making that a focus, just tell us quickly about yourself. I know you spent a long time at Morgan Stanley. Tell us about that and sort of how you ended up here.
Yeah, absolutely. So my name is Melissa Watrous. I am Director of Product here at Surveyor at Trillium Labs. I have 12 years of industry experience. So I started in operations before moving over to compliance. My compliance journey started as a trade surveillance analyst in the United Kingdom before coming back stateside to run strategy and implementation of a global trade surveillance program at Morgan Stanley. So I joined Trillium Labs earlier this year as the Director of Product, and I'm so excited to talk to you more about Surveyor and our mission and how we are leveraging our diversity to disrupt the industry.
So maybe let's talk about Surveyor, because it is a relevant topic, right? Monitoring for market manipulation, right?
Yeah.
Which is what Surveyor does. So tell us about Surveyor.
Absolutely. So I could clearly talk about Surveyor all day. I certainly won't, but Surveyor is Trillium Labs' a RegTech SaaS product that is market and trade surveillance. It's our solution. So, our value proposition is to detect accurately and to display intuitively. So Surveyor can help compliance be more efficient and more valuable because we provide meaningful and reliant data to our user. Essentially, we think that with information comes insight, and with insight comes action. So we want to take our compliance users out of the drudgery of false positives and have them focus on meaningful tasks and add value to their organizations. We're really committed to reducing false positives and eventually eliminating them, which is a huge, pain point in our area. And one of the ways that we do that is that where our competitors are using the top of the order book, we use full depth of order book for our users to provide them with that meaningful information. And, we're really able to build such a robust tool because we're made up of a diverse team, a team who's hungry, a team who wants to take the industry by storm, whereas some of our competitors are resting on their laurels and resting on their names.
Okay, so let's talk about that. The theme of this conversation, 3 ways that diversity is disrupting fintech. It's why we're talking to you specifically. So let's maybe go into one of those ways. You have 3 ways, but start with the first one. What is the first way that, in your view, Trillium's view, that diversity is disrupting RegTech?
Yeah, I mean, even taking a step back. So we want to keep our markets efficient. And for us to keep our markets efficient, we need to keep our marketplaces safe. And for us to keep our marketplaces safe, we need to monitor for those markets. So the best way that organizations can monitor for the markets is by using a tool like Surveyor, who champions diversity. We're built up of a diverse team who has diverse skill sets and diverse thinking, and we're able to deploy solutions really quickly for that reason. One of the ways that we're able to use diversity in our favor is we actually want to change the narrative around compliance itself. So, historically, compliance has been seen as a way to save costs. And what I mean by that is that you're saving against regulatory and exchange fines and sanctions. And that's not what it's about nowadays. It's not about saving money. It's about setting your organization up for success now and in the future by making market gains in a way that is safe, in a way that is scalable, and in a way that is compliant. So that's what Trillium Labs is exactly trying to do. We're trying to meet you where you are by saying we're not here to save you money. We're actually here to make you money. And the way that we're making you money is allowing you to focus on the marketplace and allowing you to focus on your goals, and we'll take care of the trade monitoring for you. You can scale your business without worrying to add, for adding more people to your compliance division, because you'll have such a robust tool in place to monitor for the markets.
Let's go from 1 to 2 then. What is the second way, in addition to the makeup of your workforce, the second way that diversity is disrupting RegTech, which is
absolutely. And if we're going through all of them, why don't we, if you don't mind throwing up the slides on video.
I can do that.
All right. So another way that we're doing this is with intentional design. So we are intentionally designing a product with the compliance officer in mind. So you do not need an engineering degree to understand Surveyor. We're all in our inboxes far more than we care to admit. So we took that look and feel and we developed a tool that looks like an email inbox. When you pick when you select an exception, right in our value proposition to detect accurately and display intuitively is one of our hallmarks, to display information in a way that's going to be valuable to a compliance user. So you have natural language processing in those exceptions so that you have the full understanding of the trade flow right there at your fingertips. You're not going to have to go to different sources to reconstruct this trade. All of the information is going to be right there for you so that you're informed and you have the insight that you need to do to take action in your role. We normalize our customer data for them. We don't expect that of our customers. We take that off their plates so they don't need that intense level of technical expertise. We also train our users. So our users can be trained, how to efficiently use Surveyor within hours. So, front to back, you're looking at an onboarding of 2 weeks, whereas our competitors can take upwards of several months.
And just to hit on that for a second, who are your users?
Okay, so great question. We have upwards of or near 25 users. So we have prop trading houses, we have FCMs, we have anybody who's kind of willing to talk to us. We're willing to give a demo and get them onboarded.
Okay, and while we have the slide up here, let's just go to number 3.
Sure. So this one's near and dear to my heart. So, we deploy empathetic customer service. So I've been in our customers' shoes as a user of some of our competitors. So that means I've had the frustrating task of, having a ticket that I raised closed out without any rationale or resolution. I've had to get managers involved to get a simple answer because I need to get traction from a vendor. That's not what we're about at Trillium Labs. What we are about is we're about partnering with our customers and viewing our customers as partners. I just said we're trying to change the discourse around their function. We're trying to design a tool with them in mind. And the best way to do that is by listening to them. So we want to understand what works really well. We want to understand where there needs fine tuning. And we want to deploy solutions very quickly to address those. And we want to understand their roadmaps. We really want to scale with our customers and provide them the solutions that they need. Ultimately, at the end of the day, we all want to add value to our organizations and feel like a valuable member of this industry. And that's what Trillium Labs is trying to do. And it's simple. We pick up the phone. Some of our customers prefer to text, so we do that. We meet them where they stand.
Trillium Labs is, of course, a gigantic company with a lot of things going on. You're relatively new, as you mentioned. You joined the company in August. What did they tell you? What were you told in that whole process about what the focus on diversity would be?
That's a great question. And I have to say that one of the reasons that I was so excited to be given this opportunity, the opportunity to be a woman lead at such a robust, industry disrupting tool, is that I had the full encouragement and, guidance from senior management to build a diverse team, a team who's hungry and a team who wants to impact the industry in a really positive way. And so I think that that's really the crux of it, is that when you have a diverse team, you have a diverse skill set, you have a diverse, you have diverse thoughts, and you're able to really make meaningful solutions for our customers, and ultimately that's what we're here to do. We want to keep our marketplaces safe, allow our customers to be stewards of the market, and give them the tools that they need.
Yeah. I'm wondering, since you sort of came from one side, you came from the customer side, now you're running a product that you yourself would have used. I'm curious, like, what the biggest transition has been, or maybe not transition, but a sticking point, hurdle that you didn't foresee, that maybe now that you're on the other end, you can sympathize a little bit more.
Oh, that's a great question. So, I think that I'm in a really unique position because I'm serving who I used to be. Right. So that's been really positive, and that's been informing a lot of the direction that we're going in. I think that, one of the sticky points is really, just getting our customers on board with with a name that is growing. So, some of our competitors have been around for a long time, and that's been to their detriment, I think. Because we're diverse and because we want to keep innovating, we're able to build alongside markets and build alongside customers. So, luckily, we are in a growth mode and we are getting our name out there more. And we're really here to say, that Trillium Labs is the industry solution for market and trade surveillance.
When you and I spoke last week, Melissa, you said, and I wrote this down, you said, we're coming for you. I wrote that down in quotes. We're coming for you. Who is you?
I think without naming names, it's our incumbents in the market and trade surveillance space. And when I see that, and thank you for quoting me on that live, but it really is that we want to adjust to the times as they are. We want to build for the industry as it stands and as it and as it evolves in the future. And that's what we're doing right now. So when I say that we're coming for you, I mean that we are going to build the industry leading tool and technology for market and trade surveillance.
Trade surveillance, monitoring for market manipulation, a very relevant topic, obviously this year. What do you say to like the retail side of the market, who maybe you don't necessarily deal with on any given day, but is very interested all of a sudden in like the inner workings and the plumbing of our capital market system here? What do you say to them about all of that?
So, I think the first thing I'll say is that I'm willing to have a conversation with anybody, if you want to talk further around this space. But, yeah, I think you're right. This isn't going anywhere, this type of behavior. And really, because we want to keep our marketplaces efficient, it's, responsibility for all industry participants to know what's going on and to, it's the bad apple versus bad barrel theory. We want to get the bad apples out of the playing field so that we could keep our marketplaces safe, especially as we're democratizing it to looking at things like crypto. Like, we're having more and more interest in this space, more and more players, so let's keep it as safe and as efficient as possible for everyone involved.
And then with regards to Surveyor, because you're the product lead here, what is probably the most in demand, the most used feature, the thing you get asked about the most?
Our customers love our tool. I really do think that with the full depth of order book, that is something that is incredibly appealing to our users. Like I said, they have robust information at their fingertips so that they can do the analysis that they need. I think in terms of the future, like I said, we have this diverse team who's looking to continue to innovate. So we're looking at the crypto space. We're looking to expand coverage further into EMEA and into APAC alongside with our customer roadmaps. And we're also actually looking outside of reg tech. So we're talking to organizations to say, okay, what are your needs? And so, for example, we're building a tool for traders where they can analyze their trading strategies to optimize them and inform them to better make market gains.
You're referring to like entries and exits and knowing your order routing, right? And knowing
exactly. Yeah. So using your trading signals exactly to inform how to best place yourself for those market gains that you're looking for.
Yeah, I think a lot of people don't know about the routing thing, but it's the underlying, it's everything, right? It is our markets, right?
Yeah. Well said.
Yeah. Melissa Watches, Director of Product for the Surveyor product at Trillium Labs. Melissa, a pleasure. Thank you so much for joining us today at the Benzinga Fintech Awards, and keep up the great work. And thank you for making diversity a focus, because we could all probably learn from that.
Absolutely. And I just want to end by saying that if you're an individual who is as committed to diversity and keeping the marketplaces as safe as we are, looking forward to talking to you and having you join our mission to detect accurately and display intuitively. Thank you so much, Spencer, and good luck to all the nominees today.
Thank you so much, Melissa. Hey, it's 11:10 or just about, and I think that means it's time for our next award segment. Jason and Luke, what's up?
What up? Great segment. It was awesome hearing from Melissa. And I don't know, Spencer, do you like Spencer's background of the downtown Detroit City?
Can we get Spencer back on here? He might be picking his nose, but that's all right. Let's put him back on.
Okay.
No, I wasn't.
Look at those
Spencer,
beautiful colors.
Spencer, you were looking great there with the background. Great morning show. I did want you to promo the FinTech Awards a little bit more, but it's okay. Sometimes you do it, but it was a great show. It was a great show. We had, you guys, if you're tuning in today, please tomorrow check out the pre-market prep at 8 a.m. Spencer wakes up early and it's great, and he knows all the market news. Okay, but we're going to move right along, Mr. Spencer Israel, with Luke Jacoby to announce the best brokerage for beginners.
All right, guys. Again, this is the Academy Awards of our space. This is where we're recognizing innovation, the future that is going to be built. We've had so many new entrants over the past several years. First award.
Hey, do we just freeze?
brokerage for beginner category. Again, third-party panel of judges. They dug into these. They went deep. The winner is Robinhood.
All right, we're back. Just so you guys, if you didn't hear, third place was Investor for Best Brokerage for Beginners, and the Benzinga Global Fintech Awards, second place was Public, as judged by third party. Okay, now we're going to move on to Best Paper Trading Platform. If you don't know what that is, paper trading, it's not trading a live account. It is trading a paper account. It is trading, paper. You're not using cash. It's a way for you to practice, learn how to trade. And if you're not a big trader, I would suggest you open a paper trading account. So what we want to do here is honor the winners for that. This is a competitive category, very competitive. And there was multiple ties, and we had to narrow it down to two at the end. And the second place is Tradier. And the first place winner of Best Paper Trading Platform, finally I got a good drum roll, is Interactive Brokers. And we are going to go to, thank you for the claps. And congratulations to Interactive Brokers. Frank from Interactive Brokers, how are you today?
I'm very well. Thank you, Luke, so much for having us on. We, on behalf of our chairman, Thomas Petterfee, our developers and programmers, we want to extend our sincerest thanks for presenting us with this award. And whether you're an institution or an individual, you certainly have access to our paper trading offering, which is right on our website, interactivebrokers.com, and you will have access to 135 markets in 33 countries, tradable in 23 currencies. So once again, thank you, Benzinga, for bestowing this award on us.
No, thank you, Frank. Congratulations. I like the bow tie today. But you guys have all the tools. You allow people to learn the markets in many different geographies. What's next? Do you think paper trading is a good way for an investor or a new investor to learn the markets, or do you think they should just put cash in right away? What would you suggest, Frank?
I think that the trading platform could be as simple or as elaborate as you would like it to be. And I think it's it would be prudent to take a couple of days to learn the system, to be familiar with all the different screens, especially the analytics, which will greatly benefit trading.
And when you say analytics, are you saying like analytics on your trades, like looking at like how you do, or what do you mean by analytics?
Analytics in particular would be evaluating your strategies, the particular outcomes. For example, one of our analytics is called Risk Navigator, and you could stress test your portfolio prior to actually executing it in a live trading market.
I like that. I got to try that one. I have not done that tool. Okay, that's awesome. Well, yeah. Frank, we thank you for coming on today on the Benzinga Fintech Awards. Anything else you want to add before you head out?
No, just open accounts at Interactive Brokers. We're happy to have you as customers.
All right. Sounds good, guys. Interactivebrokers.com. You know where it's at. Thank you again, Frank. Congratulations.
Thank you.
All right. All right. So now we're moving right along. We got a lot coming on. I'm going to preview some stuff. We have CEOs of multiple companies coming on in the next hour and a half. There'll be some news broken on the show. There'll be stocks moving. There'll be new award winners. And if you're an investor, there's no better place to stay on live at FinTech Award other than fintech.awards.com. And if you have any feedback for us, email us at events@benzinga.com. And if you're in New York City, we want to see you at Stout Grand Central, Stout, STOUT, Grand Central at 5:30 p.m. Okay, we will be there. I'll be there wearing a new tuxedo. I think Luke got me a powder blue tuxedo, so I'll be wearing a powder blue tuxedo. We'll see you at 5:30 at Stout Grand Central. If you're not in New York City and you're in Philadelphia, New Jersey, you know where to go. We'll see you at 5:30. Now let's move right along to best brokerage for options trading. You're with me, Rohan? He is. All right. In third place, can I get a drum roll? Is Aaron Thomas alive? Okay. That was third place, I'll say, is Tastyworks. Second place, drum roll again. Thank you, Aaron. Trade Station. Woo! And then in the winner of the category is none other than Charles Schwab. Hey, Jeff Chiappetta from Charles Schwab. How are you doing today?
Jason, great to be here. Thanks for having us.
Yeah, congratulations. Options trading, such a bigger part of the market these days. I know that I used to be the guy that was buying calls and realized a lot of them were ending in not ending in the money. So then I started learning how to sell stuff. What are you seeing in the options market on Charles Schwab these days?
Well, Jason, first of all, thanks for recognizing Schwab for being a great place to trade options. Similar to what you guys are seeing at Schwab, we're seeing really strong engagement when it comes to the breadth of products and the services that are available at Schwab, including what's available for options. Retail traders now have access to such sophisticated tools, similar to really what institutional traders use. So it's been really great to see the leveling of the playing field. Now, our trading capabilities are not just for established traders, though. We're seeing really strong engagement from younger and newer traders, as well as the established traders, too. But I think what we've talked about, I know many times in the past, Jason, it's really around education and having education not just for beginners or basic education, but also education that goes all the way up through some of the more advanced topics. And so we're seeing really, really great engagement on both ends of the spectrum. I will say, too, that we're really focused at Schwab right now on integrating TD Ameritrade. It's a really big focus for us. But we're really excited in terms of what it means to serve traders, especially those traders that trade options and have a real appreciation for the Thinkorswim trading platform.
Got it. Am I right in that over your left shoulder, Jeff? What is that trophy over your left shoulder?
Oh, I had to display it, Jason. It's it's hardware from last year, right? It's another piece of hardware that we're really proud of.
Yeah. I mean, Charles Schwab, obviously one of the first innovators with discount trading. I remember, I don't even know, I must have been in college when you guys first came out on with like affordable trading way back when. And I just want to go back to that options trading that we're talking about here with Charles Schwab. So when you think, I mean, you have Ameritrade coming on board, you have Thinkorswim, one of the best option platforms around. Then you have Charles Schwab, which has a whole holistic advice. What would you say to someone who's like considering moving an options account? Like, what would be the reason now to go to Schwab versus 3 years ago?
Well, I think there's a number of different reasons, but you touched on it. One, at Schwab, it's really the breadth of offering. You know, whether it's holistic wealth management or wealth planning that we can help you with, or if you're a trader on the other side where you're really just, an active investor or active trader of equities, options, futures, even Forex. I think we really run the spectrum. And I think many of our clients, especially those active traders, they're all of that. They're not just traders. They're not just investors that need help with financial planning, but they're everything in between. And I think that's the real secret sauce for Schwab, is that we can help really all types of investors and traders.
It froze on me. Go ahead, Luke.
Awesome. Well, Jeff, we appreciate you being here. And congratulations again. We love that you now are going to have a second trophy to put in your background.
I have a spot right here, Luke, right here.
And I hope that the trophy doesn't just come out on this day. I hope it's in every Zoom call that you're on.
Yes, exactly, Jeff Giappetto. Come on, every Zoom call, right?
It absolutely is.
All right, good.
Thanks for recognizing us, guys, and thanks for all you're doing for to help the retail traders. Really appreciate it.
Thank you, Jeff. Have a great day.
All right, everybody. Next up, the next award category we are going to be moving to is the best brokerage for trading futures.
Luke, do you know what futures are?
Sort of.
Did you ever see the movie Trading Places?
I can't say.
Oh my God. If you haven't seen the movie,
I'm not a movie guy, okay?
If you haven't seen the movie Trading Places, go see it. You don't know Mortimer and all those guys? Mortimer, they bankrupt the commodities. Oh my God. Guys, if you guys know, if Luke should have seen Trading Places, press 1, text 248-207-0141. That's Luke's number. Tell him he needs to see Trading Places. Okay? I'm telling you, that is the movie. Eddie Murphy, Mortimer. I mean, come on, Luke. You haven't seen Trading Places?
I have not seen Trading Places.
All right, guys. Like I said, text him and let him know.
Depending on the number of texts that I get, I feel a couple buzzing already. And then maybe I'll make some time tonight.
Oh, yeah. I said it fast. I should say it slower. 248-207-0141. Oh, wait. Are we live right now? No, we're not live.
We're not live.
Okay, cool.
So this is the dry run for tomorrow.
Okay, cool. That's what we practice. Practice makes perfect. Boom, boom.
All right, guys. Next up, best brokerage for trading futures. When we first started the FinTech Awards 6 years ago, it was really focused on equities. And then came options, and then futures. And then this year, crypto's involved. And we're going to have another asset class we're going to talk about in just a second here. But I mean, the evolution of the award categories that we're recognizing is because markets truly have become more democratized, right? We didn't have users who were telling us, hey, who should I use for futures years and years ago? It was more of an institutional product. These companies we're about to read out are changing that, making futures accessible for everyone. And so without further ado, drum roll. In third place, we have Tradeovate. Second place, TradeStation. And the winner, final drum roll.
Okay, come on.
All right, Ninja Trader, 2021 winner, Benzinga Global Fintech. All right. I like that music. I think we should keep the music going all day.
How does it go? Okay, if you're watching this live view of this channel, I don't know where you are, hit the share button on your social feeds, Facebook, Twitter. Let your friends know. Celebrate you today. All the hard work you put in to make products that help someone make money, save money, invest, etc. This is the fintech-awards.com, the original. We're not some come to lately company. We've been here. We've done it. We celebrate you guys. The Oscars of awards for fintech. Again, if you Google fintech, the word, I think the first word is, Webster's. Look at who the definition is. Look who's the definition of the word fintech. Webster's, go to that thing and you'll see someone's name that you'll maybe be surprised to see, or maybe not, since we're the originators of the FinTech Awards. So share your button on social, give it a like. I can see Aaron Bree say, like this feed, and Spencer Israel, doing the same thing. So Luke Jacoby is excited to introduce this next panel. And here we go. Luke Jacoby, take it away.
All right. So I just mentioned 4 asset classes, okay? 4 asset classes that have emerged throughout our
Why'd you raise 8 fingers then?
4, 2 and 2.
Okay.
All right. How's that? We talked about equities. We talked about futures, options, crypto. We are bringing a new asset class to the FinTech Awards this year. We're going to be talking about real estate. We are going to be talking about alternative investments. This is sort of the next frontier of markets that are being democratized. So I want to welcome Benzinga editor Kevin Vandenbos to the stage here.
I have not seen Kevin today. All right, Kevin, where's your tuxedo?
It's there.
Just
I'll pick it up later.
Jason, okay.
Just imagine. Okay.
I'll drive it over to his house in a second.
Okay, we'll be over in like 10. All right.
That's what I
All right,
thought.
Kevin, pump it up, man. Pump it up. You want me to get you some Red Bull over there?
Yeah, it'd be great.
All right, you should have told me I'd rock Kevin Red Bull.
All right. So tuxedo, Red Bull. Anything else you need, Kevin?
What else do you need,
I'll
Kevin?
be over in 10 minutes.
Yeah, I think that'll cover it. 2 Red Bull, tuxedo, good to go.
All right, okay. All right, is Kevin taking it away to introduce the panel? How does it work? Okay.
Kevin, take it away.
All right. Well, thank you guys. I'm super pumped about this panel because we have the who's who in alternative investments. Some of the pioneers in this industry and innovators. So really excited. We've got Yieldstreet, Alumni Ventures, CrowdStreet, and Arrived Homes. All a great variety of alternative investment options for individuals. I'm going to let each of the panelists kind of briefly introduce themselves, starting with Milind here at Yieldstreet.
Yeah, hi. So Kevin, very excited to join this panel. And my name is Milind Mehere. I am the founder and CEO of Yieldstreet. Yieldstreet is a direct-to-consumer digital investment platform that is opening access to alternative investments across the board. And so if you want to make some yield, you know where to go, yieldstreet.com.
All right, thank you. Next, I'll hear from Luke over at Alumni Ventures.
Hey, Kevin, thanks so much for having us. This is a great, exciting panel to be on. I'm Luke Antal. I'm a co-founder and the chief community officer here at Alumni Ventures. Essentially, what we do is provide actively managed venture portfolios to the individual accredited investor, and so we're, like many others on the panel here, opening up this asset class to retail investors, and we try to do it in a simple, smart way. And we just launched a brand new website. You can check it out at av.vc.
Awesome. Thank you, Luke. Brent, CrowdStreet. Give everybody a little background there, please.
Sure. So CrowdStreet's the #1 site in the U.S. for investing in institutional quality real estate. And this is typically commercial real estate projects, so large capitalization. People think about office and retail kind of historically, but we're also doing lots of work in things like e-commerce distribution and warehousing, self-storage, large multifamily developments, senior living. So these are basically projects that the billionaires have been investing in for decades, and we're bringing that to the individual investor. And we work with the best real estate developers in the country to make these deals happen.
Awesome. Thank you, Brent. Ryan, with Arrived Homes.
Yeah. Hey, everyone. And
Welcome.
Kevin, thanks for having us on. Yeah, I'm Ryan. I'm the co-founder and CEO for Arrived. And Arrived is a platform for investing in shares of rental homes, starting from $100. And so instead of buying a whole home on your own, providing the large upfront down payments into individual homes and all of the work required, investors can browse homes through Arrived, similar to looking at homes on Zillow, and then with the click of a button, buy shares in those homes and build a portfolio of rental homes across the country. Arrived does all of the work behind the scenes. So it truly is kind of a passive investment in the equity of individual homes, and investors still have all the control of picking what homes or what markets they want to invest in.
Awesome. Thank you, Ryan. So, without question, alternative investments, across the board have, been gaining, a lot of popularity, becoming, much more mainstream. Why are more investors starting to add, these asset classes to their portfolios?
Well, I think I'll start off, Kevin. I think it's primarily because companies like us have made it possible. If you combine a few things, one, legislation changes that happened, in the 2012 time period where, honestly, access that wasn't legal, it was actually illegal for things like real estate, projects to be solicited to average investors. That law changed, which meant that companies like ours collectively were able to start offering this. And I think as investors realize that they're, limited, their choices have been limited largely to stocks and bonds over the years. They've been creating other options to get into other asset classes. So, we're seeing alternatives explode, as you say, but part of it is just the legislation changes, and that created the innovation amongst the companies that are on this panel to offer this to investors.
Awesome, thank you. Anybody else?
I'd be happy to add in a little bit there, Kevin.
Here, Kevin, I think just to kind of add to what Brent was saying, generally what we hear from our consumer base is that they want to modernize their portfolio. And, for the last 60 years, people have told that 60-40 is the way to go. We think that 60-40 is dead. And institutional investors have 10 times more exposure to alts than a typical retail investor that has less than, potentially 2-3% exposure to alts. So everybody wants to invest like the top 1%. And so the way to modernize your portfolio is to get that exposure to alts. And so I think that's what we have been hearing from our investor base and our customer base quite a bit.
And I'll add on there a little bit. Why are investors seeking alts? A lot of it in venture is driven by the return story. If you look at the sophisticated investor base, and if we hone in on, let's say, university endowments that manage over $1 billion, these guys allocate on average over 25% into private equity and venture capital. And when you see the headline returns of some of these endowments and how they're doing, and read the articles and the science behind why that is, it's really driven by the alternatives that they own. And so, in the case of just venture, where our company, Alumni Ventures, plays, the asset class on the whole consistently has outperformed the public markets. And that's the case, especially for the top quartile venture firms. But recent data is actually showing that it's actually the case for a much, much broader set of the firms in the industry. And at Alumni Ventures, I think there are a couple of other answers to the question. To keep it really succinct, I think investors seek diversification, like Brent and Milind mentioned, and ultimately it's about access. I think a common theme here is retail investors traditionally have not had access to the offerings that our companies provide. And we are now, each of our companies, providing that in a really simple way, and investors are interested.
Look, can I make a quick comment on what you said? I think private markets are so interesting because, if you think about our parents, in the 80s, there was so much kind of wealth created because companies like Apple, Cisco, IBM, Sun Microsystem, Oracle, you name it, right? They went public. And the consumer retail could kind of really ride their coattails to take advantage of it. Now companies are staying longer, much more, almost double the amount of time. And so, again, I think that's really where the consumer is missing out. And in the last 5 or 6 years, the ability for all of our platforms to offer that flavor of alts has been really interesting because of technology and just changes to regulation, as Brent said.
Yeah, I think I agree with all that. I think one other point is we all are offering basically private access to private markets. And so when people think about why they want to add alts to be more diversified. It's because they don't want to be correlated with the public markets. So if you've got the public markets swinging, up and down, you have to have some assets that are obviously a hedge against those swings, and that's what we all offer are basically, private offerings that will basically ride over the swings of those public markets, as well as when we see things like recessions. A lot of the time periods that we're talking about are, multiple years of hold periods, and the benefit of that is it allows you to ride over the top of those market dips and see a realization of your asset in the times when the markets hopefully back up. So that non-correlated element is really important as a diversification strategy.
Excellent. Yeah, I feel like, and I know myself, and a lot of what I see is people, don't want to just, trust, putting their money with, their financial advisor to just say, okay, wherever you think this should go as much. I feel like people want to have a little more control, a little more say over where their money goes. And, I think these private markets, definitely offer that. It's, it's really exciting to see, how far you guys have come. Brett, you touched on, some changes in, the regulations. And I know you guys all, work with different ones, you Reg D and Reg A. Ryan, I know at Arrived Homes, you guys are working, your offerings are Regulation A offerings, correct?
Correct. Yeah.
Could you just kind of, some of the kind of the difference in the two different, these two main offering types?
Yeah, and part of the access for retail investors is really about allowing people to invest without them having to be an accredited investor or having a net worth of more than $1 million or income higher than $200,000 a year. And really that evolution came about with the Jobs Act around 2015 and kind of evolving the Regulation Crowdfunding Act and Regulation A or Reg A plus. And really we're following Reg A, which is essentially the vast majority of the kind of disclosure and process related to an IPO for a company. And for Arrived, we're basically going through that process for each of the homes on that investors are investing in. And that means that non-accredited and accredited investors can invest together under this offering structure. It also is really primarily about investor protection. So we go through a qualification process with the SEC. We publish all of our business plan and all the details related to all of our assets in the same way. Basically every house that we launch on our website is kind of a mini IPO. And it carries, a lot of the same disclosures. We're doing, annual audits and financial statement reporting directly through the SEC. And so really that's about, I think it's a mix of broadening access, but also, increasing comfort that these companies and these alternative investment platforms are going through, these more rigorous review processes, or, they're making sure that the work is being done to make sure that they're suitable and that they've properly disclosed everything that they're doing. And so that's a really big part for us because we really look at Arrive and our position as a starting point to get access to real estate as an investment class. And I think with that means, providing as much education and access to information as we can along the way. And so that kind of shows up in our disclosures, but also in how we, kind of lay information out on our website so that investors have, all the information that they might need about individual houses or markets to make decisions.
Thank you. Kind of go off from that. So there's, a growing number of, platforms and, types of alternative investments becoming available. I see just about everything, getting securitized, from artwork to, sneakers and, anything in between. What are some things that investors should be looking for, when considering, a certain type of asset class, to invest in? or platform, I guess, in general?
Yeah, I'll start with that. I think, we've got a great range of investment options here on this panel. As Ryan said, they can start $100 on their platform. We work at CrowdStreet. We've taken the approach that there's a long-standing network of the most successful real estate developers out there, and so what we've focused on is partnering with the very best, and then bringing those deals to the individual. And so I think when you think about what diversification approach you want to take, it really starts with what's in your portfolio already, because you're going to put money into CrowdStreet. And a lot of our investors build $1 million portfolio across many different geographies, different asset types, different real estate sponsors, and that's their overall diversification approach. But they're also going to be putting money into things like crypto and NFTs. They're intrigued by all of this. So it starts with understanding, what do you have if crypto swings and, Bitcoin's at 67K, but it was at 30K, like 2 months ago, right? So if you're going to withstand those swings, you should probably be invested in something that's really tangible and solid. And so that's the role we play. And it's not to say that CrowdStreet's any better than any of these other investment opportunities. It's just to say that, if you're going to invest with a 100-year-old real estate firm that's done, $10 billion of deals, you're doing that for a strategy that's anchored in offsetting, and taking advantage of what your portfolio mix looks like overall.
Yeah.
Yeah, I'll just build on that a little bit, Brent. When we think of our investors, our offerings, they're only for accredited investors. And we sort of think of, one of our personas that we talk about is the heart surgeon in Des Moines, right? So somebody who's, in their 50s or 60s, they've had a wildly successful career. They made all of the right, smart financial decisions along the way. They're already as fully diversified as what they are aware of, right? And that's, I think, where a lot of our companies on this panel come in. And coming back to this idea of access, there's this whole new world of alternative investments. And if you think about, I think our investors think of their allocations as a pie chart, right? And there are slices of that pie that they don't even know exist. And so we are all here, I think, and the alts class as a whole, right? We're all here evangelizing ourselves and one another and all of these asset classes, because these folks are used to making the right financial decisions along their career. And now that they have access to these different ways to diversify, they're showing a lot of interest in it. And so, it's obviously a super personal decision. Me and Ryan were joking around before we hopped on the panel that we all serve a retail base, right? There are 10 million accredited investors in the United States alone. Each one of them is making a different financial decision based on their own personal, background and so on and so forth. And so, I think there are some commonalities though around that diversification and access.
Yep. And Kevin, if I may jump in, I think just to offer the consumer perspective here. So what we frequently hear from our investors is they really need diversity from a yield, duration, and risk perspective when they think about alts. So, you want some duration that is 2-3 years, but then, they're okay with some that is longer than that, such as funds. And then overarchingly, the way we've kind of really tried to educate the consumer base is that you should think about income, growth, and dislocation. Like those are kind of the three buckets in which you can, kind of build up your alts pie. And so that's really what some of the consumers really value from us, because, obviously Yieldstreet, as the name suggests, we were very focused on income generating kind of alternative credit strategies that would pay you kind of a monthly, quarterly coupon. And then obviously, like Brent does and, CrowdStreet does, there's a lot of emphasis on equity, which has a really great MOIC or IRR over a longer, period of time, similar to what we do even with our fund products and the third-party funds that we distribute. And so, you have those three buckets in which a consumer always thinks about getting exposure to alts. I think the definition of alts also, it's an interesting question to raise here in this panel. Some may call all of us here on this panel kind of traditional alts, because now a new alt world has evolved with crypto and digital currencies. And like generally, if you think about the millennial population, that's probably under 35. For them, alts is all about Dogecoin. And but so that's an interesting kind of perspective that I don't know if the rest of the panel shares, but that's really how things are evolving, and the alt space is evolving so quickly.
Yeah, Milind, I think that's a great point, just around the yield and in the role that these alts and private investments can provide. It's really about protecting the yield for those longer term basis as well, where for, let's say, Arrived and rental homes, as private rental homes as an asset class, we're delivering and locking in, let's say, a 5.5 to 7.5% dividend yield right now on our current properties. But you look at public market REITs and you're at 1.5 to 2%, and that's just the the discount that you're paying for that access to liquidity in the public markets, especially in this interest environment right now. I think we hear that from our client base a lot, that locking in and access to those private yields is a big driver of that decision.
Oh, thank you. So, before we got on here, we were all chatting, and Brent, you mentioned, I think 6 new offerings over the course of a week. So, first, how are you sourcing these? I guess all you guys, how are you sourcing, these investments, these opportunities, and what's happening, before they appear on your platform? Like how do you choose who makes, what makes the cut? I guess.
Yeah, I can. Go ahead. Go ahead.
Okay, I'll kick it off. So here at Alumni Ventures, we've got about 150 employees, and about half of them are full-time venture investors, and they are spread out across 6 offices over the whole country: San Fran, New York, Boston, Austin, Chicago. And they wake up every day, and their mission is to go hear about, find out about, and evaluate and get into the best venture deals in the market. And the reason that we're called Alumni Ventures is that many of our funds, not all of them, but many of them are rooted in different alumni communities of universities here in the US. And so for a portion of our funds, we really are a network-powered venture firm, where we tap into the alumni network of, say, Harvard or Stanford or MIT or my alma mater, Dartmouth. And that alumni community is both the source of the capital, they are our investors, it's also the source of our deal flow. And so our model is really to tap into that network and use it to, along with a lot of other data and rigor and process around evaluating the things that you'd commonly expect to evaluate when you're looking at a private company: market size, who's the team, what are the other investors, et cetera. And we run our diligence process. We've got investment committees for our funds. All of this is under one roof of Alumni Ventures. And so we're able to share data and process. And ultimately, we use a pretty rigorous process to make a decision on whether or not to invest.
Yeah, and Kevin, just talking about the 6 deals we launched in a week just recently. What we do is we have, similar to Luke, we have a group of CrowdStreet employees that live in all the different geographies across the U.S. And what they do every day is they get to know all of the real estate sponsors in each market. They meet with them regularly. We're back to face-to-face, thankfully. And they get to know their deal flow and what they're working on. And they basically work with them to understand which of those deals make sense for CrowdStreet. And then from there, it gets kicked over to an investments team that it's kind of like church and state. They then look at each deal through their own rigorous process. I won't bore you with all the details. We actually publish it on our website under Deal Review. It talks about how we look at the team that's behind it, the actual project itself, the financials, etc. It's a very rigorous process. About 95% of the deals we come across don't make it to the platform because of the rigor of the process. So basically, we've invested in a big team across the country, and we've gotten to know hundreds of the very best real estate sponsors in the country, and that's where all the deals that come on CrowdStreet originate.
All right, thank you. All right, so we got about 4 minutes left, and I've got about 3 hours worth of questions left that I want to ask you guys. But so I guess better prioritize here. One thing I definitely want to make sure that I have for the audience here. And Millen, I'd love to hear from you on this. I think I was reading about some of this on your guys' website. But how much should an investor allocate into alternative investments? And should that be like they choose whether they want to do real estate or venture capital, or should they look for just like they want a diverse portfolio in general, should they also be diversifying across alternative assets as well?
Yep. Great question. I think diversification has been a key facet of investing for a long period of time. So we obviously encourage our investors to do that. With regards to how much allocation, so we generally tell our investors it should be between 15 and 20%. And that's compared to generally retail has less than 3% allocation compared to institutions that have more than 50% allocation. So we think that 20% is an appropriate number, but it depends on so many factors. What's your liquidity requirement? How soon do you need liquidity? And then which phase of life you're in and what kind of cash flows you have. And so I think a lot of the investors have to make sure that they are very familiar, because as Ryan was mentioning, liquidity has a huge premium, and the reason why people obviously invest in public markets is that you could sell whether it's up or down. And so we always encourage people to kind of look from that lens. And then the last point I would make is that yeah, absolutely. When you think about alts, again, the definition of alts is ever emerging. Everything from like real estate to passion art assets such as art that you mentioned and collectibles, all the way to venture and private equity investments. And I think we obviously encourage our investors to make sure that they have a diversified approach towards investing in alts.
All right, thank you. All right, so we're down to about a minute. I guess I don't want to get into any more questions here, so I'll just thank you guys all for being here. Really appreciate it. If you want to just real quick let everybody know where they can find some more information. There's definitely a lot more to learn here. Just let everybody know your websites real quick before we sign off.
Yeah, you can find Yieldstreet at yieldstreet.com.
You can find Alumni Ventures at av.vc.
Thank you. Oh, Brett, you're muted there. There we go.
Yeah, just CrowdStreet.com, free accounts.
Right.
Yep.
Thank you.
And we're at arrivedhomes.com. Thanks, everyone.
Thank you, guys. Appreciate it.
Take care.
Thank you, Kevin.
Thank you.
Thanks, Kevin.
Oh no, they're going off the screen faster than I can thank them. Okay, thanks everyone for that panel, and that's a good preview for an all access show that we'll be doing in a couple of Fridays from now, all about alternative investing and alternative asset classes and alternative investment platforms. So that may be discussed there as well, TBD, and tune in for that. Okay. Hey, it's 11:55. Let's bring on our next presentation, our next speaker of the day. I'm going to do a one-on-one with Jim Cagnita. There he is from NinjaTrader. First of all, Jim, congratulations. Best trading platform for trading futures, NinjaTrader. Congratulations on that.
Thank you, Spencer.
All right. What are we going to talk about today, Jim? We're talking about the rise of micro futures trading. This is a relatively new area of the futures market, and as such, as the name would imply, right, more available to the average retail investor. So why don't we start with this? Can you explain to us first what micro futures are, where they came from, and then we'll go from there.
Yeah, I mean, so micro futures are smaller size contracts, smaller in relation to the existing ones, which were bigger. They're 1/10 typically the size of the original futures contracts, And so if you think in terms of fractional shares on the stock side, it's a similar concept, right? So as an example, a micro E-mini S&P futures contract is 1/10 the size of the classic. The point size is $5 instead of $50. And it's really this phenomenon moving toward the retail sector has been going on for a while. It's been gradual and sustainable. If you remember back in 1992, the CME Group first launched their electronic exchange. In the main retail market, there was the E-mini S&P 500, the classic E-mini S&P, which we're talking about. And then you kind of got to fast forward all the way to 2017, and I think somebody invented the fractional shares. So instead of having to, buy a whole share of Apple, you could buy half a share of Apple, and that kind of got the idea going, right? More participants, more people could participate that way. 2019, though, is really where the rubber hit the road. The micro E-mini S&P was launched May 6th of that year, and it really made futures trading accessible to just about anybody, right? And then follow through 2020, the MEM stocks or MEM stocks, however you say it. I'm kind of old, so I don't know. Reddit users.
I'm not going to correct you. I'm not going to correct you.
Okay, but then the Reddit users now are involved and are forced to be recognized in some of these MEM stocks.
Yeah.
And then in 2021, the CME Group did it again. They said, "Hey, we're going to expand our micro product offerings to include markets like crude oil and Bitcoin." And so now we have all of these markets available, and it's just terrific.
Yeah, you made the comparison at the outset. Micro futures were basically fractional shares for stocks before fractional shares for stocks really existed.
But it kind of emerged about the same time, and the first attempt in '92 was really a migration from the first migration from the pit to the screen. Everybody had their AOL accounts and we're we're dialing in, and now it's just the technology is so awesome. I mean, the NinjaTrader platform technology is so great that speeds are measured in milliseconds.
So let's talk about why, like, aside from the small size and therefore affordability aspect, why would somebody want to participate? Why would they want to trade micro futures of anything, right? Of Bitcoin, of the S&P 500, right? Why would they want to do that?
Well, first off, now you could fund a futures trading account with hundreds of dollars instead of thousands of dollars, right? So that kind of eliminate a barrier to entry for many traders and investors, and not only here domestically in the U.S., but all over the world, right? So that's kind of number one, right? So your risk capital commitment could be less in some people, which opens the door for a lot of folks. The second thing is you could really scale in and out of positions better, right? Because we know the market's volatile. We see charts, candlestick charts, line on close charts, all sorts of charts, and you could see, there's volatility. Price goes up and down. So now you could scale in and scale out of positions with more precision on a much more friendly basis, especially if you do have a smaller size account. And then lastly, maybe not lastly, but importantly, it's a pattern day trade like experience, right? You don't need $25,000 to get all of the tools and whistles available and see the order flow.
Yeah, that's probably the big thing, right? Because a lot of people, I think, are limited by that PDT rule, and this is sort of a perfectly legal and not at all questionable way around that rule. Right.
Well, yeah. And not only is it legal, I mean, we're trading, benchmark instruments, globally recognized benchmark instruments in a highly regulated exchange. The CME Group's publicly traded, highly regulated, and then there's a lot of support and tools around that infrastructure.
So, but I think one of the things maybe people realize that maybe they don't when looking at, okay, so I want to trade some micro Bitcoin futures. One of the things that people like you look at though is like, all right, how is this market functioning? Is it liquid? Because if there's no liquidity and there's no volume, you as a professional, you don't care, right? But and that's sort of like the gateway here, right? Is like I'll only come in if everyone else is already here to some extent, right? So can you speak a little bit about which micro futures markets are the most active, the most liquid, and have the most volume?
Yeah, so that's a great question. We want to trade where there's tight bid-ask spreads, right? Because the bid-ask spread is part of your transaction cost, like it or not. And the tighter the bid-ask spread, the better off you are. So you want to have liquidity in the markets. I'm just taking a look at two of the more popular micro products. The micro E-mini S&P is an example. Last Friday traded over 800,000 contracts with a notional value of over $4 million. Today, we're on pace to beat that again today. And so that's a lot. That's a lot of notional value, a lot of liquidity, a lot of exchanges. Last Friday, also the micro E-mini Nasdaq, which is based on the Nasdaq 100, traded over 1 million contracts on Friday, and the notional value there was over $2 million. So, and that's just on one day. So those markets are super liquid, and in my opinion, are very tradable.
What would be like the bar that you would, anything below this, you would say, this is just, maybe it's a great idea, but there's just no one here. Not interesting to me.
Yeah, so there are some new emerging micros that are still getting there, right? So micro Bitcoin would be a good example where you do have a wide bid-ask spread still, because there's not enough market participants in that particular product. But I do believe if CME is good at anything, it's make over a period of time establishing that liquidity base and making it really tradable. And it's not that you can't trade the micro Bitcoin futures right now. You can, but you have to have a different strategy. You have to use a different strategy, more patience, limit orders, that kind of thing.
It's like a network effect, right? It's like more people encourages more people, and you only want to go there if you know it's already crowded. And if you know it's not crowded, you're not going to go there. It's a funny psychological thing how because there are, I don't even know how many different futures markets there are, Jim. You'd probably know, but there are dozens and dozens of them, and the most popular ones, the big get bigger, essentially, is what I'm trying to say there. So okay, I guess, are there any differences in how somebody would participate in in the micro futures market versus like the regular futures market, or do they function more or less the same, aside from the differences that we already discussed in terms of affordability and cost? Do they function the same way?
They function the exact same way. I mean, the CME Group has their electronic matching engine. Orders are filled on a FIFO basis, first in, first out, completely fair. It doesn't matter how big or small you are. You're in line with your order when you get it there, right? And remember, there's no 25K minimum buy-in. There's no uptick rule. There's no limit.
Real fast, explain the uptick rule. I think that's an important one.
So on the equity side, as an example, to go short, you have to go short on the offer. You got to wait for the price to tick up one tick before you can go short. And so that gives you a one tick disadvantage, right? In futures trading, that doesn't exist. You could sell a contract at the market. In essence, you're selling the bid immediately whenever you want. You don't have to wait for an appreciation in price.
Yeah, the uptick rule is a big thing in the stock market. But like you said, doesn't really apply here. So
yeah, and there's no limit on get this pattern day trade like experience. There's no limit. You don't have to trade so many times a day, or you can't trade so many times. You could trade once. You could trade once a week. You could trade 100 times a day. Whatever whatever your personal style is, whatever you want to do, you could do. And then you also have these terrific, I think ours is the best, of course. The NinjaTrader trading platform gives you the ability to see all of the order flow, to see all of the, see the bid ask, all the bids and all the offers on the trading ladder. So that whole technology is really high end on futures trading side.
What micro futures markets exist currently?
So there's the main stock index futures, right? The S&P, NASDAQ, the Dow, the Russell 2000, are the 4 domestic ones here in the U.S. that have micro contracts associated with it. Very popular crude oil contract. The West Texas Intermediary now has a micro contract, which is a good marketplace. Gold, you could trade micro gold futures. You could trade microcurrency pairs, Forex, right? So the euro versus the U.S. dollar cross, and British pound sterling U.S. dollar. Those all have micro components to markets as well to them, and there are a lot of good reasons to trade those particular ones. And we mentioned Bitcoin is an up and comer.
When you talk to clients, new clients, veteran clients, does this come up a lot, or do they not even know about micro futures?
Well, I think it's becoming more and more mainstream, and the knowledge base in the world is getting bigger and bigger on that this is accessible, and it's really easy to do. It's not frightening, right? It may not be easy to make money, but it may be easy to make money. I don't know, but it's easy to participate, and I think more and more folks are getting wind of it, and so we're probably at 50-50, at least in my experience today.
And do you yourself participate? I should ask that.
Well, yeah, we do our live, our live trading stuff as a routine education service through the platform trading part of NinjaTrader.
So the markets function the same way. I would imagine the application of different tools, trading tools, would function the same way as well. I'm talking micro versus normal, right?
Yeah, and that's, again, in terms of opening the door to any trader in the world who wants to trade micros. You still get the Superdome, the NinjaTrader Superdome. You still get order flow volume profile, which I think is unique in the futures world. You still get single click order entry, trading from the charts, a whole slew of advanced indicator lists. So it doesn't matter if you're trading a big size, a classic size E-mini or a micro, you get the same tools.
Have you seen an uptick, pun intended, in the interest of micro futures in the last, year and 3 quarters, really, as we've seen a massive increase in interest in retail interest in stocks? I'm wondering if you've seen an increase in retail interest in the micro futures.
Yeah, it's growing leaps and bounds. A lot of interest in this area. It's going to be, it is already a main street kind of pathway for a lot of traders, and it's going to continue to be. My colleagues at NinjaTrader will be able to give you statistics if on exactly percentages and growth and all that stuff. But it's wildly popular now.
That's amazing to hear, right? Because that's like the biggest thing that we talk. That's kind of the point of this entire day, right? Is democratizing access to markets, to investing, and every time every year the Fed comes out with their survey that says 10% of households own stocks. I don't know if that's right. I'm making up a number, but it's always the minority, right? And we always want more people to own financial assets, and this is the way for a lot of them to gain entry into the futures market, a market where maybe they didn't have access before, and maybe they don't even know about this. So I think this entire conversation is very, very important. And I want to mention that Jim and I'd be remiss if I didn't mention this, Jim. We do a weekly show every Monday, 10 a.m. Eastern time, youtube.com/Benzinga right here. Jim and I talk about this stuff, talk about the futures market, micro futures market every single week. So, Jim, I guess I'll see you next Monday.
Yeah. Highlight of my week every Monday. Look forward to it.
You're too kind. Jim Cagnina from NinjaTrader. Jim, always a pleasure. And I sincerely hope that more people take advantage of micro futures because they're easier to get entry to. That's kind of the bottom line, right? They're easier for the average person. Yeah. So, all right. Thanks a lot, Jim.
Spencer, thank you. Have a great one.
Okay, let's move. I think it's time to give away more awards. Is that right? I'm pretty sure.
Yes, Spencer, it is. Okay. Spencer Israel, welcome back. We are here in New York live. If you're in New York or nearby, come to New York. See you at Stout Grand Central, 5:30. If you don't have a ticket, say you have the Raz coupon. That's me. I'm the Raz coupon. All right. Spencer Israel.
And before you get into it, Jason, I've gotten a handful of questions as to what the awards process looks like. Oh. Right. I mean, we're recognizing a ton of companies across a ton of spaces today.
Well, this is the Capital Markets Awards. I mean, FinTechAwards.com is us. There are other companies that say they have awards. They're all copies. Go ahead, Luke.
All right. So we have categories. The categories are determined by popular demand, right? We get millions and millions and millions and millions of readers on Benzinga.com every day. They're saying, hey, this is what we care about. This is the future we want to hear about. From there, companies apply, and then a third-party panel of judges that are from this industry,
I forgot my
built
jacket,
in this
Luke.
industry.
My jacket's over there. I forgot to put it back on.
Your face makes up for it, right? You have such radiating good looks.
And so Luke had one thing wrong. He said millions and millions of votes for categories. I thought it was billions now at this point.
Yeah, it was about 5.5 billion. So there's still 500 million people out there that aren't Benzinga.com users. We're going for that last 500 million, but about 5.5 billion.
All right. And so it's people voting. There's a third-party set of judges. How many judges do we have this year? I think it was the most judges we've had in ever.
Over 100 judges.
Wow, it's a lot. And they divide and conquer categories. All right. So are we off to the first award? And am I announcing this for this one?
You're up.
All right. So this is a category for short selling. Short selling is when you are hedging or maybe taking a negative position against a company. So if you're saying, hey, Tesla's overvalued, which I know Joe Connon and Spencer Israel have been short selling since 200. I don't know if they still are. They probably covered their shorts. I don't know if Joel actually did it, but Spencer, I told him one day that there'll be a Tesla in every parking lot. And he, after the show, he's like, Jason, why would you say that if you don't believe it? I'm like, I do believe that. That was 3 years ago. I remember it like yesterday. Anyway, this is the best brokerage for short selling. You want me to look over here? I will. Okay. In third place, I don't hear the drum roll, but I wish I did. Aaron, are you alive? Okay. So Aaron Thomas is not alive. So please send a search party. In third place, Interactive Brokers, Thomas Pefferty. Congratulations. You guys should look up Thomas Pefferty's story if you haven't seen it. It's unbelievable. In second place for best brokerage for short selling is Cobra Trading. I like that clap. And the winner of best brokerage for short selling, this has a lot to, finding shorts, being able to borrow the shares. There's a lot of things that involve a short selling versus going long, Luke, if you're not aware, because Luke, I think, just goes long. So the winner of the category is Trade Zero. And I think we have Dan from Trade Zero here. Is that right? Is that what they're saying to me on the IFB? Yes. Dan, how are you?
I'm good. How are you?
Good.
Thanks for having us.
Yes. Congratulations on best brokerage for short selling. I know people have used you guys to find shorts for many years. How have you guys been so good at being a great brokerage for short selling?
Well, I think the secret is really in the innovation around being able to sell back your locates into our ecosystem, and us continuously trying to improve the user experience, focusing on our customers, whether it's directly in the product with feature sets or whether it's our customer service that we touched on earlier during the presentation I gave with John Ferrara. We're just obsessed with trying to make it a great place for short sellers to operate.
Yeah, absolutely. And for Trade Zero, I think you guys have been in the news recently with going public or SPAC conversion. I know that's probably not what you're allowed to talk about, but I think it's something people should look up because you guys did win this award for best brokerage for short selling. And how many years have you guys been around doing this for?
Well, we've been around for several years doing this. This is now the second year in a row that we've won the Benzinga Award for best brokerage for short selling. So super excited about that.
Where's your trophy?
Sorry, where's our trophy?
Yeah, you should have it in the background.
I don't have it in my office.
All right,
I think our CEO probably has it in his office.
Pipitone.
Correct.
Very cool. Very cool. Okay. And so if you don't have a Trade Zero account, why should someone go open one up today?
Well, we have products that address all the needs of active traders, whether that's someone who wants to be at home with a pro desktop setup with multiple screens looking at a whole bunch of different charts, to people who are investing and going long, to Mac users, to PC users. We'll be launching new markets and new major features such as crypto and complex options over the coming months, and
Cool.
we think it's a great end-to-end platform.
Yeah, and I have it. It's sophisticated to beginner, and it's always available. Like, it doesn't go down, and that's something. I'm not trying to jinx it, but it doesn't go down. You're able to like trade, and even when they stop trading GameStop, Trade Zero is trading. So, Dan, congratulations on winning the best brokerage for short selling. Thanks for participating. And you want me to move over, Rohan? And I'm going to hand it to Luke now. Okay.
Thanks
Thank
so
you
much for having us.
Yes, thank you, Dan Carlin. All right, Luke.
All right, I'm taking the mic back, Jason. I'm doing the next award. Again, guys, this is the Global Fintech Awards. The next category that we have, it's Best Day Trading Software. And the reason why I wanted to reiterate, this is the Global Awards. We had the widest range of applicants in this category. We had chat rooms. We had social media handles. We had brokerages. We had trading tech. I mean, it was such a wide group that participated. Our judges, thank you. You went through dozens and dozens and dozens of platforms, websites, marketing materials to determine these winners. So without further ado, I'm going to announce third place, Best Day Trading Software goes to
C3 Fund.
Thanks. You still stole my thunder. I was building something up. Yep. Something special. All right. Second place, Best Day Trading Software goes to Interactive Brokers. You got me there. Little pump fake. And the winner for 2021 Benzinga Global Fintech Award, Best Day Trading Software, Market Structure Edge
LLC.
If you want to find out what the Edge is that we're offering, the first place to go is the How to Use Edge at the top of the dashboard, at the top of the web page, and see the 5 easy steps. Give it a try. We have the mathematical edge that will help you improve your probability of profitable trades, and that's what matters, right?
All right. I am joined by Tim Kloss, CEO Market Structure Edge.
Hello, Tim.
Great to see you guys. And look, I haven't even moved from that spot in that video. I'm still right there behind that painting. You can see.
And what people don't know is you shot that video almost a year ago, 364 days ago, because you were so confident you were going to win this year. You've been stuck the whole time.
Confidence was high. Clearly, the year has been hard on me because I've aged considerably. It's good to see you guys, and I do want to say something here because we think very highly of you guys, and I can't think of a more delightful award or honor for us than serving as recipients of the Benzinga Best Day Trading Software Award, and. We extend our thanks to the outstanding Benzinga team, including you two and Neil and Andrew and Spencer and Aaron, and I probably leave somebody out, but we think highly of your team. And we thank your esteemed empaneled judges for their considered review. I appreciate that. That was a lot of information to go through. And our fellow nominees. It's good it's an honor to be in the company of C3 and Interactive Brokers. By the way, I heard your lead-in, Jason, and Interactive Brokers is my broker, and it's expressly because Tom Petterfee is one of my market structure heroes. He was the guy who understood electronic markets before everyone else. And our platform is built on a legacy of understanding market structure, the rules and behaviors behind price and volume. And we can't beat the market if we don't know how it works. And I'd thank some other pillars too that Jason, you know all these people, but Joe Saluzzi at Themis Trading, Ronan Ryan and Brad Katsuyama at IEX and others. And those are the folks who pioneered the idea of thinking about market structure. And finally, the Edge Mob, the hashtag Edge Mob, which in part, by the way, grew because of Market Structure Monday with Dennis Dick, Joel Elkanan, and Spencer Israel. We do that 8:35 Eastern time every Monday. And out of that grew this fantastic group of people who are very interested in understanding how the market works. And we built Edge as a dream for democratizing the market for retail traders so that you could use supply and demand through market structure just like the big guys do. So it's just a terrific honor for us, and we thank you very much for it.
No, Tim, thank you for coming on, and congratulations to you. You've done a great job. And if you guys are just tuning in, Tim has recently made some updates to his software. So download it, check it out. I was going to go into the updates, but now I'm getting called in for the time thing. But so check it out. Market Structure Edge. It's awesome. Tim is a great guy. So freaking, I'm using the word freaking. I didn't swear. Okay, Nicole. So freaking knowledgeable.
We find him when he swears, Tim.
Yes, I have a $10 tip chart.
Spencer Israel is responsible for that.
Yes. So just want to say congrats to you. Check out the updates to software. Yeah, no, thank you, Tim. We appreciate you and your knowledge. So we appreciate it. Congratulations. And we will talk to you soon or Monday at 8:35 a.m. on the show.
See you guys. Yeah, we'll see you, Spencer. We'll see you then. Thanks, guys. Appreciate it.
Thank you. All right, Luke, we are getting down to it. We are getting to crypto. Crypto.
We have 2 crypto categories.
Yes, and we have one of the CEOs of a crypto category. I can't give it away. Yeah, I know. I brought him in. I found him where he is. He flew all the way here.
He was just wandering around, and you picked him up off the street.
Yeah. Okay. So this is best software for long-term cryptocurrency investments. That is a long title, and a long term.
It is a long title.
Okay. So Luke, take it away.
All right. Best software, long-term cryptocurrency investments 2021 Benzinga Global Fintech Awards.
FinTechAwards.com.
Third place, we have 21 shares.
Luke kind of yells, guys.
Sorry, I get excited, okay? I can be a Debbie Downer, but I'll choose to keep being excited. Second place, we have iTrust Capital. Really interesting solution if you haven't checked it out.
If I was a dog, I'd be afraid for my owner. He'd be yelling at me like, come on, Rudy. Come on, Rudy. You yelling.
Get the stick. Fetch.
Yes.
Yeah. Hey, they don't have me train dogs for a reason, right? There's a story behind that. And in first place, our winner, 2021 Benzinga Global Fintech Award for Best Software for Long-Term Cryptocurrency Holdings is Coinbase.
So I just want to say, I think Coinbase has earnings tonight. So if you want to tune in, go to Benzinga and check out the earnings. Great stuff. All right, now we're back on to the next one. Best software for trading cryptocurrency. And I trade it, guys. I own a lot of USDC. If you own USDC, shoot me an email, jason@benzinga.com. Anyway, this is the best software for trading cryptocurrency. What is up, Ron? Okay. Rohan was looking at me and doing sign language. I don't know. In third place, give me my drum roll, Rohan, is Genesis. I got a good drum roll now. They've given it to me. Okay. In second place, James Putra, TradeStation Crypto. And then the winner. Give me that drum roll, team. Here we go. Voyager Digital. All right, we're live. We are live with the Voyager Digital CEO. Goes by the name of Steve Ehrlich. Rohan's very excited. Look at that smile on Rohan's face.
He's smiling pretty good.
Yeah, I've never seen a smile that big.
I hope he uses the app.
Yeah, I hope he does too, because he's super. Oh, he does. Okay.
See?
So
thumbs up.
Yep. So Steve Ehrlich, CEO of Voyager Digital. Congratulations on winning the best trading software for crypto. So how long ago did this start? This company?
Well, first, thank you so much for giving us the award. I've been doing this with you. How many years have you been doing this now?
I don't know.
6, 7. I won my first award as a company. I'm super excited. The team is actually really excited to win this award. A lot of work has gone in. We've been literally only in the market 2 years now, and we've grown tremendously. So there's so many things we're working on that really get us, get us excited. And the fact that we've won this award, the ability to showcase the platform to the Benzinga, family and the amount of people that are watching this and listening, that's awesome. So we're super excited about it.
All right. So if someone doesn't have Voyager, why should they download Voyager today, this week? What would you say?
Look, at Voyager, we make crypto accessible for all. We've brought a platform to market that allows people to trade in over 65 assets today and earn rewards on over 35 of them as well. So we make staking easy for people. You can earn rewards on your coins. We create wealth for the everyday person. This is all about crypto for all, bringing the crypto ecosystem to the masses. And we're doing a heck of a job in doing it. And if you don't have the app, get it today because you'll start creating wealth. I think Bitcoin's over 66,000 when I just looked, hit over 68,000 a little while ago. And you're going to look at the app now?
Yeah, well, no, I
should.
I should, but I also have some tweets coming to me. And one of the questions I have is they were asking about the Voyager coin. I think the symbol is VGX. And you just launched onto another platform. What's that mean, the VGX coin?
We have our own token, which is, for rewards. It builds a community. We're really excited about that. But what we announced yesterday was that the VGX token is now part of our payment system, the Coinify payment system that we bought in August that's now getting integrated into Voyager. A lot of questions about when we were getting integrated. The first step was to bring the Voyager token so people can actually use the token and pay for goods and services at over 30,000 merchants around the globe. It's amazing.
So now you can do that with the token?
You could actually use that token and pay for services at these merchants and we're working on a discount. So you'll get discounts at those merchants over time.
I would say Bitcoin now has become a store of value where you can exchange things with Bitcoin. Is that what you're hoping will happen with VGX?
Well, VGX is the core to our rewards program and how we get customer engagement, retention, acquisition. We use that as the core to our system. It's our homegrown token. So now not only can you acquire it and hold it for things within the platform for trading and investing, you now could spend it. So you get, we're trying to complete the entire ecosystem in crypto.
And just for fair disclosure, I am, as he probably is, a shareholder of Voyager, and I think I have some VGX. But, we here report the facts. I'm not telling you to buy or sell because I don't know anything. If I knew anything, I would be out in like some island, in TPD.
It's been a good couple of weeks for us between between Mr. Cuban and the Mavericks.
So
and
Voyager, Voyager is the exclusive crypto provider of the Dallas Mavericks. The U.S. stock has gone from like $10 to $20. And listen, I know what he's going to say. He doesn't look at the stock price. He knows you build a company and the price follows, right?
It's the only way to build a company. You build it and then everything else comes behind it. And it's all due to, folks like you guys, appreciate everything you do for us and our customers, our employees, investors, all that. So it's been a great ride. We've got a lot more to come.
Yeah. And I coined a new nickname for Steve Ehrlich. You know what it is yet?
Oh, no.
Yeah. Mentiest. Okay. Mentius. You can ask Mark Cuban about it.
We're going to have to answer that one later.
Mentius. Okay. All right. I'm handing it off to my colleague, partner, and really good friend, but he hates me in the morning because he gets up earlier than me and I get up later and he gets really frustrated. But his name is Luke Jacoby.
Okay. Woo. All right, guys. I'm going to give a little bit of a preview of what is to come again. This is the Global Fintech Awards. We host this day not for ourselves, but we host this day because we want users out there to know here are the solutions. Here's what's being built for them. Here's what's going to be coming in the next couple of years. So stay tuned, guys. Next up, we're going to be talking NFTs. We're going to be talking financial literacy. We're going to be talking automated trading. All these companies that we're going to be hearing from are the leaders in what they do. So if you want to stay on the edge of automated trading, you want to hear what comes next for financial literacy, how can you get better educated? Stay tuned. We are going to be hearing from the movers and shakers in the space. Without further ado, I do want to pass it off to a good friend of mine over at Schaefer's, Matthew Timbane. He's going to be taking us through a little bit of market education. So if you want to, we're learning about the tools today. He's going to be talking about the market itself. Matthew, I'm going to pass it your way, sir.
All right, wonderful. Thanks, Luke. As you mentioned, my name is Matthew Timbane. I'm a senior market strategist over at Schaefer's Investment Research. We've been in business now for 40 years, providing option trade recommendations, news insights, and free education to retail traders. I was previously a portfolio manager and a partner at a registered investment advisory firm. handling multi-asset portfolios, and I moved my way over to Schaefer's to really challenge myself in the options market and to dive extremely deep into this area. Like so many other retail traders now in the area, I'm here really, I wanted to be able to help them and be able to provide them with insights that they might not know yet, because we have the time. This is what we do every single day. So without further ado, we're going to kind of just quickly go through this presentation here. And if you have any questions, feel free to throw them in the chat. First off, we're going to look at a macro backdrop here kind of quickly, and then go into some sentiment and seasonality. And then I'm going to kind of just share some screens, kind of how we do it, how we're a little bit different than some other places. And then I'll throw out some trade ideas that could be coming up. Currently, typically I'd rather put trade ideas that are potential for the future than that have already happened, because, the idea is for you to make money as well. So you can watch these levels, see if they hit. So just to kind of pop this out to begin with, we have the NASDAQ 100 ETF QQQ Trust. It's kind of been trading along this whole price channel throughout 2021 since last year, really. But what really kind of spoke to me recently was we did kind of see it hit resistance level around 400. That is the peak call level for open interest, right on the dot. So, there's a reason why we're starting to pull back here currently, as we've had this massive rally. Now, I'm not too bearish, as we have seasonal tailwinds at our backside. I've been talking about this from at previous conferences and through Twitter, so you can go back and look. But I'd really be more looking at this for a dip buying opportunity if we do get a pullback, maybe down to around the 380, 370 range. These are, where two large put strike open interest levels are sitting, and they could act as support. Now, 350 is the peak put currently, which I don't really see us getting all the way there. But things could always change as markets develop. But as of right now, that's not an area I would look for, since we do have these seasonal tailwinds in Q4 and heading into the new year. I would really kind of look for maybe more of a mid pullback to that 370, 380 range to get a buying opportunity. Now, I'm not saying that we can't continue to melt up here like markets have. I'm just saying it's probably more prudent to take some of your profits off the table right now and let some of your winners still run until you can see a bona fide breakdown in those securities. Now, I also placed on here a 125-day moving average, which has acted extremely similar to 2014 through 2016 market cycles. So I haven't really seen this do this since then, where major indexes were finding long-term supports around those 125-day moving averages. So it's kind of unique to see that coming back into the markets again. So that would kind of be like an ultimate dip buying opportunity here on the Qs going forward. It's also near that lower end of that price channel, and it's something you want to continue to bet on as long as we don't break down. Now, I always like to kind of zoom out, when, looking at securities, because you're able to identify some levels that you might not have noticed before. And then in this particular case, I really wanted to kind of show how the securities or the QQQ specifically act around these round century level numbers like 300 and 200. As you can see around the $200 level, we kind of started getting some hesitation a little bit prior to it. And then, for about a year, it took to consolidate around that $200 level between 190 and 200, kind of it kept peaking out as resistance. So it took some time. That's could be what happens here again. Now, when we did get to the $300 level, it only took about 6 months to work through that, but it was volatile, and we had some great opportunities, long and short, during those 6 months. And we're probably entering a similar situation right now. Not to say that we can't just break up and move on out and up from 400, but typically it does have a tendency that it's going to want to consolidate a little bit of these gains, let the market kind of rest a little bit. But you're still going to find good opportunities. So it's nothing to be scared about or anything like that. It's something to look at as an opportunity. Now, I did leave the 125-week moving average on this chart, just kind of carried it over from the daily. And honestly, I was amazed myself. It has marked long-term bottoms since 2015 in the QQQs. So it's something that I'm going to keep on my radar and have set an alert for when you're looking really kind of how I said, you'll see support and resistance areas that you don't necessarily see, even when trading options, when you pull out to the weekly and monthly charts. So it's something, if we did for some reason ever get a move back down there, even though those daily charts and those intraday charts may look like, just horrible, you might want to be able to, place a few of more speculative bets at that time because you can really kind of see some upside. Now, why we have been bullish was strictly because the case within the small caps. We talked about this at the small cap conference. So, just quickly touching on this quick here, we saw that the Russell was kind of going through that typical year two bull market kind of consolidation phase where the S&P 500 and the NASDAQ wasn't. But what the small caps were doing was they were consistently finding support at the 200-day moving average. And in past cycles, it's either been the 200-day moving average or the 320-day moving average have been the optimal buying opportunities for small caps. And oddly enough, that 210 to 212 area down there, which was support, was also 10% year to date. And then 232 level, which was kind of resistance throughout the year, was plus 20% year to date level. Now, what got us extremely bullish was when the divergence finally ended in relative strength. It kind of broke out. We knew that we were probably going to break out to the upside. So now what we would like to see is probably a nice pullback to test that breakout level, but we would like to see small caps continue on in the rally, continuing going forward. This is the growth versus value relative ratio chart. I think it's important to know so that you know where to allocate your funds to. Right now, growth has actually kept going. So as much as people had concerns about interest rate rises, growth has still been outperforming. Now, it went through a consolidation phase throughout the year as value did have its moments this past year, but growth is back again in the driver's seat, and it now has broken out from those late 2020 highs. The one thing about it is I think people are getting over panicked about the interest rate rises. We are coming off a really relative low basis of interest rates. And as long as the Fed doesn't do anything crazy by upping interest rates by a full point to curb inflation, I think growth can still handle quarter point raises in interest rates when those happen possibly here in 2022. So it's not something that should be scaring you away from the growth opportunities. You should be looking at them as buying opportunities because people will panic sell a little bit even on a quarter point raise. And it should be just looking to allocate to those stocks that you want to keep going and holding in your portfolio long term that have high growth outlooks. Another ratio that I like to use is the high beta versus low volatility. It broke out of this huge 10-year range. We highlighted this last year, but where did it peak out? That's kind of where it kind of stalled out for during 2021. Now we're back above those highs. So if we are going to continue to have a melt up in the market, I would expect this high beta versus low volatility ratio to hold those that recent breakout. If it doesn't, that can mean that we're going to have like a little bit of a pullback. Could just be 5-10%, but it's be a nice little indicator to know where we're probably going within the next couple weeks to a month. Now we're at a fintech conference, so we should probably show something to a fintech industry or sector standpoint. So I have pulled out two ETFs that best encompass the sector in itself. We have the ARK Fintech Innovation ETF, and while it's not the perfect proxy for fintech in general, because obviously Kathy Woods makes her selections, but it's a decent proxy for what we have. Currently, it's sitting just kind of below that 10% year-to-date level. It is above the year-to-date anchored VWAP level, but it is still below that peak anchored VWAP level. So it's kind of just coiling right here while it's been holding this trend line throughout the year. So, there's obviously a chance that we can come back down, test that year-to-date break-even level and that lower trend line. But what we would like to look for a bullish activity specifically in fintech is a breakout above that plus 10% year-to-date level. And if you're more conservative, you might want to look for a breakout above that 361.8% Fibonacci extension level that came from the pre-pandemic highs to the March 2020 lows. That would be around $56, and that would kind of give you a nice conservative and definitive buy signal for the ARK Fintech Innovation ETF. Probably a little bit better of a proxy would be the Global X Fintech ETF, FINX. It's a little bit more diversified, still probably not the perfect kind of industry ETF for fintech in general. I think a lot of things are probably left out, but it kind of gives us a better idea. It found support recently at year-to-date break even. You kind of have this, inverted head and shoulders pattern that it kind of broke out from, came back to test those previous highs. And now we're kind of sitting here just above 10% year-to-date level, right at those highs. So if we break out above 53, it's probably bullish for the whole sector among fintech. It's kind of, certain areas have been struggling, certain areas have been extremely hot in the sector. This could kind of broaden the base a little bit if we see this breakout. So since we're an options firm, wanted to kind of just touch on this. Last Friday was actually the second largest volume day in terms of total option volume, with over 57 million contracts traded. Equity volume also set a record that day. But equity put volume was pretty low. So we're seeing a little bit of aggressive call optimism within the market in itself. The previous market high in this, and I do see the line was kind of cut off a little bit here, but the previous market high was in January 27th, 2021, where we traded over 60 million contracts trading hands that day. But what does this tell me? This tells me a lot of the retail investors that came in during the pandemic shutdowns haven't left, or the ones that have left maybe blew out some accounts, but the ones that have stayed have maybe grown their accounts and they're buying more now. So I think this is really encouraging to the do-it-yourself investors, for the people that are going to be using fintech products, trading themselves, instead of using advisors. Nothing wrong with using advisors, but I do think that there is a shift to a lot more investors doing it themselves, and it's totally able to be done. All you got to do is take the opportunity to learn the markets, and you can really do it yourself. This is one of the biggest reasons why I joined Schaefer's Investment Research, was to help the retail investors just do it themselves. So another thing that we kind of do that's maybe a little bit different than other places is we look at put call volume ratios in unique ways. The NASDAQ 100 components is for the buy to open put call volume ratio. So what we're doing is we're actually looking at the components, not the index itself. They are coming off a 7-year low where they ripped up to a 17th month high, and now they have obviously come back. They closed yesterday around 0.433. This has been a great indicator of marking short-term tops and bottoms. And what we really look for is we look for inflection points. So yes, we might be starting to round out right now, but we haven't seen an uptick yet. So that's why I haven't, looked at it as, we're in a bearish predicament just yet. We could continue to see a melt up here. It might not be over with because we haven't seen this uptick yet in the put call volume ratio. This is something that you can find quite often on our site through our Monday morning outlook, or sometimes even in our indicator of the week, which I'll actually probably talk about here in a little bit. But you can always go there. We're always putting this out, or I'm putting it out on Twitter, or our Schaefer's company is putting it out on Twitter as well. So, take a look out there. We're always trying to provide some insights to the retail traders. Like I said, we do some things that are unique. So we take basically a FANG ETF version of, or a FANG put call volume ratio of the FANG securities here. So we see that the combined ratio tumbled recently to 0.367 after yesterday's close. It's well off of its recent peak, but it still has lower it could push if the market wants to continue higher. But we are getting down towards the lower end of those ranges. So that's why we're a little bit more cautious here. And then finally, we created this meme index put call volume ratio with about 20 different securities. And it's got things like AMC, GameStop, Palantir, Robinhood, etc. in this. There is a lot of call bias in these meme names right now. But what really kind of stood out to me about this was I thought this was going to be the best indicator for marking tops and bottoms. And it tells me that it really isn't. What it is it's encouraging. This ratio doesn't really mark those tops and bottoms well. And it tells me that that these long premium buyers are more sophisticated than past retail generations. So we can see here that, they've actually had huge put volume near market tops and more call volume near market bottoms at times. It's about 50-50 right now, but to me, that's extremely encouraging for the retail investor that, they're not always on the losing end of the trades here against institutions anymore. On to seasonality. This came out last week in our indicator of the week that our quantitative analyst, Rocky White writes every week. And I thought it was interesting to follow up on some of the seasonality stuff I've been putting out there for the past month and a half, because it's really showing you what happens to the S&P 500 when it's up 20% through October. As you can see, it's not really a condition for an overbought market. It's actually a condition that says, Q4 is going to be probably better than typical years. We had 8 returns previously before the 9th year being put in this year with 20%. So of those 8 years, the average return was 6.23%. Now that's against every other year, which averaged 2.84% since 1950. So that's, a solid 3.5% difference between the other years and this type of year. So we still have these positive seasonal tailwinds, even though November's already been super great. We're going to want to continue to look for buying opportunities as we continue to head into year end. So using a least squares method, what we wanted to do here was we wanted to look at the last 10 years of the most familiar chart path. That way you're not just getting things of 20% or better. We're trying to look at something that is very similar to the trajectory that we've been on this past year. And again, this came from the indicator of the week. And the most similar year was 2013, and that went on to gain 5.13%. But as you can see, the average gain is 4.13%, and that beats the average return of all other years since 1950, which is 3.08%. Excuse me. I'm battling a little bit of a cold, so I'm going to put a cough drop in. So even though it's not extreme, it's still 1% better than previous years. This is fourth quarter by seasonality, and we kind of broke it down into industries. I've showed this at previous conferences, so I'm not going to touch on it too much. Sectors and industries that still stand out to me are industrials and financials. Financials haven't actually had their seasonal drift that they typically do in November. They've actually been negative on the month, whereas they're usually fairly positive. So those are areas I would probably stick with. Tech still does well through fourth quarter. But the big thing that stood out to me was alternative energy. And, we've seen massive rallies in that. Now, that is at the bottom of the list because the percent positive is the lowest. But when it does rally, it rallies harder than anything else. So we actually had one of those years where alternative energy is just skyrocketing in the fourth quarter, even though it's typically not the greatest quarter for it. So how do we do this? Well, we do a few different things here. We have moving averages that we quantify, and we look for significance within the last 3 years. But then since we compile all the option data, what we're looking to do is how is this going to affect the past call and put returns? So we're able to mark what moving averages have provided some significance, and then we're able to go back and look at those returns so that we can quantify this and give us an edge. This also kind of tells us what might not be a good buying opportunity too. So even though the chart may look really good, if we're seeing something like, MetLife Insurance here, where the expected call return is minus 79% in 10 days and minus 100%, we might not want to take that opportunity on a call trade. Now, MetLife probably isn't a trade that we're going to take because it's not usually as volatile, but it's a good example. Another good example is Boeing. Just from the other day, yesterday, I believe Boeing was trading around 227 and failed. Now it's down around 221. Well, what was our bearish filter saying on yesterday's screen? It was saying once Boeing reaches that 120-day moving average, it has a tendency to fail there. And then the expected put return was 180% on a 10-day and 295% on a 21-day. Now, you're not going to get that necessarily, but we have the odds in our favor, which we feel that gives us a little bit of an edge unless things are fundamentally changing the characteristic of the stock. We can understand it a little bit better than a lot of people out there. This is probably one of my favorite screens. Stocks trading near their last significant call strike or near their peak call strike. And the reason for this is peak levels can be resistance. And then if you break through those peak levels, you can have those gamma squeezes where you get those plus 10% moves in the stock, plus 20% moves in the stock, and the thing just keeps squeezing. So that's exactly kind of how we use it. One thing that we kind of, one security that I noticed on here was HUT. You can kind of see, I believe that did break through its strike price yesterday, and that's why you kind of see it continue to squeeze. We might be seeing it pull back today, I believe, when I was looking at it earlier. But these are the types of things that we look at that are a little bit different. So we're constantly trying to find things that are trading near these levels so that we can play puts, or if they break out and break through them, we can get in on that squeeze. Conversely, you can use that for put strikes as well as support or as a potential delta hedge sell opportunity. This is where you get those flushes. So if you do break through that peak put support level, we often get those flushes where you can see a 10, 20% move very quickly to the downside. This is something relatively new that we just started doing over at Schaefer's. We've always looked at 10-day buy to open ratios and put call volume and 50 days, but we've quantified the data now on how it's acting when they're within a certain percentile basis and meet certain other objectives. So this is actually something that has piqued my interest. I was looking at it earlier today, Redfin. It is, and I almost put it on here for a trade idea, but, it's sitting in its 96th percentile currently. But what does it do when it's in its 90th percentile over the past year? It's actually outperformed, and it's on average risen by 17.83% for the stock. So that's a candidate for a long call option in our eyes. And then we also do it with the 50-day. 50-day might be when we're looking at it not from a short-term standpoint, but from a little bit longer-term standpoint, making a call option. And then we also do this with call puts as well. So conversely, we can do this with call puts and then look for downside potential candidates that we can, long some put strikes on. Another thing that we kind of like to use is the low IV, high price here. What we're looking for is things that are trading near their 52-week high that have relatively low implied volatilities. And then we're looking for the signals. So we're seeing how many times has this signaled in the past. We're not seeing this, you're not going to get signals of like 20, 30 returns because we're only looking for like recent signals. But, once you get past 3 to 4, you got some solid signals here on how this momentum keeps carrying the stock prices. So these are the types of things that we're constantly looking for. And then we also combine it with our volatility scorecard here, which I'm going to talk about next. Volatility scorecard is something that we've shown here plenty of times at Benzinga. We update this weekly right on our website. You can go to I believe, Market News and go in there and volatility scorecard. It's going to give you the top volatility scorecards that we publish each week on Monday. Really, I'm not going to go into this too deep because it can get a little bit complex, but in simple terms, it tells us how often a security of those underlying options have historically had underpriced or overpriced options based on their ranking. And then we rank them against all other securities as well within that optional universe. We show typically from level 100 down to about 80. But if the list is too long, I think like this week, the volatility scorecard took tickers from 100 down to about 95. But so feel free to go out there, check them out weekly. They usually provide you some good option trading ideas. So on to the trade ideas. We have 3 of them here for you today. Square has recently had, not the greatest earnings reaction. It's trading lower in sympathy with PayPal as well. But there is a chance that we could be approaching an area where it's tradable. We're approaching this lower trend line in a symmetrical triangle. It's kind of almost even flaggish if you kind of look at it from this lower point down here. Year-to-date break-even is around 221. So this area could easily hold. What we could see is possibly maybe a breakdown and then a quick snapback, or we could just maybe hold this area. So it's something I'd be looking for. The volatility scorecard on this is 71. Options are priced in the 21st percentile, and the buy to open 50-day put call volume ratio is in the 84th percentile, with short interest percentage of float at 8.41% and rolling over from year-to-date highs. So there is some negative sentiment building up in Square, and that usually is what we're looking for to produce the most bang for our buck on call options. Also, the second largest put open interest is at this 220 strike level. So peak call and peak put are alternatively right now at 250 strikes. So you might have some upside gains capped, but if you did get this pushed down to that 220 level, it's probably worth the gamble to take a shot on this on the long side. Palantir Technologies just reported today is not trading very well, but it could be a short-term put strategy here down to some of these levels. You could have year-to-date if this breaks down right here. Year-to-date break even, you could target on a short-term basis, or even coming down here to this $21 level, which is minus 10%. But in the longer term, I'm definitely more bullish on this. So I'd watch out for the fake out. Currently it's oversaturated in calls, which is the reason why we're probably getting a really adverse reaction here as well. But oddly enough, where did it stop at today? It stopped at its IPO anchored VWAP position.
And hey, Matthew, I'm getting word that we're going to have to wrap up, unfortunately.
Oh, that's good.
I was ready for this one too. Palantir is a stock that I like. I haven't been in it for a while, but unfortunately, I'm getting word from producer Rohan that we got to keep moving.
Nope, no problem.
What's up with producer Rohan? I don't get it. Okay.
Yeah. See, now I guess we're just gonna have to go to your site to figure out what happens with Palantir.
What site? What's the site?
Will you give us the site? I'm guessing shapersresearch.com.
Yep, exactly. See, that's a gratuitous plug is what we call it in the media space, Matthew. So thank you very much for coming on and explaining what you guys do at Schaefer's.
Thank you.
How many years has Schaefer's been around for?
Schaefer's been around for 40 years now. We've celebrated.
Holy moly. 40-year ding. Give me the 40-year ding, Rohan. Thank you. All right. Have a good day, Matthew. Thanks for coming on. We do
have a good one, guys.
You too, buddy. Okay. Schaefer's. I mean, they've been around for years.
40 of them.
40 of them. Yeah. And guess how old I am? 43. So they started when I was
3.
Yeah, 3.
But Jason was actually the second employee, number 2 employee at Schaefer's.
At 3, yeah.
Yep.
All right, so we are moving right along to best alternative investments. And we got a huge crowd outside here. It is crazy. There's in this little area, there's 600 people watching these awards. So we haven't given any credit to the crowd. We got complaints about that. So the in-person crowd here, we're excited for. This category.
Shout out to the fire marshal, by the way, who's helping us to keep this contained, letting us keep doing our thing.
Yeah, thank you, Fire Marshal. So this is the best alternative investments category. Luke's going to announce the third place winner. But what I want to say is I've been looking at this area, and I've invested almost in every single one of these ones. And there's a lot of them. If you guys want to hear about investments, alternative assets, you should check out our weekly show that starts next week. I'm on it, and you get to track my real investments. I just put in 5 digits, which is pretty good, into one of these alternative investments. And I'm doing that every other month. So here we go. Best alternative investments category for Luke is going to announce the third one. Go ahead, Luke.
All right. Drum roll, please. In third place, 2021 best alternative investment, we have Vinovest.
That's a wine category.
Yeah, investing in wine. This is a new category for us, new asset class, something that was not accessible for the individual investor previously. It's big this year. It's going to be even bigger next year.
Okay, in second place, I personally have been invested in this company for a while. Using their platform is, stop that drum, Ground Floor. It's a real estate portal, and you can get it in the ground floor. There you go.
All right, and winner, first ever alternative investment category here at the Benzinga Global Fintech Awards is Alumni Ventures.
It was my experience and frustrations as a private venture investor that led me to start Alumni Ventures, with the goal to bring smart, simple venture investing to individuals and family offices.
excited to bring on Luke Antel because we got two Lukes here. We got a Luke over here, a Luke over here. So, Luke, was that voice you annotating about Alumni Ventures?
That was not me. That was our founder and CEO, Mike Collins.
Okay, I've never said someone has a similar voice to mine, but when I heard that voice, it sounded like me in the beginning, I swear. So
it's a great voice. It's a fantastic voice. And you and Luke have been doing a great job all day.
It's a lot of hard work, but someone's got to do it. Okay, so what does Alumni Ventures do? Why would I open an alternative investment with you guys?
So we are really democratizing the venture capital asset class for individual accredited investors. And we provide actively managed venture portfolios that really gives access into an asset class where previously it was only accessible to really large institutions.
Got it. So what are some of these like investments in your portfolios?
Yeah, so we offer a diversified portfolio of funds. And in most of our funds, you can get a portfolio of 20 or 30 companies diversified by stage, sector, and geography. And these are companies that we are co-investing alongside other really well-established venture firms, ones that you read about in the headlines. And we're bringing that access to the individual accredited investor. We talk a lot about our persona, the heart surgeon in Des Moines, who has made a lot of really smart decisions with their money over their career. And now they can access the venture asset class through Alumni Ventures.
What round are they getting into these startups that you're investing in? Is it seed? Is it Series A, Series B? What is it typically the level that you're getting in at in these investments?
It's the whole gamut. And we think that that's the right way to get into the asset class. Traditionally, if you've been in the asset class, and by the way, of the 10 million accredited investors in the United States, only 3% have ever made a venture or startup investment before. So you can understand how nascent this industry is. It's just completely untapped. And many of those who have done it already are doing it in a suboptimal way. They're hearing about their brother-in-law's juice bar down by the beach and participating in an angel round, right? We are offering professional venture capital. And we've got 150 employees. About half of them are professional full-time venture investors that all work for our company and are coordinated in deal sourcing and vetting and finding access into great companies that, as I said, can be found in early stage, all the way through growth stage and pre-IPO.
That's awesome, man. I mean, that's a serious amount of due diligence that you guys are doing. Alumni Ventures. So if you're looking at alternative investments in the venture space, Alumni Ventures is one you have to look at. I'm excited to check out the portfolio, and it's almost like getting an ETF of startup investments. So thank you for coming on, Luke. We appreciate it. And most of all, congrats on winning the Benzinga Global Fintech Awards Alternative Investments Award. So thank you.
Thanks so much.
They cut him off, but he did say thank you. Producer Rohan, let's get a little slower with the boom, boom. Okay. The boom, boom. Got a boom. Okay. So if you're listening to the show right now and you've been tuned in, give a like, give a share, go to your social media, go to your, I know that we're streaming live, I think like on the Boston Globe and a few other places. So it's not just YouTube, it's everywhere. And for our, on-site audience here, thank you guys. Yep. Thank you. And what was his name? Christopher and then Ted, the fire marshal person. Thank you for accommodating everyone here.
And Jason, it was nice of you to sign those autographs for the fire marshal.
That was ridiculous that he recognized me. Yeah, I got recognized. And so there's about, I don't know, I want to say 300 to 500. You said 600. I don't know, 300 to 500 people that have been in and out. And then today at Stout Grand Central at 5:30 to about 8 o'clock, we will be there. If you want a flight to Detroit, we have we got the Benzinga Airways. So we have a private plane leaving at Teterboro. So you can come to Detroit. There's one seat left on the plane. So if you want a free ride to Detroit, but you have to sit next to producer Rohan.
Yeah. And let me just say this.
And he just smiles at you the whole time. Like, this is producer Rohan, right?
He just stares intensely.
Yes, like this. So that's, if you want to, I don't know if you want to write. What do you want to say?
But if you guys are in the New York area, you can't afford to miss or hang out at Stout. 5:30 Eastern, Grand Central. I mean, it's going to be the true deal makers, movers and the shakers of the space. So yeah. If you've been cooped up for the past year and a half, like we have in Detroit, Come out. We're going to have deal makers there. We're going to be talking about the future of our business.
If you're in Philadelphia, New Jersey, I don't care where, free drinks, free food, but come make a deal. Come find your new deal. My biggest deals happen in person. So I don't know where you are, but we're going to go 5:30, 8:30, heavy on the deal making, heavy on the socializing, first time in a while. And that's about it. So let's move on to by the way, our hashtag is BZ Awards. Congratulations to all the winners so far. We truly appreciate you guys and truly appreciate the sponsors that allow us to put on this event. It's really awesome. I mean, you don't see us doing too many commercials and, taking breaks for 3 minutes, showing ads. No, because this is about you guys, the winners
More
today.
action-packed than the NFL. That's our tagline.
Exactly. Most innovative capital markets. We are going to start right now with the third place. Give me my drum roll. Okay, stop my drum roll, Aaron. Roofstock. Roofstock. I'm another user of this one. Okay. In second place, we're going to go to my man Luke Jacoby to announce the second place winner of the most innovative capital markets at thefintechAwards.com. Go ahead.
Second place, we have Trillium Labs.
Rare. Okay. And for the most innovative capital markets at fintechAwards.com, T0 Group.
All right, we have Alex from T0 here with us. Alex, I like that song, but I'm even more glad that you're here to accept the award.
Thank you so much. I am so honored and humbled to accept the 2021 award for Most Innovative in Capital Markets on behalf of T0. Thank you so much, Benzinga, for this remarkable acknowledgement and for the opportunity to celebrate our financial technology leadership in capital markets. This award truly summarizes who we are as an organization, what we do, and where we are going. Our mission is to democratize access to private capital markets and utilize innovative technology, specifically blockchain technology, to establish a more efficient, accessible, and transparent Wall Street. We've made great strides in 2021 and look forward to further innovating with the upcoming launch of our unified investment platform that merges our private digital securities and cryptocurrency trading user experiences into one, with the addition of public stocks and NFT securities. Now, before I turn it back to Benzinga, I would like to recognize my colleagues here at T0 for their contributions. We would not be here today without their hard work and dedication, and I am so pleased to accept this award on their behalf, and I look forward to more accomplishments and successes in the years ahead. Thank you so much.
Awesome, Alex. And let me ask you a follow-up question too, if you don't mind. Just tell us a little bit about T0 and how the everyday user interacts with the platform. It sounds like you're moving out of some of the digital assets to include other more mainstream, more traditional assets. But just tell us a little bit more about how the user interacts with T0.
Of course. So T0 enables mainstream investors to invest and trade shares of private companies. For example, think of like real estate funds operating companies as easily and efficiently as they invest and trade shares of any publicly traded company. Now, separately, we do have a crypto app. It's called T0 Crypto app, which is a crypto trading platform that allows investors to buy, sell, and hold, I believe, around 15 different coins, with plans to support more in the near future.
Excellent. Awesome. Well, thank you, Alex, and congratulations to yourself and everybody over at T0.
Thank you so much.
All right, everybody. I am going to keep us moving. If you are just joining us, this is the 2021 Benzinga Global Fintech Awards. Next category, financial literacy tool, best financial literacy tool. And this was an interesting one because we got an incredibly wide range of submissions. We had chat rooms, we had courses, we had technologies, we had brokerages. I mean, we had the fintech world show up for this financial literacy tool category. Happy to announce in third place, they just announced a deal last week, Finimize. Second place, best financial literacy tool we have, Go Henry. And winner of the 2021 Benzinga Global Fintech Award, best financial literacy tool we have, Trade Out Loud. All right, everyone. I'm joined with Anka from Trade Out Loud. Anka, congratulations on winning your Benzinga Fintech Award.
Thank you so much. It is such an honor, first of all, to be here with all of you guys and to be recognized for financial literacy. This is just incredible. So I do appreciate this award. I feel so humbled, and I'm trying to do my contribution to the world to try to spread the word about trading and about how you can earn an income or supplement your income in trading. So thank you so much. I am so humble, and I truly thank you for this award.
Awesome. And can you tell us a little bit more about Trade Out Loud and what motivated you to get started?
Okay, so Trade Out Loud is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in any asset, in any market, in the futures market, stock market, cryptocurrencies, Forex, any kind of asset. And we have been around for more than 11 years. And the company was founded in Detroit, Michigan. Now we're in Boca Raton, Florida. And we have been actively educating individuals of all asset classes how to trade. And also we provide services that back up the education for all of our courses. And how we got started, well, being in Detroit and back in 2008 and 2009 when we had the financial collapse, there were a lot of unemployed individuals from the big motor companies, and a lot of them were my friends, and by word of mouth, I started helping them with their investment to try to supplement their income from the market. And that is basically how Trade Out Loud started, pro bono for about 2 years. And then I put together the company and started helping other individuals see the light at the end of the tunnel, which is literally not easy to literally walk through. But and all in all, you know, we're very happy with our results. We're a boutique company. We have our undivided attention to all of our clients and all of our members, and we have our their best interest at heart.
Awesome. Well, congratulations again.
Thank you so much.
All right, everyone. I am going to keep us moving to our next award. It's Best Financial API. So if you're an individual investor out there, you might not know what an API is, why you should care about it. This is basically the processes that happen in the background that make our markets, that make our information work, right? You see something on your screen, there's probably an API behind that information that is getting it in front of your face. Without further ado, in third place, 2021 Benzinga Global Fintech Award API, we have Airbase. Second place, best API, good friend of Benzinga, DriveWealth. And the winner of the best API category here at the 2021 Global Benzinga Fintech Awards, we have Apex. All right. And before we keep moving on to the next category, I'm going to give one more little tidbit of information. Our first and second place for the API category, DriveWealth and Apex, they are two of the companies that have really paved the way to have a lot of these new brokerages. There's been a lot of entrants in the brokerage arena over the past several years. I mean, dozens since we first did this event 7 years ago. Apex and DriveWealth, those are two of the companies who are really making that possible. If you guys aren't familiar about the technologies, but you sort of nerd out about this stuff like I do, go ahead and look them up, check them out. All right, last award that we are going to do in this segment is for the best automated trading software. Several companies apply for this category. We have the final list makers on the screen right now. In third place for best automated trading software, we have MetaTrader. Second place, best automated trading software, we have Winjit Technologies. And the winner, best automated trading software, again, this is a new category, new to 2021. This is not something that was nearly as abundant for the individual investor years ago. Octopus Wealth.
Octopus identifies and evaluates good trading opportunities, so you can enjoy the benefits of AI-based investing, even if you're not sure how to navigate trading, but are willing to invest in technology that will do it for you.
All right, and I am joined by Abdul Kader from Octopus. Congratulations on winning your Benzinga Fintech Award.
Hello, greetings from here. I'm Abdul Kader Abdi, the co-founder of Octopus Wealth Fintech. And thank you very much again, Benzinga, for awarding us as the best automated trading software. And I'm as well sending this dedication to my team, Octopus team, that they are based currently in Cyprus, and to all our trusted partners around the globe. And thank you again. Thank you very much.
Absolutely. And before we let you go, let me just ask you one follow-up. But just tell us a little bit about what Octopus is and why users should get involved.
Well, Octopus here, our mission is to simplify the trading. So what we created here is AI machine learning. Basically, we simplify to the investor. If, for example, client doesn't have any experience in trading, they simply need to subscribe to Octopus Wealth Fintech, and we do the hard work. So we can invest in stocks, in indices, in FX, and soon we're going to be launching as well our AI solution for the cryptocurrencies.
Awesome. Abdul Kader, thank you for joining us, and congratulations again.
Thank you very much. Thank you very much. All the best. Bye-bye.
All right, take care. All right, guys, I am going to pass it over to our good friend and editor here at Benzinga, Justin Roberti. We're going to be talking NFT. What's going on? Welcome back, sir.
Welcome. Good to be back. Thank you. Exciting show. Yes, we're going to talk about NFTs today. We have a great panel lined up. Very excited to have the conversation. It's been a pretty remarkable year for NFTs.
Yeah, I mean, we couldn't do a fintech event this year without bringing the word NFT in. I mean, there's a lot of firsts this year. NFT is probably a first. I bet that we didn't have a ton of NFT content, if any at all, when we did this last year.
Sure. I remember a couple of years ago, for most people, they were still somewhat novelties. And I certainly wouldn't, I myself wouldn't have predicted that they would compete with Bitcoin in terms of worldwide notoriety, even among the outside the crypto sphere.
100%. All right, Justin, why don't you take it away?
Okay. Welcome. So I'm going to introduce our panelists very quickly. We've got Jordan Freed from NFT.com. We've got Avery Akineni, who is president of Vayner NFT, and Alex Fallon, who is CEO and co-founder of Rarible. Welcome, everyone.
Hi.
Hello, everybody.
Thank you.
So, and Jordan, I also have you down as CEO of Immutable. I want to give you your proper title, whichever one you prefer. But very, very good to have you all here. We spoke a little bit yesterday, and that was great. I mean, obviously, it has been an interesting year and a productive year for NFTs. I've read just a little bit of press about it. Every now and then it gets a passing mention. No, it's pretty funny. Honestly, as I was saying just a second ago, like my first NFTs 4 years ago were 2 crypto pigs through Cryptoinks, and I had no idea that I was interacting with. I thought of them as these little novelties in the crypto world, non-fungible and all. What has happened, Alexei? Why don't you explain it for us? You've got that point of view from Rarible. Where did this massive explosion come from? Certain people, including your co-founder who I interviewed, obviously did see it coming. I don't. That means nothing. I've been wonderful at missing all sorts of trends up till now. But what happened to not only get such attention, but get such mainstream attention?
Mm-hmm. Yeah, so this is all about the technology itself, like a blockchain and NFT. So NFT, it just can represent some rights on the blockchain for different type of content, and which is what is like great about NFTs. They actually on a standard level, on a technology level, they contains like media, any kind of image. Usually it's like image or video or like audio. And for us, for Rarible, for me and my co-founder, it was pretty obvious that when you have some media, it's much more engaging for people to interact with, rather than just DeFi or like Bitcoin or other crypto, when you have just number. So it's just the money and you can't do much with it. But if you have some visual, it's lots of different other use cases. And back then, when we founded Rarible, we just tried. So you never know what kind of use case will be popular. So we end up like launching this very broad open platform to everyone to like mint and experiment with NFTs. And then like crypto art emerged. It's just images, JPEGs on the blockchain. So people really this use case, and there is like different use cases, different levels of adoption. Like crypto art was big and still big. People just love to buy some good art, like beautiful, aesthetically beautiful things. After this, it was like first wave, like next wave. It's the big one is a PFP. That's profile pictures, 10K collections. This is more like on the intersection of just a community and value, like a ticket to be involved in the community. Plus, it's in some sense financial asset. It's just asset itself. You can trade it, and a lot of people just trade in them. So yeah, this was so far this is the most popular use case, the biggest audience there, the biggest volumes there. And yeah, so that's why, and this is just the beginning, because all this media formats, they are really really like mainstream. So a lot of guys all over the world, they would love to be involved in such things. That's why, yeah, now we're seeing lots of huge IP holders, such as movies and like Marvel, Disney, all other guys, celebrities. They trying to move to the blockchain and launch their NFTs. And this is all like in the intersection of the crypto world and mainstream world.
Avery, in terms of I know that you are working, you've got VFriends. I know that Vayner NFT, of course, is also launched a fine art platform with a couple of artists not that long ago. I ended up writing
Artificial, yes. Thank you for covering that.
Oh, sure. Yeah, I did write about it, actually. What do you see as the magic here? One thing that I have absolutely noticed, especially about the generative projects, is that from in comparison to like, it seems like the inheritors of hype in this industry, like nobody is hyping better than generative and NFT projects right now. I don't mean that in a bad way. As a lifelong communicator, I think that's a wonderful thing to be able to hype your audience. But there's a lot of excitement going on right now on Discord servers and so forth. Where is all this wild enthusiasm coming from, and how do you play into that with VFriends? You've been consistently a top 20 project for some time now, so I'd love to hear your perspective on that.
Yeah, absolutely. So I think where's the enthusiasm coming from? I think, Alexi did a great job sort of summarizing that this is coming from a bunch of different directions. It's art, it's sports, it's collectibles, it's community. And the community is still relatively small, but super active and super engaged. You just referenced Discord servers, which we know are going off 24/7. And I think we're starting to see more mainstream adoption driven heavily by people of influence. So, using Gary Vaynerchuk as an example, Gary's brought in quite a few people into the NFT space, people who are fans of his, who, wanted to engage and interact with Gary in a new way, and NFTs empowered that. Through the VFriends program, you, as a token holder, you actually get access to a 3-year conference, and we've tried to create different experiences and, reward the community for holding on and for being a part of our community in different ways, whether it's like our Halloween drop or, special access to Gary, first access to different pieces of information. Those are the kinds of things that we designed as part of that VFriends program. And I think, Gary's certainly a well-known person, but when you look at what like more mainstream celebrities and athletes and artists and celebrities can do to bring their communities into this space, it's, the potential is quite significant, right? When we see, major names leaning into this space, it becomes super exciting. Folks like Jay-Z or Reese Witherspoon changing their Twitter profile pictures to NFT projects creates a lot of excitement. And I think when those folks go to launch their own NFT programs, we're going to see, millions of new folks joining into the space. But I think right now the excitement is coming from, things that folks love in real life, entering the digital space and having a new way to engage with the things that matter to them.
Mm-hmm. I mean, it is amazing. Certainly, it's attracting a lot of influencers or people with any modicum of fame from outside the space. I mean, Gary V has, been able to leverage the relationship that, for the most part, I think he already had with his audience, and then sort of extend it. So that was a pretty like a pretty organic transition for me. Whereas there are other people that I never would have expected to see NFT projects from, like David Lynch, who I love David Lynch, but he hates the small screen. So now he's doing this mostly mobile thing with Interpol of all people, which was interesting. And Quentin Tarantino. I've interviewed everyone from Pierce Brosnan to the Tiger King about their own NFT drops. There'll be Joe Exotic over the past year. It's been an interesting place to kind of Ja Rule. That's another one. It's an interesting place to jump into. What do you think all of these influencers and celebrities coming from outside of the space are doing for the NFT space, Jordan? I mean, do you find that this leads to sort of a broader base of retail consumers getting involved, taking it beyond the crypto sphere? Maybe that's why it's such a big phenomenon right now, or how do you think, is it helping, or is it a distraction, as I think some people might consider it to be?
Yeah, I think it's a really big positive for the space, and it's not just for NFTs in particular. It's for the larger crypto and blockchain ecosystem. I think that there's been those in the know. It started as a very small, close-knit community that's now exploded, where we're getting 20,000 plus people at conferences in Bitcoin Miami. We're looking at NFT NYC, an entire week of events just curated and dedicated for creators and amazing people like some of the organizations here in the space. Avery commented on it. Changing profile pictures, that's the start. More eyeballs is never a bad thing. I think where this starts to get interesting is you don't, a lot of these influencers don't want to be copycats. They don't want Me Too NFTs. So I think the first wave of these NFT collections, we saw a lot of NFTs that really lacked utility. I don't want to call anyone out by name, but they were quite literally videos of like YouTubers doing funny things that someone bought, and someone's caught holding the bag in that particular case. Where you're seeing NFTs move towards is, the right to be part of an inner circle, like a membership, the right to attend an in-person event, Perhaps it's access to a new virtual environment, or in some cases, it's like literally a piece of ownership of a piece of land in a virtual world, in an MMO, like an MMORPG, massive multiplayer online role-playing game, or we really see a lot of excitement towards moving towards a lot of those utility use cases. I think a lot of that's going to be driven by some of these new creators that are building for it. So art for the sake of art is good. But art for the sake of art with also some utility attached to that piece of art, we think is even better. So where NFTs are today are these, Alexei mentioned, these profile picture collections. Awesome, really cool first wave of use cases. But when we look at, like, I think that's the entry point. Where I think this evolves to is literally everything of value that we have in the physical world, whether that's, the title deed to the authenticity certificate of the watch on your wrist, or the title deed to your property, or your season tickets at your favorite sporting venue. We have a lot of excitement. We're very excited about starting to see a lot of those physical, intangible, illiquid assets coming on Ledger, on chain, and building liquidity around those. And I do think those influencers, those people with followings, will help drive us in that direction.
So you're bullish on the metaverse. You sound interested in this idea of metaverse space. I just wonder, well, for one thing, I mean, full disclosure, I'm actually in a small indie team that's developing an MMO, and we've been developing it for 6 years. So when I hear some of these projects,
I love it.
In UE4, no less. So, which is what a lot of people want to use. When I hear these NFT projects come along and tell me that they're going to put together a multiplayer game, an MMO or a MOBA or something, I'm kind of like, oh, are you?
Yeah, good luck.
What's your timeline for that? I'm interested in hearing about it. Not that it can't be done. Someone will figure it out for sure. Obviously there's huge utility in gaming. I mean, all of crypto owes its roots to gaming, as far as I'm concerned. Well, a number of different places, but without World of Warcraft gold, I don't know that there would necessarily be crypto today without in-game currency. So, why start with why are we starting with pictures on the page? Why are we starting with these generative projects and profile pictures and so forth, when there are these vast use cases? I mean, I've seen some really impressive stuff that's already rendered and possibly in a working alpha stage as far as metaverse goes. I don't know, what do you see as the next breakout? Because truthfully, like I said, I'm a very bad prophet. If I would not have predicted that little pictures would be the first things that would really make it huge, since there are use cases there for gaming and, well, so what do you think is next?
Yeah, it looks like, I can jump on this. I guess the games is really close. A lot of games are being in development right now, and we will see in 6 to 12 months different launches, play to earn. Almost all the games, like blockchain games, are utilizing NFTs. Plus, there is several AAA games, big one that already exist, that are gonna introduce NFTs inside the game. So it's both directions, top down and bottom up. And then it's games definitely we will see next on the market. Then, as NFTs are forming communities around them, usually it's all about the community. It's all about social thing. So yes, we will see a lot of different use cases by adoption in the social networks. All the major social networks are working on NFT adoption right now. But there's other things I will leave it to other guys.
You don't want to make any predictions for us? I'm here to try and drive you into making prognostications that you're not sure about, Alexei. we all want to know what people are thinking. In terms of your project, Avery, you have an interesting path because you've already got something that it has maintained value. Well, first of all, it has established value because Gary Vee has been doing seminars for quite some time. Now you've got sort of a new critical path with a new series of seminars that are specific to holders. So it's an interesting use case. Why don't you tell us about where you're going with that?
Yeah, for sure. Well, let me speak a little bit more broadly because, VFriends is one thing, but there's so many different projects. And, as Vayner, we've spent the last year really educating ourselves on the space and building relationships with amazing folks like, Jordan and Alexi's teams and many others, because we think that there are innumerable use cases for NFTs. And to answer why people care about the profile picture projects, I think because of the community angle and because of the future utility. And what I think that you will carry forward from that type of behavior, I don't think, adjective animal projects are going to be the future of NFTs at all, actually. I think that, they're a bit of a phase right now that's working at the moment, but that's not the future of NFTs. The future of NFTs are, providing utility and, engaging with consumers and connecting consumers and things they love in a new way, whether it's access to games, whether it's, first product drops, whether it's using this as your new CRM system. And I think that what you'll see is increasingly mainstream folks coming into the space. Jordan touched on the fact that, there will be a significant amount of adoption driven through major platforms like Twitter and Facebook and Meta and Coinbase, who are all going to bring in millions of new folks to the space. And I think that what you'll see there is some element of art and collectibles, which are the things that have been working already, but more importantly, NFTs that get you access and have some inherent utility. I think that's where the space is heading, is NFTs unlocking things, providing value over time. Yes, allowing access to communities and potentially even ways that those communities can interact and get fan club privileges, I think is going to be something that we see a lot of in the future as the space matures beyond just profile pic project, because you can only really have one profile picture anyway, and you can have many NFTs in your wallets.
Mm-hmm. Well, I think it's interesting. That's why I thought the driving towards seminars was interesting, because it's something that another part of your organization already has an established track record doing and
Absolutely.
doing well.
And I think it could also be merch, right? It could be merchandise. If you look at what the Hundreds team has done, obviously they're an established streetwear brand and they've launched their NFT program and, have provided access to things like parties that they threw just last week in New York, merchandise, special, even food, those chicken sandwich things, and I think they'll continue to deliver value to their community. I think they're probably one of the other leading kind of mainstream folks who have come into the space and launched something new.
Very interesting. I've got a question coming up, about using Suku for NFTs. Let's broaden that out a little bit more and say, we'll go back to Jordan again. There have, of course, been a few fakes, to Avery's point, that have gotten a fair amount of press every time it happens. Buying a fake ape or something is disconcerting, to say the least. It's disconcerting for the whole industry. Of course, blockchain is already meant to impart transparency and the reliability of an indelible record. In theory, these platform agnostic NFTs should already be fairly secure. How much do we need to tend to third-party verification, especially if, as Avery was alluding to, what we've got right now is functioning in a lot of ways like an art and collectibles market?
Yeah, if you look at interesting, so I mean, kind of an extension to your previous question, the metaverse, we've already been spending an increasing amount of our times online. This wasn't an NFT per se, but if you saw the Gucci bag that sold for $4,000 in Roblox, literally not an NFT, which I think kind of kills the whole purpose. There's a centralized game maker, someone behind the platform. Who knows how many other Gucci bags like that can be created by them. Again, you kind of brought up this point, Justin. The value of doing this on Ledger on chain is how many Bored Ape Yacht Club tokens are in that collection. You know how many CryptoPunks are in that collection. You know how many Women of Wonders are in that collection. It's just, it's really cool to see. It's transparent. That's sort of the ethos of where we came from in crypto, right? Crypto is so reactionary to the 2008 financial crisis. All of a sudden, here's this thing called Bitcoin. There's never going to be more than 21 million of it. Let's run towards that direction. So that's kind of built into the tech, this whole implication of or this idea of scarcity. It's so opposite of what we have happening in the macro economy right now, the Fed having, one of the largest balance sheets in the world. So I think it's really important to be careful. First, to answer your question with fakes, to kind of get to the consumer use, you can check the ledgers before you buy. You can literally look up the token IDs, make sure it's part of the smart contract, part of the collection, make sure that what you're buying is in fact a real. And if you don't do that, or if you don't know how to do that, ask a friend. There are tutorials on YouTube for how you can do that, but you need to proceed cautiously. We're in 1994 of NFTs, or even earlier. I would even say 1992 or 1993. You've got to go to Etherscan. You've got to take on the Ethereum network. You've got to do the equivalent for Solana NFTs. And buyer beware. Make sure you're buying something that's real and authentic. There's a lot of rip-off collections, but again, the value proposition of doing this on the ledger, doing this, and I think you'll see game makers move in that direction. Growing up playing MMOs like RuneScape, we actually would sell RuneScape gold points and create secondary markets, which was very frowned upon. In fact, I got sued as a 12-year-old for doing that. But I think, I share that story, and that game makers are moving towards allowing liquidity to form around these games. So Second Life Game Maker literally got money transmission licenses in all 50 states and 3 territories to sell Linden dollars. They have the same licenses that Coinbase has, which is pretty incredible to actually encourage USD MMO currency pairs. You've got the guys behind Forte, an amazing team. Kevin Cho, I believe is his name, and his team behind Forte, which is they're working on interoperability between games, basically providing that software development kit, that toolkit, where hopefully you'd be able to take a coin from one particular game to another. So it's not World of Warcraft gold versus RuneScape gold points, but it's it's maybe a unified currency that you can take across the board. But I think that where you can leverage a ledger, a globally decentralized public ledger, to be able to verify the authenticity, that's the fundamental use case of where blockchain is going to help stomp out a lot of this fraud. It's super exciting. I'm excited about it.
Who was in New York last week? A lot of people were in New York, at least if Twitter is to be believed. I don't know if any of you made the shows. I didn't, of course. I never get to go anywhere. But
we missed you, Justin.
What's that?
I said we missed you. It was a glory of NFT activity for sure.
Next year I'll have to travel. My dog misses me, so I don't want to leave her behind. I'll bring her with me. There was something pretty sobering on Friday for those who were looking for it. The announcement by the IRS was a very unfriendly announcement to how most users are experiencing and using their NFTs. To wit, they said that holding NFTs, purchasing NFTs, up to, once you cross the $10,000 in value threshold, it's to be treated like receiving money. So you create a taxable event simply by holding your Bored Ape Yacht Club ape, or by holding your Sticky Vampire Syndicate vampire. This it seems to be a cause for certainly a lot of distress among the most vocal supporters out there. Is this going to have, or has it had a negative impact on retail consumers? Because obviously, like being hit for a purchase, having to pay out $2,500 for a $10,000 purchase. That's at the time of purchase, that's a lot. That's not a comfortable position for most people. Who would like to take that? It looks like you have something to say, Avery.
I was just going to say, never financial advice. So we always, kind of caveat that. No, I think that what you're talking about in terms of financial regulation is something that is not completely confirmed at this point. So from the Vayner NFT side, we don't have an official POV on that yet.
Mm-hmm. What do you think, Alexei?
Yeah, I think we should wait a little bit and see what is the exact regulations will look like. Definitely there is some limitations, and it will a little bit cool down the market. So yeah, let's see what will happen.
Yeah,
Okay.
I'll take a bit more of a contrarian viewpoint on this one. I personally, we welcome compliance and regulation coming into the space. When you look at anti-money laundering concerns, how do you stop someone from literally sending an NFT worth $100,000 in secondary retail value and laundering money with it? So it's not a surprise that they're looking at concerns around it. We've got amazing tools around ledgers today. There's companies like Chainalysis that'll actually, work with the IRS and work with governments to figure out what's happening on, and I've got no exposure to that, so I'm not pumping a bag here. I'm not an investor. I just think it's a really cool way for governments to have insight into what's happening on these ledgers. We've known for a while that the IRS is running nodes on some of the biggest layer 1 protocols out there. It shouldn't be a surprise that they're savvy here. They're monitoring this space. Art is taxed. I think they have to get this right. I would ask that this be treated like art, where it is art, where it's utility. It should be treated like a utility. So there's more work to be done, but the burden's on all of us in the ecosystem. Vayner NFT, Rarible, Immutable Holdings, we all have to get together and pool resources and lobby and make sure that the voice is heard for the ecosystem. We don't want to hinder tech innovation in this country. There's such an incredible opportunity for the US to really step up and become the home for so much progressive entrepreneurial activity to be happening, especially with so many other countries out there getting it wrong. So I see this as an opportunity. More compliance is going to mean more trusted ledgers. That means institutional capital will come in. That means funds, NFT funds, which are already being stood up. More asset managers will come and speculate around the space like they already do in traditional art and art collectors. Right. So we shouldn't be afraid of it. We just should be proactively working with regulators to make sure that they get it right.
Perfect. Well, thank you very much, everyone. I honestly wish we had another half an hour. This is a great panel. Thank you so much. It's been an honor to speak with all of you. Very knowledgeable group of people. Thank you, everyone, for joining us. I think I'm being told that we are out of time, but thank you very much, everyone. And I hope you come on again and speak to us at one of our shows.
Thank you very much. Everyone have a great day.
You too.
Yeah. Bye-bye.
All right, everybody. So Justin, we just did NFTs. First Benzinga Fintech Award, where we've had a dedicated NFT segment. Right. I'm going to take us back to the roots and do what I think is the only segment that's been consistent all 7 years that we've been doing this, which is traditional brokerages. Okay, excellent. Well, that connects old and new. We're making history here, Luke. Exactly. And here's where we're going to focus in on the brokerage. We're going to talk about cryptos, but we're going to spend a good amount of time talking about equities. And we're really going to be thinking about what's new, what's coming to these equity trading platforms. Because I mean, these platforms, the world, the amount of access has changed drastically from when we first did this 7 years ago. And what's fascinating here is that, whether it's NFTs or, BTC, Ethereum, that's kind of led you in, especially for the millennials and for Zoomers, they're not just investing in crypto more, they're investing more in general. And that's good to see. People regarding themselves in terms of creating passive income streams and in terms of preparing for their future, which is not something that especially people in the U.S. have been especially awesome at doing up until recent years. So it's good to see. Awesome. Totally agree. And without further ado, producer Rohan, can we bring our panelists onto the screen with me, please? All right, everyone. Like I mentioned, this is our brokerage panel. We're going to talk about what's changing, what's new, what we all have to look forward to as investors. I am joined by James Putra of TradeStation, Anthony Denier of Webull, and Anthony Hughes of Stonks Trading. I think we have a really interesting stratification with the companies that are on this panel today. We have TradeStation, which has been in the space, been servicing individual investors for quite a while. We have Webull, which has come out of nowhere over the past several years and really taking the world by storm as the next generation trading platform. And then we have Stonks Trading, which is pre-launch. The idea for Stonks emerged out of the whole GameStop incident that we saw take place earlier this year. So gentlemen, I gave my little bit of background, but you can do a much better job than I can. So why don't we go around the room and just give us a quick 1-2 sentence introduction of yourself, your company, etc. James, I am going to pass it over to you to start.
Thank you, Luke. Appreciate the time to chat here. So I'm James Putra from TradeStation Crypto. Overall, my business really rolls up into TradeStation as an entire broker-dealer. We offer multi-asset classes, typically for traders that are more active. We tend to focus on people that have a full-time gig but trade pretty actively, running between meetings through the stairwells. So that's generally the main area that we're focused on.
And then we have two Anthony's. I'm going to refer to them as Denier and Hughes. Denier, I'm going to pass it your way to tell us a little bit about yourself and Webull.
Hey, Luke. Thanks for having us again. By the way, that bow tie is on point. I just wanted to get that out there. So Webull, like Luke said, we are new to the scene. We started about 4 years ago simply as an equity broker-dealer servicing U.S. customers in the U.S. We moved on to options and most recently multi-leg options. And in November of 2020, we added cryptocurrency trading as well. So again, we have in very short amount of time, we've become a multi-asset platform. But most importantly about our platform is we are mobile first, right? And that's probably one of the big differentiators from maybe James's firm that's been around for a little longer. We came out with a mobile application before anything else. Now, fast forward to today, we obviously have a mobile platform, a desktop, and a web-based platform that seamlessly integrate. But having that mobile first sort of priority in building out new tools and new products takes us into that neo broker range where our demographic tends to be much younger than a traditional broker dealer. We do still continue to think mobile is the future, but obviously we'll keep on these web-based and desktop systems for some of our non-traditional demographic customers that demand it.
Excellent. And I thought that we were all wearing bow ties, but I guess, you know, the messages didn't get out. But Hughes, I'm going to pass it over your way.
Awesome. Thanks, Luke. Yeah, dope bow tie. I did a pocket square, so I guess no one else got the memo for that. But anyways, my name is Anthony Hughes, CEO of Stonks Trading. We are very, very new to the industry. We launched in end of January, beginning of February, out of the whole GameStop craze when everybody got locked out of being able to trade. So we had an idea of giving the first 500,000 users of our platform 5 shares of our company to put ownership back to the user. And then we're beholden to the user. And so weekly we do live Ask Me Anythings where we ask our partners who are shareholders of the company, what should we roll out next? So we have an app launching for equities trading end of the month, and then we're rolling out crypto and a banking solution in Q1 and Q2 of next year. So we are trying to be API-driven companies. So we're not a broker-dealer, but partnering with companies like Alpaca to provide brokerage services. But then we want to be very, very heavily focused on the technology side of how retail traders enter into the markets.
Very nice touch. I'll give you that. But all right, let's kick this thing off. First question, I'm going to send it over to you, James Putra, TradeStation Crypto. Tell us when did TradeStation start working on crypto? This is going to be a two-parter. So when did TradeStation start working on crypto? And then when we saw the wave of new investors entering the market this year, how have the needs of those investors differed from, you know, what had historically, I'm imagining, been a pretty sophisticated group that TradeStation has serviced?
Sure. So we first started, like most people, doubting the crypto existence somewhere around 2014. Shortly after that, we started doing crypto mining as part of our core innovation operations. And that really led us into, it took about 2 years to really build up the internal knowledge. And then we started around 2017 to develop the actual trading platform, which we were able to bring live in the beginning of 2019. And that was quite a exciting ride for us for all those years, really just trying to develop the knowledge. And then to the second part of the question, our main goal was to get out in front of the next wave. And when we were in 2018, 2019 trying to launch, we recognized that big move had finished. And we knew that it tends to move in cycles. So we wanted to get ourselves in front of that next wave, which happened in 2020. And I think we're pretty successful at doing that. And what's been interesting for us is to watch the types of customers that come in. So over that sort of evolution, we went from dealing with a lot of younger customers that were excited about crypto, ready to take over the world, and having to talk to larger customers and larger institutions that were still skeptical about the asset class. Into now, within the last year, our conversations have changed quite significantly. And those are really around how do we get involved in the space? And we're talking about a variety of different firms, from banks, from other broker dealers, from other crypto exchanges that are just looking for ways that they can get access into this space through one of the offerings we have.
Follow up on that, let's say talk about the traditional trade station customers trading equities, options, futures. I imagine something along those lines. How are their needs in terms of a platform or the tools that they're using differ for these crypto customers, or are they the same customer?
So I think the younger customer is definitely the same. They tend to be more fungible across markets, and it's why you see platforms like Robinhood, Webull, and even TradeStation have success where there's activity in equities one day, the customers are moving over to that side of the business. There's activity in crypto, they move over to that side of the business. So that part is fairly common, but the customers that are traditional equity or options or futures, traditional securities customers, they have a different set of needs. And that's quite interesting to try to marry up. So when you would go to the likes of a normal crypto exchange, whether it's Gemini, Coinbase, Kraken, the concept of P&L was not something that's integrated deeply into the platform. And when we launched our crypto offering, we followed suit, said, okay, crypto is a balance, it's not a position. And we were hosed by our equity customers. The very first thing they said is, wait a minute, I'm in this trade, where's my P&L? So very quickly we learned that the large customer base we have certain expectations about how the tools look, how the market behaves. And so we really took that to heart and took our skills of, what does that equity or futures customer need, and tried to overlay that onto crypto and build in those tools so that there was a common experience for them in both markets.
Excellent. And I want to take this question over to Anthony Denier at Webull. And I want to ask, why did Webull enter the market? Like, if I think back to the world that Webull entered in, you had online brokerages that had existed for quite a while. You also had Robinhood on the other end of the spectrum. Mm-hmm. Why did Webull choose to enter the market and exist as a business?
Well, there's a lot of different reasons. There was Robinhood leading the kind of mobile first zero commission trend, and zero commission at the time when we launched was still looked at as a flash in the pan, in all honesty. There was a lot of actual naysayers believing that zero commission was something that could never last. Obviously, things are a little bit different now. So when we looked at the competition that was out there, we skew very much more advanced compared to a Robinhood type platform, right? And we look at our customer base. We were already operating as a market data platform without a brokerage attached to that platform. And we found that our users were looking at advanced things like Fibonacci trails, right? Or looking at moving averages or calculating VWAP on stock, looking at what insiders were doing just by looking through the market data on the platform we already offered. This is a very different type of trader than a Robinhood trader. So when we launched in May of 2018, we basically saw a huge graduation of Robinhood users that were looking for more tools, more analysis, more functionality in a mobile first platform that they couldn't get with the mobile platforms that are out there, right? Robinhood was being the most popular. I hate to keep saying their name, but they are the biggest and the most popular. So, and then on the other end of the spectrum, you had the Ameritrades of the world and the E-Trades and even the trade stations of the world. And they had some really great tools, not so much on the mobile, but they had great tools even on their desktop platforms that customers like to use, but no one liked to pay the commission, right? So we almost had customers on the TD sites downgrading to Webull, and at the same time, customers on the Robinhood mobile apps upgrading. So we sat in this really nice sort of niche between the two types of platforms that served us really well on a couple different levels. You're getting a more advanced and experienced customer than a first-time investor. So our customer service lines don't get overwhelmed with, why didn't I buy that share of Apple? I put in a limit order at $100, right? Well, we all probably know in this call, you're not going to buy something if the limit is a couple $100 away from the current price. But those are the type of questions sometimes you get from first-time investors. And we were able to kind of avoid that lag with our customer service team, which helped quite a bit. We, again, the only brokerage that served, even on a mobile platform, a more advanced user that had a telephone line from day one, right? Most famously, Robinhood, added their big call centers only a couple months ago. So there was a lot of want for a mobile-based platform that I think a lot of users needed, and there was a lot of overhang on the traditional platforms that have been operating up until then. That it's like commuting to work in a Ferrari every day. Like sometimes you just don't need all those tools. You need the best of them. And you want them to be mobile. You want them to be available on the go. And we saw a great opportunity there. And here we are, only several million accounts later. I think it worked.
Congratulations. And I want to dig a little bit deeper into some of that tools commentary in a second here, but not to sound too much like a superhero movie franchise. But I want to keep going with the origin story questions. Anthony Hughes, I'm going to pass it over to you. So there's firms like TradeStation, there are firms like Webull. Why launch a new brokerage? Why now?
Yeah, so I mean, of course, we all remember the retail debacle in January, where retail traders couldn't trade the meme stocks for a certain period of time, and of course, in like Denier, I hate to bring up Robinhood, but since they're the biggest space or play in the space, then we have to use them anecdotally, where people were mad at Robinhood for locking them out. And so I used that. I'm a tech guy, so I was working on another software startup when kind of all that happened. And I saw a marketing problem, a messaging problem. And so the hypothesis and the thesis was, if we build a brokerage firm, alongside of the people, not just a tech guy building something that I think would work, but if we build something alongside of the people, bring them in from day one and tell us what we should build. There's a few things. We have instant product market fit, but then we're actually building products that people won't use. And so the first way to do that was, let's bring along people in ownership, in equity. And so we started giving away shares of the company. And then the sentiment was, we don't want to go after VC money or investment bank money, which we all know on this call is really hard to build a software company without VC capital. And so this is what the crowd wanted. And so we launched a crowd funding campaign to pay for the first iteration of the app. And fast forward 5 months, we have a product that's ready to launch at the end of the month. And so the market sentiment at the time was, essentially, we need to do something different. Bring the user in along for the ride, let them have a say in the product that they want to own, and then we'll go out and build it with a rock solid engineering team. And so we are completely focused on the technology, which is why we're not looking to become a broker dealer right away, which is why we're not looking for a banking charter right away, which is why we're not looking to be an exchange right away. By building the tech infrastructure powered by APIs, we're allowed to move quickly and agile in order to give the user what they want. And so that's kind of the genesis story of why we started Stonks. And we haven't spent any money on marketing and have over 10,000 people waiting for the platform to launch at the end of the month. And so we're pretty excited for it. But it seems to be what the people are wanting. Of course, we want the same success as Webull from customer acquisition, but so far so good from a CAC perspective, at least.
Excellent. And Anthony Denier, I want to pass it back to you. And let's dig into the tooling and the functionality a little bit. Webull is well known for having a lot of features, a lot of functionality, a lot of capabilities in its mobile app. But when I think about what Webull offers, it seems like you have the sort of a beginner tool set like fractional shares, and you have a pretty advanced tool set like level 2 quotes on mobile devices. How do you think about, what to build next, what user you're building for, and then any sneak peeks of things we can look forward to are always appreciated.
Yeah, I mean, firstly, Hughes, and I know that sounds weird, Anthony Hughes, I think he makes a really good point in listening to the people, right? Customers are the ones defining what's going to be the next popular tool or platform that gets launched. And where, we read the comments, right? Or against our therapists, we actually do read the comments. And so when one of the number one things that our customers were talking about was, why don't you have fractional shares? Why don't you have fractional shares? Amongst other things, right? But fractional shares was, probably the loudest. And admittedly, we were probably one of the last mobile first platforms, even though, we're only talking in a span, we've only been up and running for less than 4 years, right? But we were one of the last to get on board that fractional trading sort of train there. And I'll be honest here, in the beginning, it was scary for us because we always tried to stand out as the advanced platform, as someone graduating from a Robinhood or from a Public or some other mobile first platform, and finding us because they're into trading. They understand that data actually does make a difference when you're making a trade, right? And I say it often, it's not the idea of making a trade, it's the point of making a profitable trade, right? And information is the way you can make that happen. And fractional trading, in all intents and purposes, it brings on a customer that is not looking for the information; they're just looking for the access, right? And again, Robinhood, and they've done a great job at giving access to someone that wants to buy $50 worth of Tesla and not look at it again in a couple of weeks. We kind of always skewed the other way. Like, we're looking at the customer that wants to understand the entry point, exit point, kind of go over it 3-4 times, maybe, try to do some analysis on looking at some different charting tools to figure out when the best point to come in, analyze the candles. But at the end of the day, the customer is demanding the product. So we brought out fractional trading at the beginning of this year. And actually, to my surprise, it actually turned into a really positive thing for our platform, because it allowed customers not to have to go through the problem of thinking that a stripped down mobile platform is all that's available, right? They start off being able, to buy $10, $5 worth of Tesla. But at the same time, they also get shown a whole wealth of information and educational content to actually bring them on that kind of step to becoming that next level, or that level 2 trader, where looking at market depth actually makes a difference now, right? And understanding that there are better times to enter and to exit a position. And it's been really, really great for us in terms of being a magnet for customers that we weren't really targeting. So it diversified our customer base. I think it allows customers that never really intended to become advanced traders, it allows them to start that opportunity to become more advanced in learning how to be a successful investor.
Excellent. And James Putra, I can't let you off of here without talking about the SPAC deal. You had some news that was either the end of last week, early this week, but TradeStation is going to be going public via SPAC. Can you tell us a little bit about why you're doing that, what it means for the end user?
So unfortunately, I can't say anything about that. I would love to be able to comment on it. What you can do is check out the website about.tradestation.com. It has all the information. I can give you a more direct answer on education tools and asset classes if you like.
Let's roll with that then.
All right. So, one of the comments was interesting. When we look at the kind of general customer base, we know that customers trade across a variety of different asset classes, and we try to really position ourselves in a way that understands that we can meet that customer at that specific skill level. So when we think about things, you may be a phenomenal equities trader, but a beginning options trader, or a phenomenal crypto trader and a starting stock trader. So we really focus on bringing the education to whatever level you are, at whatever asset class you are. So our education meets you at different levels, and also the tool set. So you might be phenomenal, again, at crypto, terrible at equities, or just starting out. And you may find that the tooling is more sophisticated for you on the crypto side and more beginner on the equity side. So we really are trying to focus on developing that matrix so a customer can develop their skills across the different asset classes and interact with tools that are meeting their specific skill levels. And then we help to provide them the education that'll help build them up into the various skill levels that they're focused on. And some of the stuff that you were asking about of what's coming soon, the interesting thing that we see is in this space, having a single account that can access multiple asset classes is a big deal. And having that under an IRA is also a big deal. And having an IRA that you can hold spot crypto in hold equities in, and hold options in, is something that should come out probably within the next 2 to 3 weeks. And it's something we're really excited about, and it's been a high demand for our customer base. So we're pumped up about that.
And so it sounds like users will be able to have that IRA, that retirement account, and actually be able to hold crypto assets in it. Potentially, can they earn interest on those crypto assets, or what exactly are the users getting?
Yeah, so this is basically the same thing you get as an individual account, but the actual IRA container is a tax advantage account that lets you interact with equities, options, and crypto. And then any of the crypto assets you have also earn interest at the varying rates that are posted on the website. So it becomes a really interesting play where today, if you have an IRA account at one of the few IRA providers, they're going to charge you account opening fees, custody fees, high trade fees. We're really focused on turning that model on its head. We think that there's no need to be egregious on the overall fee structure. So we have a very simple one flat fee for a trade, fully disclosed, and then we don't charge any custody fees. We actually pay you to hold your crypto assets. So it's a nice, well-rounded solution. And it's one of the first that lets you hold the physical Bitcoin or Ethereum in the IRA, as opposed to some derivative like an ETF or a futures contract.
Excellent. All right, guys, and we just have time for one more question, and then we'll talk about some next steps. I'm going to pass it over to Anthony Hughes. Anthony, you're just starting out. You're pre-launch. You said you have a product coming to market at the end of this month, I believe. Of course, when you're starting, you have to start somewhere. So what feature set are you deciding to start with? How did you make that decision as to, hey, this is what we're going to go to market with?
Yeah. Hopefully we can launch at the end of the month. The engineer team might do something to me. Anyways, yeah. So we're planning on getting to market by end of month. We went ahead and started launching with equities trading. And so our user will be able to buy and short equities, fractional shares as well. And the reason why we went first with that is, to be frank, everybody wanted to buy GameStop when we launched the company. And so our users were like, give me access so I can buy GameStop. But there's, just from a market acquisition standpoint, there's a lot more retail traders that are trading equities. And so we went first with that. And then kind of secondarily, we're going to add some technical indicators to the platform, hopefully by the end of the year, MACD, RSI, and whatnot, just a few, because we're trying to bridge that gap between Robinhood and Webull to where it's almost like a graduation step to Webull, where all the technical indicators are. And so by adding into that ecosystem, I think our users will get a benefit from graduating up into that as well. And then, of course, we have quite a bit on the roadmap from an education standpoint, which we could get into here in a minute. But equity buying and shorting is what we're launching with first, just based on what our market told us.
Excellent. And do we lose James, producer Rohan? Looks like we lost him. All right,
Luke, did you say something? What happened in the background there?
Yeah, Jesus Christ. But let's hear about some next steps. Anthony Denier, I'm going to pass it over to you. How can users sign up, and what should they expect when they become a Webull user?
Right. So, there's a reason why we're ranked, and I have to say that number 2, we're not number 1, but there's a reason why we're ranked number 2 as a pure play broker in the App Store. Right. We do have the highest ranking. We have 4.7. I think Robinhood's down to like 4.1 in that same store. Is because we constantly look to improve and provide the best data we can on a day-to-day basis, right? James mentioned IRAs. We've been offering IRAs, whether rollover, Roths, traditionals, on our platform for years now, with no fees, no trade fees. There's no monthly maintenance fees. There's no minimum account fees. It's zero across the board. Now, controversial or not, the way we monetize this business is payment for order flow. So I want to be transparent there, because I'm sure people will say, well, how do you make money? So let's be clear. We do utilize payment for order flow. We will continue to expand globally with our product. We're looking for other regions in the world. I'm not going to name them specifically on this panel, but hopefully expect to see Webull coming to your market if we're not already there. That will probably be a reality in the next 9 months to a year for production. We will continue to increase our offerings into asset management services as for our passive investor clientele, and also to give an advantage to our active customers that, listen, there's one thing to have a great trading performance. You fund your account with several $1,000s, you turn that several $1,000s into 10, right? Great job. We don't want to see that money go somewhere else or go sit at Vanguard so you can put it in a low-cost index fund. We want to provide those services to you as well. Very much like James and the team at TradeStation is doing a great job of creating that one account feel, whether it's crypto, options, equities, or international trading. That is our goal in the next year or so. If you've ever seen our product and you've ever worked on our platform, you'll see we update it often and frequently, and we'll continue to work hard to make it a better platform.
Excellent. And James, how can users join TradeStation Crypto? And can you give us a reminder again as to when those crypto retirement accounts are going to be rolling out?
Yep, absolutely. Stop by, check us out, www.tradestationcrypto.com. We'd love to have a chance to talk with you about what we're doing. And the IRA accounts that allow you to hold crypto are coming out by December. First week of December is when we're targeting the launch. So we're super excited about that, and we're very interested to have a chance to just share with you what we have and see if it makes sense. So thank you for the time, Luke.
Absolutely. All right. December 2021, perfect timing to be able to fund them in 2022. And Anthony Hughes, how can users join the wait list for the end of month launch, which it sounds like your engineering team might dispute with you just a little bit.
They may. They're working really hard though. But trystonks.com is our website. You just go right there, join the wait list. By joining the wait list, that gets you on the list for obviously the app download when we launch, but then also the 5 free shares of Stonks Trading that we will allocate to our user base in January of 2022, and we'll be using Republic to do a share drop to our user base. But then, so trystonks.com. We'd love for everybody to come help us build a user-owned trading platform, but then also to join us in the roadmap where we launch Stonks Crypto and Stonks Money in Q1, which will be offering access to the exchanges through crypto, but then also checking and savings account, long-term savings accounts as well in Q1. And we're trying to get that one user app experience as well. Like the gentlemen on the call are doing as well. So we'd love for you all to come along for the ride as we build this company together. Luke, appreciate the time, man.
Absolutely. Thank you, guys. This is, not to throw any shade on the other panels that we have today, but I will say I always snag the brokerage one for myself. We've been doing it for 7 years now. Appreciate you guys coming on. Always one of my favorite segments at the awards.
Hey, thanks for the time, Luke.
Awesome.
Thank you, Luke.
Guys. Appreciate it.
Take care, everyone.
All right. Take care, guys. All right, everybody. Next up, we are going to do what I believe is our second to last batch of awards here at the 2021 7th Annual Benzinga Global Fintech Awards. We have a couple categories we're going to go through. We're going to start it off with Best Data Analysis Tool. In third place, Best Data Analysis Tool, drum roll please. New Constructs. I like the clapping. All right. Second place, Best Data Analysis Tool. We have Feedstock. And the winner of the 2021 Benzinga Global Fintech Awards for Best Data Analysis Tool is S3. All right, and I am joined by Mark, CEO over at S3. Mark, congratulations on your award.
Thank you very much, Luke. As many of you know, S3 has been in the financial service data analysis business for a long time, so it's great to finally win this prestigious award. We started in 2004 when a head trader at a brokerage firm asked for help with the predecessor to the 605 and 606 reports, and since then we've been growing and expanding all across the industry. Started with a few small clients for those reports, expanded to options, quickly became the leader in options analytics, and then started taking over larger and larger clients and added TC and fixed income along the way. Now we produce data analytics for most of the big banks, retail firms, and wholesale firms. Since then, we've expanded substantially with a full service CAT offering, trade surveillance, and Canadian reports. Recently, we announced our expansion into worldwide trade analytics and are looking forward to the future, including crypto, DeFi, and other digital assets. Thanks again for this award, Luke and Benzinga, and we look forward to working with you all in the future.
Excellent. Thank you, Mark. All right, everybody. Second award we are going to be announcing in this afternoon group goes out to the most innovative ETF company. Most innovative ETF company, another one of those categories we've been doing since we got started here with the Benzinga Global Fintech Awards. In third, and I will say this too, the list of ETF companies when we started this several years ago was significantly shorter. So to all of our ETF judges, thank you. You've stuck with us throughout the years. The list is, I think, tripled or quadrupled in size since we've gotten this one going. So thank you, judges, for taking the time to review these. But without further ado, in third place, most innovative ETF company, we have Roundhill Investments. Second place, 2021 Benzinga Global Fintech Award for most innovative ETF company, we have Direction ETF. There's a lot of those leveraged ETFs. I know a lot of us like to trade. I've definitely been there. In the winner, this company's been making headlines for the past year, but winner of the most innovative ETF company as assessed by our panel of judges is ARK Investment. All right, everyone. We do not discriminate with the type of fintechs that we cover here at the Benzinga Global Fintech Awards. Sure, we may have an investing, we may have a capital market slant, but we do want to recognize some of these other fintech verticals who are making waves, making our lives better as consumers. And so we are going to be getting into the best insurtech. This is insurance technology, the best insurtech. In third place, 2021 Benzinga Global Fintech Award for Best InsurTech, we have Brightco. In second place, we have Fintech OS. And the winner of the Benzinga 2021 Global Fintech Award, 7th year we've been doing this, Cadre Insurance. All right, everyone. We are joined by Kevin Mackey, COO and co-founder. Kevin, congratulations on winning your award today.
Thank you so much to everyone in the crowd that voted for us and for enjoying what we do here at Cadre Insurance. What we are doing is embedding small business insurance in the apps and the marketplaces that these small business owners are already using. Ourselves as co-founders, in addition to myself as Kevin Mackey, David McFarland and Tim Metzner, we are small business founders. We are people that deeply invest in small business owners. And so by making this insurance experience more transparent and easier for you all, makes our lives easier, makes your lives easier. So thank you once again to the Benzinga crowd and everybody else who has voted us the best insurtech for 2021. Thank you so much.
Absolutely. Congratulations again, Kevin.
Thank you.
All right, everyone. Next, we are moving to a broad category. This one's wide open. We just left it as best new product, okay? We didn't put any parameters on it. We didn't limit it down. We didn't limit it by the type of fintech. We just said best new product. Who out there, who in the world of fintech thinks that they have the best new product? We had literally hundreds of applications for this one. I mean, I don't think that we've ever, in all of our years of doing this, had more applications for a single category, guys. You can go online, fintechawards.com, and see all of those applications, everybody who applied for them. But without further ado, let's keep it moving. Best new product. In third place, we have Doe. Second place, best new product, 2021 Benzinga Global Fintech Awards. We have AlphaStream. And the winner of the category, again, guys, this is our wide open, broad category. B2B companies, direct-to-consumer companies. We had more applications here than anywhere else. We've been seeing this company more and more in the press. eMoney Advisor. Oh, music's over. All right, everyone. We have one last award we're giving out in this round. We're starting to work towards the end of our day. But again, stay tuned. We're going to be hearing from the CEOs that are changing the space, making tools markets accessible to us. So stay tuned. But I do have one more award to give out right now, and that is for the best financial planning software. Again, this is best financial planning software. This is one we've been doing for the past couple of years now. In third place, best financial planning software, we have Even. In second place, for the best financial planning software, the B2B tool, InvestCloud. And the winner of the 2021 Benzinga Global Fintech Award for Best Financial Planning Software is Lending Point. All right, and I love this. We don't just have one person or two people from Lending Point. We've got a whole crew from Lending Point here, guys. Congratulations on winning your award.
Thank you so much. We are thrilled to be part of this category. We're so happy for the recognition. We do have a couple members of our team. It's just a small portion of our team that wakes up every single day excited to inspire and empower financial freedom for all. We're so excited about this work. Thank you so much, Luke and Benzinga.
Absolutely, guys, and I love how you brought the whole crew, or at least part of the crew, on with you. Congratulations, everyone. There we go. Love that. All right, everyone. As I just teased, we still have plenty of content ahead of us today. If you want to know what tools are coming next, what markets are coming next, how these businesses are changing, what we can do as investors, stay tuned. We've got some pretty good content coming up. We've got some movers and shakers coming up. So I want to bring on a good friend of mine, Catherine St. John from over at Trading Central. Catherine, what is going on?
Hey, Luke, how are you? You're looking sharp. Way to show up today.
Got, bow tie and all. We've hung out many times. You probably, can attest I'm always in a suit and bow tie.
Hey, it's no surprise you're so polished. No surprise you bring such a big audience. So good for you.
Awesome. Well, Catherine, I am going to pass you the mic, and why don't you take us away?
All right, incredible. I just love that you brought me this topic of about finding a better way, changing the game. It's near and dear to my heart. Actually, Sean Wasserman here from the NASDAQ, who I'll introduce you to in a minute, was just asking me what Trading Central did. And I was telling him about early startup days back in 2001, finding a better way to help people with technical analysis, apply some automation to what really was sort of manual textbook activity at the time. And now acquired by Trading Central in 2016, we're serving a better way to investors through hundreds of online brokers that are our clients today. So that's pretty cool. So it can be done, finding a better way and achieving some success. But yeah, so we've got two game-changing companies today, and I actually really like the contrast between NASDAQ with Sean Wasserman and his role there, and QAI and Stephen Mathai Davis there. So I don't know. Let's start with Sean. How about you introduce us to your role and maybe start us out with a few points on how the exchange traded products has grown and has been changing the game.
For sure. Thanks, Catherine. So yeah, pleasure to be here. I head up our overall index sales and business development here at NASDAQ. And so when we talk about indexes, a lot of that really comes down to providing the core ingredients or a strategy that would be the basis of investment products. So here at NASDAQ with our index group, our core strategic focus is providing indexes that would be the basis of ETFs or ETPs. We provide our indexes for all different types of investment vehicles, but that's certainly our strategic focus. And along those lines, right now we have around the world about 350 ETPs tracking our indexes with a little over 400 billion in assets under management. Of that, most people know us for the NASDAQ 100, which comprises our flagship and comprises a good portion of our business. The Qs recently just crossed 200 billion. And then, we also have another around 80 billion in assets that comprise various other related types of exposures around the NASDAQ 100, but then still have a wider diversified business with around 125 billion, tracking various other related strategies, whether it be thematics or in other categories. So looking forward to the conversation today.
Yeah, no, that's really interesting. And what an incredible reach NASDAQ has through so many partners. And I know that's a big part of your role, is working with some of those partners to, I guess, take the most advantage of the capabilities, the unique capabilities that your indices and the products they can fuel offer. So I'll definitely come back to that in a minute. But first, let's meet Stephen Mathai Davis from QAI. Stephen, you're full stack data scientist, and I've seen all sorts of like top 100 CEO and a few accolades like that, which is super impressive. Why don't you explain to us a little bit about your background? I know your history growing up in the field, and what you're trying to achieve with QAI.
Yeah, absolutely. So I'm the founder and CEO of QAI. We're a Forbes-backed robo-investing app that's bringing AI investing, but specifically institutional-grade AI investing to the individual investor. So I come out of the hedge fund space, where I was working both at hedge funds, I guess, and asset management companies as a trader, analyst, and portfolio manager. And one of the things I observed was a lot of the stuff I was doing for high net worth individuals and pension funds and groups like that wasn't available to my friends. It just wasn't available to the average individual. So that became the motivation to create QAI, which was to bring the same investing tools, analytics, and strategies that I was building at a hedge fund or at elite asset management houses and bring it to the individual.
Yeah, so it must be interesting to keep that spirit alive with your team in terms of you recognize a gap, and there's probably some reasons why those gaps exist. And you're out there finding a way to, apply technology, new processes, or a way that people think about how they can be served.
Yeah, I would say the most stimulating thing for me, and I think this is the case for the entire team that we have at QAI, is the idea of reimagining the financial product in a digital structure when we're thinking about millennial and Gen Z investors. Because if you think about a lot of younger investors today, they're now coming to a position where they're going to have serious monies to invest, and traditional Wall Street, traditional asset management is really geared towards an older demographic that's more brick and mortar, not truly digital. Here's generations that have just grown up in a digital ecosystem. And how do you reach them? And how do you create financial products that really speak to them? And that's been the challenge we've been, I guess, trying to tackle over the last 2 years. And for me personally, it's been totally exciting.
Oh, I bet. Actually, I thought it was really interesting. You had some point about mutual funds and sort of control and ownership over mutual funds. Can you tell me a little bit about that and the impact on innovation?
It's been like the revolutionary talk, when I give the speeches, if you look at the mutual fund industry today, over $21 trillion, and it's not a dead industry like some people say. It's compounding 8 to 9% per annum. Over 75% of assets are controlled by 3 mutual fund complexes. So just take a step back. 3 firms are driving the product innovation. It's one of the reasons why the asset management industry is viewed as an asset gathering business. If you talk to management, it's an asset gathering business. What's your sales and distribution? It's not about product innovation. There's such a high concentration of assets. In the ETF business, 4 to 5 firms control over 90% of assets. That's a $5 trillion business that's growing close to 20% per annum. And I can get into the hedge fund business, which is the same thing.
I think that's probably pretty inspiring for your people. It gives them a little bit of a mantra on the importance of bringing a new perspective and finding new channels for people. But, then you've got a company like NASDAQ, Sean, that is sizable, that provides its products through so many different brands. And, I think there's still room for innovation, both in terms of what NASDAQ's doing with strategies. And then I guess, so where's the distinction, Sean, between where NASDAQ innovates and what innovation lies with your clients, those partners that are packaging those up and bringing them to investors?
Yeah. So as we think about bringing new products, and particularly a lot of that new product innovation and thinking is centered around kind of the ETF wrapper, is a constant, back and forth dialogue that we have, with, between our research team and like our asset management partners, product development teams. And so, we're constantly sitting together and thinking about, ideas on the NASDAQ end, ideas on the client end of, what solutions is it that have yet to be brought to market? What are the new themes or different, like investment access points that haven't really been satisfied for investors? And how can we create a strategy? And where we're coming from on the index side is a systematic rules-based strategy as to how we could capture that.
So can you give me some examples of those, like just to make it really tangible of some of these, or at least the end product that delivers these?
Yeah. So, one of the ones that we've been really excited about that actually just recently hit its 4-year track record. The index is coming up, almost hitting its 4-year track record. The ETF has been, tracking it for about that long. Is an index strategy we have called the NASDAQ 7-handle index. It's tracked. There's an ETF in market, ticker HNDL, that tracks it. And the whole concept of it is to be able to provide like a diversified portfolio that then sits on the kind of what you call the efficient frontier when you go back to traditional CAPM analysis. And when you go back and look at that overall academic approach, you end up with the best risk-adjusted return by applying a little bit of leverage. And so what we intended to do is to create an index that had a little bit of leverage, but then would keep a steady NAV over time and pay consistent income. So the index, and in turn the ETF, has paid 7% throughout its whole time and has always kept a steady NAV. So that's like one example of just like a retirement solution that we put our heads together and figured out how we could tackle.
So those are benefits that an investor would have a hard time replicating on their own. Like I was literally walking with my husband earlier today, and he was showing me his charts with his blockchain ETF that was, went up X%, and he was excited. And we were talking about, well, why that ETF, why that blockchain ETF versus another? And so some of those areas of risk management or asset allocation or other things that would be different, right, across these different indices or across leveraging an index-based product versus some other packaging, I guess?
Yeah.
Are those the type of benefits that you're delivering?
Yeah, oh, absolutely. Well, we're coming from the index side of designing either a strategy or like a portfolio and an index that people can then access via different vehicles. The ETF being a very efficient vehicle that people could basically go on and buy just like a single stock. So the growth of the ETF industry has certainly been huge over the last couple of decades, eating into a lot of that more legacy mutual fund business, as we were kind of speaking about before. And it's interesting to see kind of the evolving landscape as well in terms of the start and more kind of rise of, Stephen, what you were mentioning of more of SMAs and some of the benefits of that. We're certainly working with different providers and starting to figure out how we can provide our indexes via those types of vehicles as well. Just as the same, we provide our indexes in access points via structured notes or within annuity products. It really kind of runs the gamut where we're focused on providing an innovative strategy and then providing access. And historically, ETFs has definitely been a very successful and efficient way of investors being able to access those strategies.
So speaking of sort of the end package, Stephen, you have to tell us about kits. And, specifically, like I want to get into some of the branding strategy and the tonality with retail investors and how important that is to what QAI offers. But you also had some opinions, and maybe we'll do this in two parts. You also had some points about, in what areas do investors want to engage and be active on, and in what areas do they want to apply automation and have some assistance. And so let's start with, tell us about kits. Like, isn't there a Santa Claus kit coming up or something?
There is. Now we call our products investment kits. And like Sean talked about, what we're really focused on are separately managed accounts, or SMAs, where each customer or user of QAI is controlling a brokerage account. Now, this is just FinTech 101. But what we've tried to do is take our kits, which are more or less strategies or portfolio strategies that someone buys into. And it's all thematic based, and it's all part of our thesis about kind of executable interactive content, meaning I choose a piece of content that I like. And in the case of FinTech, I can just execute or implement it right away.
Right.
I'm interested in the Santa Claus rally. So holiday shopping going into the holidays. How do I play it? I don't want to go buy a bunch of stocks. Also don't want to go buy the retail ETF.
It connects with people too, right? The certain tonality. I see a lot of traditional online brokers sort of grappling with this, wanting to, trying to balance, teaching investors the language of the industry versus connecting with them on, a topical theme or some sort of strategy they've heard and how that's named and referred to. So I think it's really interesting that you're trying to connect to them in that way.
You're a younger investor, right? Which is, I'll buy a kit. Now, what goes into the kit? The kit really is just a dynamically managed strategy. So they're using Santa Claus kit. It's not as if the holdings don't change. They're constantly changing, adapting depending on returns in the markets as well as managing the market volatility. But the users already just decide, hey, I just want to be playing this theme or trend. So the kits themselves represent themes. And what a user is doing is, as opposed to building a portfolio of stocks, they're really just building a portfolio of themes.
Mm-hmm.
Similar to the way elite hedge fund managers and some of the elite long-only managers manage towards, because it's not really building a portfolio around just holdings. You're actually looking at themes within your portfolio and what we call in the business sleeves. And that's really what our investment kits represent. So it's, in some ways, it's democratizing access to these tools, but making it accessible in a way that people can relate to. So I want to be in Santa Claus. I want to be in clean tech.
Yeah.
I want to be in a value vault kit. I want to mix it up. Maybe I'll throw in precious metals. I'll play the infrastructure spending.
Such versatile packaging compared to the kind of the traditional sector or asset class or.
Totally. And for us, we're doing all the risk management, because what we found, just touching on the behavior of younger investors, and this is in contrast to traditional baby boomers, they want to have a more active say in the asset allocation, meaning I want my monies to go to specific themes or trends. They don't want to risk manage. And our value proposition really is behind the scenes. We're doing all the risk management. You're just choosing what kit or what theme you want to be in.
But are there alternative ways to manage risk or get those other benefits for the same theme, or you sort of make that decision and that's fully offloaded to QAI?
Right now, it's going to be, we will manage the risk within the kits.
Yeah.
Down the road, we're going to try to introduce different types of management, whether it be more aggressive, more conservative.
Right. Neat.
Right now,
Neat. I always like to hear a little bit about what's to come too, right? Like where are we today and what's to come. So I don't know if QAI uses third-party indices like those offered at NASDAQ, or is it entirely built by your teams, reading all those books behind you perhaps, or I don't know.
Right now they're built by the team, but we're exploring different partnerships as well.
Okay. Okay. Neat. And Sean, you're out there. So you're out there working with firms, whether or not it's QAI, but other firms, whether they're robos, whether they're sort of incumbent online brokers, perhaps neo brokers as well, helping them deliver value through the products that you're offering, right?
Yeah, exactly. So that's where, like, it's been interesting to see some of the growth of some of the access points, like Steven's firm is kind of bringing to the table, where we're focused on providing kind of the best strategies. And going back to thematics, that's certainly one of our kind of key areas of focus, where we seek to be able to try to define the companies, and along with which ones you're selecting and how you're weighting them, that would express a certain theme. So, like, some of the ways that we think about going about that is going and finding some of the best, kind of third-party research firms that will be have a specialized expertise in a certain area to help define kind of what companies are comprising that. So, a few of the partners that we have in some of the products out there as examples is an organization we've worked with for many years, almost 15 years now, called Clean Edge, led by Ron Pernick. Where one of the very successful products we had, which really started to take off over the last few years, was our NASDAQ Clean Edge Green Energy Index. It's tracked by an ETF, ticker QCLN by First Trust.
Nice.
And the important part, with kind of bringing out themes, and particularly then in facilitating then investment products coming to market, is to be able to define them early on in in their development. So you don't want to be kind of too late in the game and be able to define and capture like a theme as it's kind of hitting that inflection point of where there's enough companies that are coming out of the private markets to then be able to have enough public companies to have a diversified enough portfolio for an investment product. So that's where we're constantly working with specialty kind of research providers and trying to identify what some of those next themes are.
Yeah. So it must be interesting though, because once you're offering those themes, robos like QAI or those that are working with NASDAQ products, they must have different capabilities in terms of their ability to notify their clients or keep them up to date, or otherwise somehow package up and express the unique benefits of these different products. I mean, are you seeing some partners of yours going further with sort of taking advantage of all those benefits, and some that are lagging? Like, do you see a kind of spread in the,
Yeah, everyone's involved in education in some way. We've been quite pleased with kind of the engagement for a lot of our partners. Invesco and First Trust, Global X, Victory Capital, just to name a few. Like both us from the index end and then our asset management partners, are constantly thinking through what research can we publish, how can we be kind of telling the story of what it comprises the index, which then is also then comprising the investment product, and how it could fit in the client's portfolio. But then it also goes kind of further upstream as well in terms of the platforms, like the different conversation we're having today, the great kind of role in education that all the different players will have, and trying to raise the awareness of the different products and strategies that are out there.
Yeah, I mean, I can't help but think of research tools and feeds and notifications and all of these services that can almost do like do justice, or like serve well all these capabilities that NASDAQ is really working hard to produce. And so I guess you must have some sort of influence role over some of the partners that you're working on, whereas Stephen, like, you're directly involved in sort of flattening the chain, almost like vertical integration of like, how do we take the content and deliver that? How does, I'm head of UX at Trading Central, right? So the workflow, the journey that you're expecting to track people through matters in adoption. And, how do you guys work through some of that, or what are some of the sort of investor experience highlights that that your team is proud of?
Yeah, so we just rolled out a brand new UI UX that ironically is inspired by the Tesla experience for people who drive Teslas. Where it was all first principles, because first principles designed, at least from the UX perspective, because how do you take everything I just talked about, which is a bunch of different types of investment kits, then more of themselves thematic based? How do you introduce educational content, because we have a massive there, and bring it into one app where the user is not overwhelmed?
Yeah, that's
obviously when we're looking at returns, you're not looking at just time-weighted returns, you're looking at money-weighted returns and other types of factors. How do you communicate that to the user that they should be looking at every single metric I just talked about? And for us, that's been the big challenge with UX, trying to simplify it. So I find finance too much of the time is obfuscates really basic concepts.
Yeah.
A little bit of, self-preservation there, because you want to show how important you are to justify the fees. I can show my cynicism coming out of asset management. But, how do you take that and simplify it and make it more accessible? Because that's what our goal is.
Yeah, it's a tricky business because, I think, some of the conversations I've had with our clients around sort of like snackable education, Sean, you were talking about the importance of education and how do you bring people along so they can discover how you're changing the game and they can really fully take advantage of it. So while the technology, whether it's in-house at QAI or through partnerships with the NASDAQ, so you've got those capabilities, but to actually deliver value to the end user, it's really about how, are we really bringing that to life in a way that can have adoption? And so Sean, what do you think is left to be done? I think exchange traded products has come a long way, and excited to hear about some of the work you guys are doing in crypto on custody and making that product more accessible in such a regulated space. Like, is there more to do there? What other areas do you want to highlight where there's more work to be done, whether it's by your partners or by NASDAQ directly?
Thanks for bringing that up. It's a couple of areas. I mean, one, in general, we feel like that there's still a lot more white space to be filled in the use of options, within investment products. So we've had a great track record of success with Global X on ETF that we have, ticker QYLD. I mean, it has like an 11% yield, and it's something that is just very simple.
Which one was that? Just because we're nearing the end, so I like these little sound bites.
Oh yeah, it's ticker QYLD. We're basically you have NASDAQ 100, and you're selling basically a covered call. But with that, we've been working on expanding that lineup of all different ways of using options within the ETF wrapper, to provide different defined payouts or kind of ways of accessing the index. But the others you mentioned, is crypto, and that's even going back to some of the basic kind of investor education, something that we'll be kind of focused on, particularly coming into next year, of kind of understanding kind of the asset class, and particularly what we started to do on the index end in the space is launching an index. So back in earlier this year in February, we launched the NASDAQ Crypto Index, which we worked with a firm down in Brazil in launching actually the first basket crypto ETF in the world. It's actually it's the third highly traded ETF on B3. And now we're working here in the US with Victory Capital, who's offering a private placement that's tracking the index.
Oh gosh, we got to wrap up soon. But Stephen, how about crypto at QAI? Or I'd love to hear just a little bit more about backing by Forbes and maybe how some of those relationships are impacting your strategy to reach investors.
Yeah, talking about crypto for a second, we're actually releasing our first crypto-only product or crypto-only kit this week, which is going to be a managed quantitative crypto investing kit where folks can just invest into digital assets.
Nice.
And our AI algos manage the risk there. So it's a great way to get your toes into the water if you're trying to figure out whether or not you should be in crypto. Just the tab itself, that's a great way, at least the way we thought about it, is looking at the addressable market today, saying, how do you double it? The only way you double is you make it easier for people to begin to invest, not tell them to go buy Bitcoin, Ethereum on Coinbase, but make products that are easier for them to.
Yeah, not necessarily in a separate place where you have to go and engage and do that. So
that's one of the major innovations we're doing there. And, with Forbes, who's our strategic backer, the whole opportunity for us has been to work with one of the leading financial companies in the world, financial media companies in the world, to bring product and content, or in our case, interactive executable content, to a massive .com audience.
Yeah. Yeah, really focused on reaching more people, serving new expectations. And I love the sort of almost interoperability of how we can move from one product or one brand to the other. So thanks both, Stephen and Sean, for introducing us to game-changing work at NASDAQ and QAI. Really a pleasure to meet you both.
Thanks,
Same here. It's been a pleasure.
All right. Thank you, Catherine, for doing that. Well done, as always. All right, everyone. We are moving into our next award segment. I am joined by my Benzinga fellow team member, Andrew Labos, here. We've got some good awards. We've got some fun ones that we're about to do. First up is Best FinTech Accelerator. So these are sort of some of the forces that have been behind a lot of the massive companies that we see today, an amazingly important part of the ecosystem. Without further ado, let's read off these finalists. Best FinTech Accelerator 2021 Benzinga Global Fintech Awards. In third place, we have F10 Fintech Incubator.
In second place, close second, we have Huddle 50.
In the winner of the 2021 Benzinga Global Fintech Award for Best FinTech Accelerator is StartPath by Mastercard. All right, we are joined by Sabrina over at Mastercard. Congratulations on your award.
Thank you so much for recognizing Mastercard StartPath for Best Accelerator. We are so thrilled to receive this brilliant honor from all of you. As you know, fintech companies are contributing to the rapid digital transformation that's making lives of consumers simple and rewarding. And through our developer suite of products, programs, and solutions, we're really trying to open the door to fintech companies of all sizes to come and co-innovate with us. The StartPath program is one of the primary ways that we do this, where we connect our most promising startups to various business units so that they can access our technology, our solutions expertise, and our partners around the world. In the last 6 years since we've been a program, we've worked with nearly 300 fintechs in 42 countries, but we still have a long way to go. So thank you all so much for this wonderful award, and I'm so excited to see where the fintech space goes next. Thank you.
Absolutely. Congratulations to Sabrina and to the entire Mastercard StartPath team. All right, everybody. We are moving to our second award in this segment, Best Financial Research category. We left this one open-ended as well. We got all sorts of markets analyzed. I mean, we had, again, dozens and dozens of incredibly strong applications. We appreciate our judges for taking the time to go through them and be really diligent as they're analyzing all the companies that applied. Andrew, you want to tell us who's in third place for this category?
In third place, In Market Media.
The runner-up for Best Financial Research at the 2021 Benzinga Global Fintech Awards, Vinovest.
And the winner of the Best Financial Research Company Award is Toggle AI. Congratulations, RJ. I know we've been talking for a long time. You guys are doing some really cool stuff in the space. Well deserved. What are you most excited about on the platform?
Well, I'm most excited. Well, number one, to be recognized by you guys. Thank you to our team, all of our investors, and certainly all of our users who voted for us. We're really excited for the year to come and just helping every investor figure out how to navigate markets. I mean, we've seen tremendous growth, not just within our space, but in the broader space. And whether it's education or analytics and everything in between, certainly there's a lot of room to help investors continue to make better decisions.
Absolutely. Congratulations again. Well deserved. And looking forward to catching up soon.
Thanks.
All right, the next category we are going to be announcing most impactful brokerage executive. This is one that we've been doing for a couple of years. I say most impactful brokerage executive because that's where the award started. 7 years ago when we first created this category. It has moved to most impactful fintech executive because the space has exploded so much. A very, very amazing, very, very impressive alumni list for this category. The winner, as voted by our third-party judges, most impactful fintech executive 2021 with the introduction of TradeStation Crypto, James Putra. James, welcome back onto the stage here at the 2021 Benzinga Global Fintech Awards.
Thank you very much, Luke. It's been an incredible ride. I mean, I've been in many of those events with you guys and seen this whole history and watched you grow, and it's been fantastic. So I'm super excited to be here again.
Yeah, I mean, congratulations with all your success at TradeStation. I know that you're super involved outside of work as well in the space. So congratulations. An honor to give you this one, and I'll make you a promise. Next year, we're going to be doing this thing live.
Oh, 100%. I'll be there. And, I must say it's really I'm the guy with the hair that they put out front, but there's a huge team behind me that made this all possible. It's this was a massive team effort to get TradeStation Crypto brought to the world, and it wasn't easy. Every step of the way, there was a stumbling block, and the team did a phenomenal job to overcome. And we've launched an awesome business, and we're super proud. I'm super proud of the whole team, and I'm excited to accept this award on behalf of them. And thank you for everybody that voted. I know there was a lot of my extended family that was all excited about this, and we're all fired up. So thank you so much for everything.
Absolutely. Congratulations.
Thank you.
All right, Andrew, and we have one last award to give away in the segment. We are going to have one final batch of awards this afternoon. We're going to be getting into some education this afternoon, financial literacy. So stay tuned. But Andrew, why don't you take us through this next award?
So this one is an interesting one as the space develops. Most influential data scientist. And this one goes to Juan Pablo Villatoro at Core Monitoring Systems. JP, good to see you. Congratulations on the award.
Hey, Andrew. Thank you very much. It's really nice to see you as well. So I just wanted to take a second and thank Benzinga for this award. It is very rewarding to be recognized by the fintech community, especially with so many great projects going on right now. Core is a system that we have been working on for a while. Andrew, as you know, we started working with you since the beginning of this project. And Core is a securities litigation class action monitoring platform for institutional and retail investors. So please make sure to check our website at recovery.com. And again, thank you very much for the recognition.
Absolutely, man. Again, congrats, and excited to see what you do in the coming year.
All right, we'll be in touch.
All right, everyone. Stay tuned. Share this stream. If you're an individual investor out there and you're watching this, drop this in your chat room. Share this with the community. Tell them, hey, Benzinga is the place you need to be. They're recognizing some of these technologies. They're telling us what is coming next to capital markets. It's like your sneak peek as to how you're going to be investing over the next year. If you are in the industry, share this link with your coworkers. Celebrate the success we've all had together. I mean, it's been one of the wildest, definitely the wildest 2 years in brokerage, at least in the 10 years or so that I've been here at Benzinga. I mean, let's just get the full community out here. And if you are in the New York area, whether it's New Jersey, Connecticut, NYC itself, 5:30 Eastern today, guys, we are going to be at Stout Grand Central hanging out, throwing a big party to celebrate all this innovation that we have. Hang out with each other. Let's try to get some deals done. Let's try to network. But most importantly, we're going to be having some fun, right?
Absolutely.
All right, everyone. So I'm going to pass it off to my good friend and colleague, Brent Slava. We're going to be talking education, financial literacy. Can we get Brent onto the stream here, please?
Here I am. Oh, I had a horn waiting for me. I really appreciate that, whoever that was. It means a lot. You guys are looking fabulous. You guys look great.
Thanks, Brent. I mean, you've seen this bow tie throughout the years. We got to bust it out every year.
How's it been going today, guys?
Pretty good. I mean, Brent, if you think back to when we first did this, because you were here for the first FinTech Awards 7 years ago. I mean, how different did this space look?
I mean, I when we started doing it back, what is it, 2015? It was 2015. Yep. I mean, I thought fintech was huge back then, and it wasn't. It was still just, just budding and just emerging, and the changes from, getting more payments companies and more financial facilitation companies. I mean, it's a completely different industry, Luke. Absolutely.
Yeah, totally agree. I mean, there were account minimums, there were commissions. I mean, it wasn't seamless to switch between asset classes, right? You had stocks, maybe options. That was it.
Yep, absolutely. Well, here's to the next 10 years, right?
Absolutely.
Well, thanks, guys. I am going to be joined here we're going to have a little segment on education. We are going to be doing a little bit of education, but we're also just going to be talking about education for investors in general and how it's changed over the last year. And we are going to be joined here. There she is, Lorraine Kerr. She is Managing Director of Investor Education at TD Ameritrade. How are you today, Lorraine?
I am good. How are you?
I'm good. I'm excited to be here. I always like when the Benzinga events team gets to involve me a little bit. I'm always honored. And thanks for joining us today. And let's talk.
Thank you for having me. I've been watching all the awards. Congratulations to everybody so far, and hope you guys have a wild night later on.
Absolutely. All right, so let's jump right into it. We only got about 15 minutes here, Lorraine. And so obviously over the last year, so much has changed with the COVID pandemic and also the rise of retail investors. And I think you're in a really good position to, give us a look at what is the current state of education in finance, in the stock market.
Yeah, I mean, great question. And I think going beyond this last year and the COVID pandemic, I think, if we think back 10, 20 years ago, investing was in the hands of very few trading platforms. People didn't have as much access to the market. There was all of these kind of barriers to entry that over the years have been completely removed. So now what we're seeing is this kind of access and participation that we've always advocated for the retail investor, but it's finally here. And we saw some seismic shifts this last year and kind of a bit beyond it when we went to that kind of zero commissions environment. So now this kind of other barrier to entry in terms of cost has been eliminated. I think the onus is on companies like Charles Schwab and TD Ameritrade, as more people enter into the market, to make sure that we give them, of course, the best trading platforms, the best products, all of the access that they need to invest. But with that comes kind of a responsibility to make sure that we're also offering them the best education in terms of content that teaches them how to use platforms, content that teaches them how to understand the different products that are out there in the market, and then just content that kind of follows the market. I mean, I know you guys at Benzinga eat the market up every day. We want to make sure that clients have that access and can kind of follow what's going on in a way that they understand. For a long time, content and education around the stock market and investing in general was very much kind of highbrow language that was difficult to understand and dissect. And I think what we've seen is this shift towards speaking in the voice of the regular individual retail investor, so that things are easy to understand, they're easy to adopt. So I really think that's a seismic shift and kind of, a secular shift, if I'm honest, in how we kind of operate and offer clients that ability to interact. I think in terms of education, the big change that we've seen is consumption, which is wonderful. This is what we want to see. We want to see as more people open accounts and we see that trading volume rise, that we see people consume information more, because with information comes power, and it's the power to make good decisions and risk-informed decisions. So really what we kind of propagate at TD Ameritrade and Charles Schwab is to make sure that we have that up-to-the-minute information. We have kind of these learning endeavors that we offer people so they can achieve their goals. So again, from our perspective, the shift has kind of been maybe just an acceleration of, that retail investor really participating in the market for the first time at this level in history. And it's truly wonderful for the retail investor. And I think this is what we've always advocated for and will continue to advocate for.
And I love how you said it, a responsibility that a lot of these organizations are feeling. And that's how it should be, in my opinion. So I want to get specific here for just a sec. So, I think you just highlighted a couple things that have changed over the last year. What about a couple things that you think are gone forever because of the last year? And sort of like, how have those things transitioned into something else?
Yeah, I mean, I think that we've seen, I'm not going to say things are gone forever, but I think traders in particular have a really big sense of community. They like to kind of network together. They like to meet up and kind of talk about what's going on and what their strategies are. I think that ability to meet in person and have those interactions was kind of stifled a bit. I think we'll go back there, but I think people have realized that, we're not dependent on that interaction person to person. We can kind of do that in all these digital forums like you're doing today. And this past weekend, we just did the same thing. We had our investor education conference. That's usually a gigantic event out in Las Vegas that we obviously didn't do the last couple of years because of what we've seen. So I think it's just, an acceleration of a trend towards more of that kind of digital first interaction. I still think people need people, and I think that we get a lot of value out of those personal relationships, but I think this gives us we can actually do a lot via that digital medium. So I don't want to say it's gone away for good, but I think we're less reliant on kind of that in-person interaction, at least as like the first kind of interaction that we have with our clients. And I think as well, it really kind of put the impetus on all companies, whether within the financial services industry or not, to really accelerate their digital experience. If you can only interact with people in a certain way, you need to be on top of your game. So things like personalization, curation of content, making sure that, when you offer a trading platform, that you offer education around that platform. How do I operate within this environment? So one thing that we've really focused on is having people absorb the knowledge, right? Read, watch videos, take courses, all of those things that help them kind of arm themselves with that knowledge, but then also make sure that they have the opportunity to apply that on trading platforms. So at Thinkorswim, we have a paper money platform, which basically is, kind of paper or fake money, where they can go and trade in kind of a very simulated market kind of environment, but they're not putting their money on the line. So they're taking the knowledge they've acquired, they're interacting in the marketplace, but they're building up kind of that requisite knowledge before they kind of put their money on the line, so they can understand how their positions and their portfolio will perform. So I think it's really been a seismic shift in terms of now we really need to invest in that digital space and kind of blow that out of the water in terms of what we're doing. So again, I don't think anything has gone away. I'm going to kind of still think people need people and they'll want those in-person interactions, and we do a lot of that at Schwab and TD Ameritrade. But again, we can do a lot of what we did digitally, and really this has just given us the impetus to accelerate that experience.
Absolutely. And so you just mentioned, you know, what I would say is a pretty famous one there, paper trading for the Thinkorswim, for the Ameritrade platform. Are there a couple other features that you would, you know, specifically mention, you know, trying to give investors out there who are listening a heads up that maybe they should go check these out if they're looking for a little bit more education, whether it's on Schwab or on TD Ameritrade?
Yeah, I mean, I think the beauty of both these firms coming together, TD Ameritrade and Schwab, is that they're both very much invested in that kind of knowledge ecosystem. So, you know, you can offer the best products, the best platforms, but if you don't kind of interact with people in that you know, bring them that knowledge and how to use all these things, it's a kind of a fool's errand. You're not going to be successful. So I think that a lot of energy we put into is making sure that we surround clients with that experience. I would say paper money is a wonderful tool for traders, but outside of the trading ecosystem, we have an education center at TD Ameritrade. We have a media affiliate, TD Ameritrade Network, that follows the market all day long and really reports out. And I know you've been a guest there before, Brent. I'm sure. So I think that really just offering them those interaction points, and I can't stress how important that kind of colloquial language, that we're really reaching out to people in terms they understand. When it comes to trading in particular, I think, you know, when we release new features to the platform, whether it's new charting capabilities or changes and features that clients will use, we really make sure that we couple that with education. So last year we launched a new web platform called Thinkorswim Web. And one of the primary things we did, besides having all the wonderful features within that platform, is to make sure that you're embedding within that platform easily accessible, curated, in context education. So whether, you know, somebody's pulling the trigger on an order, do they understand the order types? It's right there. You can figure out, like, what do I need to know about this? So I think, you know, the expectation of investors is what we should really cater to. And their expectation is that you make their lives easier. So that comes in terms of the best experience and the best content when they need it. So we don't want to be searching around a website when we need to find context. So everything we have at TD Ameritrade is centered in an education center at tdameritrade.com, and also on the Thinkorswim platform right there where you need it. So again, I think it's like ease of use and making things easier to kind of grasp and use for investors is prime. So again, I wouldn't highlight one specific thing. I think obviously our charting capabilities are our overall offering is fantastic, but I think we have to continue to get better and improve. And as we do new things, partner that with content and education. I think that will really kind of help retail investors across the spectrum.
You hit the nail right on the head, I think, Lorraine. And I mean, that's why we're all here at the FinTech Awards, right? It's making people, you know, more accessible and getting better information to them. So I absolutely love what you're saying. Now let's get more specific here. Can you give a couple tips for investors out there? Like, speak to a new retail investor, give like a tip or two, your favorite tip or two, and then speak to like a more sort of advanced retail investor. Give them a couple tips or so.
Yeah, I mean, I'll give the analogy is that, you know, you don't, you know, go out and play a basketball game without having practice. So I think the one thing I would give for a newbie investor is arm yourself with knowledge. The best thing that retail brokerage firms are providing today is free content. There's so much stuff out there that can help you get where you need to go. So, you know, people pick up their phone, I think it's something ridiculous, like hundreds of times a day. All of these offerings are available on mobile. So use that to kind of build your knowledge before you go and actually put your money on the line. So I really think that, and we've seen that. I think that people underestimate how savvy, you know, investors are, whether they're beginning or experienced. They just really absorb content, but you have to make it easy and, you know, in terms of accessibility and easy to understand. So I think in terms of new investors, invest some time in just gathering and building that knowledge. And I think, again, the onus is on us. It can't be just written content. to have videos and interactive courses and prompts and kind of suggestions. So I think that, it's a reciprocal relationship. But I think, again, investing time and building knowledge is the best thing you can do as an individual investor to get comfortable and get more competent before you put your money on the line. In terms of a experienced trader, traders, especially experienced traders, like eat content up. They are like invested and they are super active in the markets, but they're also super active in consuming that content. So when a new product comes on the market, they are the people who are flocking to like understand that product, so they're ready to go. Once that product releases, they feel confident and competent in trading it. So I think in terms of like an experienced trader, we just have to continue to provide them with that market context. And a couple of years ago, we at TD Ameritrade launched through our media affiliate, the TD Ameritrade Network. And really that was the promise, and that was really a target audience that we kind of sought to cater to, was the active trader who wanted no nonsense breakdown and insights and education and kind of context. Here's what the market is doing today. Now, how do I manage my portfolio and my holdings in this context? So I think that, tuning into those kind of live broadcasts, it's available through the Thinkorswim platform. It's right there at your kind of beck and call. So use that as kind of something that sets context and give you that additional kind of edge in the market.
Love it. Love it. All right. A couple more really quick questions here. These are questions that I get asked sometimes, and I figured you're probably a better person to ask this question to. I get asked a lot, recommendation for a financial related stock market book, and then also like a top pundit or couple pundits out there to follow on Twitter or to follow on the networks.
Yeah, I mean, I'd be remiss if I didn't mention JJ Kinahan from TD Ameritrade's book on options. I think it's wonderful for beginners and kind of really sets the tone and the scene for understanding that kind of basic kind of option strategies and kind of talks people through. So, and then in terms of pundits, I am a huge admirer and follower of Lizanne Saunders at Schwab, and have been for years. She's like, obviously a female in this space. She's extremely knowledgeable. She really thinks about the psychology of investing in the market. And, she's really a tremendous resource for any investor, whether they're super active traders or, more kind of casual investors. She's absolutely fantastic in terms of how do I break down the economy and the market and tie all this information together. And again, I think at TD Ameritrade, from a trader's perspective, JJ Kinahan, he writes for us every day on our tickertape.com website with kind of market insights, and both of them are available on Twitter to follow. And I really think, follow as many people as you can. I think that, you want to make sure that you're going to trustworthy sources. There's all these new kind of avenues and ways that people are interacting as we've seen the last few months. So I think that, having that kind of broad spectrum of what you're listening to gives you context. And, a lot of these kind of people who've been in the industry a long time, they've been in the industry a long time for a reason. They know what they're talking about. So
Absolutely.
just two suggestions that I would definitely consider following if I was looking for a good perspective.
All right. It looks like we got maybe time for a couple more here. So let's see. How about we talk about, well, you know what? One thing that I didn't ask you was you were hinting, but you didn't give me, I think, a clean answer. Where can some investors out there find some of the resources on TDA or on Schwab? Like,
yeah,
do you have a URL or somewhere on the platform?
Center. So it's on at tdameritrade.com, and then we have an education tab. So you just click there. Kind of features learning paths for the new investor, kind of who has a very specific goal. Maybe I want to place my first stock trade or my first options trade. We also have a very strong presence on YouTube. So if you go to our TD Ameritrade YouTube page, there's a wealth of information, playlists, kind of compilations that make sense. And one thing we saw in this last year is like people were very focused on, I have a goal to achieve and I want you to give me very specifics on how to achieve that goal. So, our most popular content has been, how do I place my first stock trade? How do I place my first options trade? How do I place my first futures trade? So really like contextual education that helps somebody go from, this is what I want to do, I'm not sure how to do it, here's how you execute. And then on Schwab, they have an absolutely fantastic section, their insights section. Again, it's on schwab.com, and you can visit there and you get really good perspective from their research analysts, and then really good content. So I think, again, there's such a breadth of information. And one thing I'm excited about in this kind of merger that we're having between TD Ameritrade and Schwab is like all of that is going to come together in one spot for the retail investor. And again, it's just power in your pocket, right? That knowledge and that kind of context is going to be great for all of our clients.
Love it, Lorraine. Education for the modern trader. Thanks so much for joining today. Lorraine Kershey is Managing Director of Investor Education at TD Ameritrade. I hope you have a great rest of your day.
Thank you, guys. Have a great day.
All right, ladies and gentlemen, who am I tossing it over to?
Hey,
Spence.
There
What's up,
I
buddy?
is. There I am. What's up?
There you are. There you are.
There you are. There I am.
I'll
Crazy
let
that
you
we're-
have. I'll let you have at it, Spence. Have a good rest of the
Thank
day,
you,
man.
Brent. Appreciate that. Hey, let's bring on Peter Molmott. He's the CEO of IG US. Pete, how are we doing today?
Doing good, Spencer. How are you?
Doing fantastic. Bringing the energy. I love it. I
Well,
love it.
you back in the studio. That must feel great.
Yes, I'm back in the saddle.
Good for you.
Let's talk. Let's just start with. All right, we're pivoting the conversation a little bit from TD Ameritrade and broad investor education to Forex specifically. That is your bag. That's what you do. I guess first, just tell us about you're pretty new to. You're not new to Forex, but you're relatively new to IG. So tell us about that transition.
Absolutely. So I am new. I assumed the CEO role at IG about 2 months ago. Very exciting opportunity. But you're right. I started my career when I was 20, so almost 39 years ago, trading FX. And I'm dating myself, trading Deutschmarks. So,
wow.
Those haven't been around for a long time. In the pits of the Chicago Mercantile Exchange. So I've grown up, traded FX futures for 15 years, and then couple of partners and I moved off the floor and we did high-speed arbitrage in spot FX and FX futures, treasury futures and spot treasuries also. So I've been involved in the Forex world really my entire career. I've worked at the Chicago Mercantile Exchange, crafting and building a program for them, building a active trader experience that was really an exciting project. Went and was fortunate enough to work with Tom Sosnoff at Tasty Trade, building out their futures program. And previous to this, I was involved as chief commercial officer at the Small Exchange, a brand new futures exchange. So this opportunity presented itself, and I was so excited. IG has been in the U.S. just 3 years. They're established players that have been here several decades, and we are a challenger brand. We're coming to the marketplace with a very exciting new offering, an incredible platform, an incredible value proposition in terms of our pricing, incredible customer service. So we're bringing all these in to really challenge the existing players, the existing infrastructure, and bring retail, the next iteration of tradable opportunity at Spot FX. Now, for me, as a career FX trader, there is always so many opportunities. You know, we offer at IG 80 different FX products to trade, and the euro, sterling, cable, we call it, yen, are all some of the big dollar-based pairs. There's $3 trillion a day, as you know, Spencer, that crosses the books in the world of FX. So an incredibly liquid marketplace. There are so many different pairs that you could trade, though. You can always find an interesting tradable opportunity. And through IG, it's just not dollar-based pairs you have access to. Euro, yen, Canada, Aussie. Some of these crosses that have really been the focus over the last 6 months are all tradable opportunities for you to diversify, for everyone looking to diversify trading strategies. So for me, it was an exciting opportunity to get back to my roots and really take a brand that is new to the marketplace and grow it to the next level.
So maybe, you can talk about IG because, as you mentioned, it relatively new to the US. I'm sure we have people watching overseas that are like, duh, I know what IG is. But for the US audience, which, usually we're having to explain things to the international audience, but no, for the US audience, tell us about IG.
Sure. So IG, and you're right, Spencer, IG's been around for 40 years, and they're a huge player in CFDs, which are, for people who don't know, contracts for difference. It's in share trading and in spot FX in Europe for decades. So they looked at the U.S. as a tremendous opportunity and to really disrupt the marketplace and bring an offering that isn't available to active traders right now and self-directed retail traders. So for us, it was establishing a presence, getting the message out, getting our name out there. As we are regulated by the NFA, CFTC, so we are playing with the big boys. We are not an offshore provider providing you obscene amounts of leverage, but with no regulation and no customer protections. We are that regulated entity that is safe and known. And our brand is backed by, I said, 40 years of experience. So it's exciting to bring that to a customer landscape where IG is not the first name that comes to mind. But hopefully, as we push forward with education, with engagement, and the value proposition, it will become a household name.
Yeah. So let's talk about the product and the platform, right? Because anyone watching, I'm sure, is thinking to themselves, well, hey, I can trade Forex on any number of places, right?
Yeah.
Why would I go to IG, right? If you've all got the same pairs, right? I guess it's about more. You mentioned having the 80 pairs. It's about more, or 80 markets. It's about more than just that, though, right? Like what actually matters? Because surely it's not just the number of markets you provide access to, because that's commoditized.
You're absolutely right. And that was you took the words out of my mouth, literally, Spencer. Product in the US especially has been commoditized. It's interesting. It's very different. We can trade futures. We can trade options. We can trade OTC leverage products like Spot FX. Very different story in Europe. Those markets really aren't available to Europeans. So we're in this tremendous geographic area of the United States where we have thousands of products that could be put in front of us. And Spot FX is commoditized. And I think, Spencer, I don't want to put words in your mouth, but what you're saying is the offering, everyone is offering the same 70 or 80 currency pairs. Everyone is offering the ability to trade them. What's great is, trading them 24/5. How do you differentiate yourself in a cluttered environment with a product offering that a lot of the other guys have? Well, for us, it's experience. It's that client onboarding experience that is simple, elegant, and straightforward. It's easy to onboard at IG and get trading right away. Then we go through the process. How does the trader engage with the markets? There's nothing more exciting than watching prices move. And the ability to engage with them in a comfortable, easy, straightforward fashion. The platform experience is so important. And we have built a truly unique platform offering. So you've got a tremendous platform. You've got markets that are moving. The last leg of the tripod is, okay, these markets are moving. Why? How can I start to learn about movement? How can I start to learn about product in this world of FX? Understand, and then start to put this incredible platform and these very liquid markets that are moving around the clock, 24 hours a day, put them to work. So those three legs we bring together in a very exciting proposition that makes that experience for the customer, from onboarding to education to adoption, seem, as traders, even for me going back 40 years, you looked at a new product, whether it was moving over from me trading US government debt to trading German debt, Bunds, Bobbles, and Schatz. There was always a lift involved, and you always weighed the amount of potential profit versus the time or the lift in terms of cost, in terms of effort to adopt product. We want to minimize that lift, lower that friction. So we have an incredibly competitive pricing, liquidity in our platform, and then that experience of coming in and making that lift collaborative by providing content, by providing education, by providing a demo environment where you can learn and try out your trading strategies, and then the experience of trading. We also have tremendous customer support, and you're not getting an automated robo-dialer. You are talking to a body around the clock. And that's great. I think all of us like to, as I say, have a guy. There's somebody we want to reach out to. So very exciting offering, very exciting time to grow in this business that is huge in the U.S.
How is selling, though, to a U.S. consumer base different than international base? Because U.S. consumers, most of the Forex activity happens overseas, right? So I guess, like, how do you reach those U.S. consumers? How do you not just sell IG, but sell the idea of Forex, right?
Right. Yeah. And you know what? In the world of, there's got to be 300 futures out there, 80 pairs, as we talked about in FX, and I don't know how many tens of thousands of stocks and ETFs. So in that world of huge product availability where we used to have to fight our way out of a pit or pick up a phone to trade a certain product. We can just drag our mouse across and trade any number of these. The offer of FX and the diversification aspects that foreign exchange trading provides you, it's fascinating that people are trading. There's one level of diversification that's having some Amazon, having some Tesla, and maybe having some Ford. Now, is it a diversified portfolio? It's a start. But then we look to add other products and other opportunities. And within that, the world of FX plays an important role. And you know what, Spencer, you make a great point about U.S. traders are a unique breed. Unlike the rest of the world, we look at everything kind of internally. And what I mean by that is, the gold we trade is priced in dollar terms. The crude we trade is priced in dollar terms. Everything we trade is priced in dollar
that's the way I like it.
Yeah, but you know what? The rest of the world looks at it differently. And how do they look at it differently? Through the currency lens. So that currency product is an important component of understanding part of how everything else moves in the world globally. So if currency is the glue that kind of drives and is the connective tissues between all the different zones of the globe, how can I add currency exposure into my portfolio, which is a true piece of diversification? Everyone should be looking at, how do I add a number of occurrences to my trading, which smooths my revenue, smooths my profit targets, and then trading small and diversifying through a number of different products and asset classes. That's where Forex becomes such an important piece. It's that next level of diversification in all your trading. It's an important one to do that, to really be able to maximize your returns on capital. So I really feel that, it's interesting you mentioned it, because Forex sometimes it's, well, how does Forex fit into everything else I'm doing? It actually lives in everything else you're doing. It's an important piece to add to your trading. If you're an active trader, if you're a self-directed trader, this is your next branch of diversification.
Yeah, I'll never forget the two nights I'll never forget as relates to Forex were both actually in 2016. It was Brexit and the 2016 presidential election. And just being at the office at 11 p.m. and watching, there were no other markets open. It's just really just the Forex market, and watching those markets react on both of those nights and do some crazy things was something that I'll never forget. Since that year, since those nights, we have had a new asset class, gain and mainstream entry, and that's crypto. And I'm wondering what advice you would give to the crypto version of you, because you know what it takes, Peter, to have faith in a marketplace and to both from like the trader side and now also as someone who has a role in providing access to that marketplace. And so what it takes to build that trust and build that faith, and we're seeing that come and go a little bit with a lot of cryptocurrency, with a lot, it definitely was maybe a lot of trust on the retail side, very little bit trust on the institutional side. What advice would you give to the crypto version of you? In terms of just, how to create that trust?
Right. For the crypto version of me, I go back twofold. One is as CEO running the business. The other is my previous life as a trader.
Right.
As traders, we live for fractured markets. And what I mean by that, as a market maker, we want the product to trade at 20 different price levels in 20 different places. And that's what we arbitrage. That's the world of crypto right now. That was the world of FX 25 years ago. The FX markets have matured. They're regulated. They are uniform in a good way. So there's transparency. Crypto right now is at that evolutionary stage where there are so many platforms out there, so many different venues trading the exact same product with different price levels. Now, as an arbitrageur, as a market maker, you love that because you're buying and selling where it's cheap, you're selling where it's rich, and doing that back and forth all day. Is it an efficient customer experience? Absolutely not. Is there slippage, or you and I had talked briefly, friction? It's a great term that I like to use. What's my cost of doing business before I'm right or wrong? In other words, every trade we make in the in the tradable community is a binary outcome. If I buy it and it goes up, I win. If it goes down, I lose. So one of the biggest factors in that, I want to be able to rely on my opinion whether or not I have a winner or a loser. What comes into play? Friction. That's commissions, that's slippage in terms of my order fills, and that's liquidity. Now, if I'm missing any of those pieces, liquidity is critically important. We've seen gaps in crypto where Bitcoin's traded from 58,000 down to 18,000 and back. Any new market, and it's not they're bad. It's any new market is prone to that when liquidity is bifurcated or trifurcated or spread out across 100 different players. You ideally want access 24 hours a day. Crypto gives you that. So do we, which is great. You want liquidity. Now, their liquidity is an evolving thing. So I would, IG me would say to crypto me that you need to make a stable platform that is easy to access and has a robust liquidity profile. Those are all things, and that's accountable. And what I mean by that is regulated, is held to a standard. Right now, crypto isn't any one of those. Regulation is fragmented. Nobody knows how quite it's going to be regulated. Pricing is fragmented, and the companies themselves are sometimes put in regulatory dilemma. So, it mirrors some of the benefits of FX, the access, the interesting movement. I mean, you can look through digital assets, just not Bitcoin, Ethereum, but go down all, Shiba Inu, all those different coins are interesting tradable opportunities. But is there liquidity? Is there a guarantee or a regulatory environment that lets me know I'm going to put my money in and trade it? I want to get it back out. Yeah. Those are the challenges of trading digital assets right now in my mind.
For sure. Peter Momat is the CEO of IGUS. Peter, time flew. We were having so much fun, but time flies when you're doing that. So thank you so much for joining us today at the Benzinga Global Fintech Awards.
Thanks so much for having me, Spencer. I really enjoyed it. Appreciate it.
All right. Thank you, Peter. Hey, I was told I'm supposed to throw it to someone now. Who am I throwing it to? Let's find out.
Oh, you're passing it back to me, Spency.
Okay, go.
It's been fun watching your background throughout the day. It was a little bit bright. Now we see the vivid Michigan fall colors. Okay.
Yeah,
appreciate that.
It's gotten darker.
Gotten darker. All right, Spencer, I'm back, which can only mean one thing. We are doing a next round of awards. That's right, guys. We are down to our second to last batch of the day. Stay tuned. We're going to do an award segment now. We have one more award segment, and in between, we are going to be having an exclusive conversation with NASDAQ. Everybody knows the name NASDAQ in this space, right? What are they bringing to markets? How are they transforming lives? So stay tuned. Without further ado, let's get into this next batch of awards. First one that we have up, another brand new category for 2021. This is not one that we've done before. Here by popular demand, we had so many millions of Benzinga.com readers saying, hey, they want their social media influencers, personalities to be recognized. And so we are going to announce the first winner, Top Financial Influencer. That's the name of the category, Top Financial Influencer. Winner is Jaspreet Singh.
What's up, everybody? I am Jaspreet Singh, and I know what you're thinking. Brown guy, beard, this must be a video on how to make a bomb. Sweet potato pie, but you're wrong. I'm here to talk to you about your wallet.
Jaspreet, what's going on, man? Congratulations being the first winner of this award.
Wow, man. Thank you for having me. This is, wow, amazing. Such an honor. Thank you for having me on. And I appreciate the award.
Absolutely. And let me ask you this. What inspired you? What motivated you to get started? And what's the impact that you think you've had?
Well, I started as an accident. I was working on a different business. I got scammed working on a different business that I was working on. And I was so irritated because I never had any sort of financial education when I was growing up. My parents didn't talk to me about money. I had no idea what investing was or passive income or anything related to that. I thought that the only way you could become a doctor was, the only way that you can become successful was by becoming a doctor. And so when I started learning about money, I was like, holy moly, there's a whole world of financial education that I was never exposed to. So I started doing a bunch of different businesses. Then I got scammed in a business, and I was so angry that I was scammed that I started putting out content under the alias Minority Mindset on how to launch a business without getting screwed over. And the whole idea behind the name Minority Mindset was you have to think differently than the majority of people. So I was putting out this content. I started putting out stuff on Instagram, and everybody said, yo, you need to start a blog. And I was like, well, English is my second language, so you don't want me to start a blog because you're not going to understand anything that I'm saying. So I'll start making YouTube videos. And when I started making YouTube videos, I didn't really think anything of it. It wasn't really an intention of starting a business. It was for me just putting out content. And it's crazy because I was making videos and a friend asked me, hey, how much money are you making off your videos? And I was like, what do you mean? I'm not making any money. He goes, didn't you turn your monetization on your videos? I was like, I don't know that you could do that. So he goes onto my YouTube channel, shows me how to turn advertisements on my channel. So it was really just a hobby. And then the channel started to grow. People started to really resonate with the content, partially, I think, because I'm just real and honest. I say things from my own personal experience. You might not like what I say, but everything that I say is from my heart. I speak everything from my own passion and my own experience. And we started to grow, and that's when I had to make a decision. Do I continue doing this minority mindset thing that's not making any money, or do I pursue this business that's making money, but I'm not very passionate about it? So I decided to follow my passion, even though it wasn't profitable at the time, go through with minority mindset, worked on growing our YouTube channel, and then now we're one of the fastest growing financial education and media companies on the internet. And it's crazy that it all started from YouTube. Like it feels unreal.
Yieldstreet, let me ask you this. What cute little downtown is that behind you?
Oh, we're in a suburb of Detroit.
Called?
Northville.
I recognized it. That's where I grew up.
We're not too far from you.
Awesome, man. Well, we're going to have to get you down to Benzinga HQ. Yieldstreet, congratulations on winning your Benzinga Fintech Award.
Thank you so much. Thank you again for having me. I really appreciate it.
Absolutely. All right. Next up, we are moving on to the robo-advisor category. We are going to robo-advisors. This is a category that's been around for several years here at the Benzinga Global Fintech Awards. In third place, best robo-advisor, becoming an increasingly crowded field, we have, can I get a drum roll? Interactive Advisors. In second place, best robo-advisor, we have Ozone Finance. And the winner of the Best Robo-Advisor 2021 Benzinga Global Fintech Award is Titan.
We believe adding some exposure to cryptocurrency can improve your portfolio's returns on both an absolute and risk-adjusted basis. That's why we're launching Titan Crypto, the first actively managed crypto product available to all U.S. investors.
All right, we are joined by John over at Titan. John, congratulations to you and the entire Titan team. I've watched your growth from afar over the years. Tell us a little bit about Titan.
Luke, this is awesome, man. Thanks for having us. We are honored to win the Best Robo-Advisor, although we are a bit of a different type of robo-advisor in that we actually do have humans invest in your capital. But no, at the end of the day, we're an active investment manager headquartered here in New York. I'm in the beautiful new HQ, although I'm in the ugliest of the new conference rooms. But no, we're working with about 40,000 clients today, managing 4 active portfolios where we are buying and selling stocks and now cryptocurrency, as the video has shown, on behalf of our clients, and really trying to just explain each and every move that we make. Our clients are bored with ETFs, and they want to aim to outperform with a portion of their portfolio, and thankfully they've chosen to come to Titan.
Awesome. And John, you said you're here in New York. Are we going to be seeing you at 5:30 at Stout Grand Central?
You know what? Let me go talk to the guys upstairs because I think I could make a 5:30 Stout appearance today.
All right. Not just you, the whole crew, okay? I don't know who you have to talk to upstairs. The only person upstairs I talk to is God, but go talk to the guys upstairs and see if you can get the whole crew to come out.
Let's get it done. This is great. Thanks, Luke.
Absolutely. Congratulations again. All right, everybody. Moving on to the next category here at the 2021 Benzinga Global Fintech Awards, we have Best Portfolio Tracker. You need to keep track of your investments. You're in multiple assets. You need to see what's going on, multiple accounts. This is what the portfolio trackers are out there doing for you. I am a new portfolio tracker user. I had previously just, relied on Excel to manage all my different accounts. I'm telling you, it will make your life easier if you give it a go. Third place, Best Portfolio Tracker. We have Advizon. In second place, for the Best Portfolio Tracker 2021 Benzinga Global Fintech Awards, we have Statfolio. And the winner, Best Portfolio Tracker 2021, as determined by a panel of third-party judges, the company I've seen popping up more and more. It's Accointing.
Introducing Accointing.com, the all-in-one platform that allows crypto traders to track, report, and manage all of their cryptocurrencies on one platform. With connections to over 300 wallets and exchanges and more than 7,000 different tokens, Accointing.com is the revolutionary new tool that every crypto trader has been looking for.
All right, and we are joined by Dennis over at Accointing. Dennis, tell us a little bit about the company and congratulations on winning the Best Portfolio Tracker.
Yeah, thanks a lot for having me and thanks a lot for the award. That's amazing. Very honored to receive that in the name of our entire team. So we're actually like a portfolio tracker by heart because we decided to build that as an infrastructure play for this very complex crypto market. But in addition to that, we also do any sort of compliance reporting and tax reporting, which is something that obviously not a lot of people like, but I really like the crypto environment and I want to help that environment to grow globally into a really regulated financial system. And so we decided to build that entire platform that allows you to keep track of everything, report it, be compliant with the market, and live in that market in a very healthy and legal way.
Awesome. And Dennis, where are you joining us from?
I'm joining from Zug, actually, from the headquarter in the Switzerland Crypto Valley, if you heard about that.
Absolutely. And what time is it for you right now?
It's now almost 10 o'clock. So
all right. Well, we appreciate you staying up, sticking around, and being here to claim your award. Dennis, once again, congratulations.
Thanks a lot.
Absolutely. All right, everyone. The next award that we have, this is a special one. This one stands out from the pack a little bit. This is one that we've been doing for all 7 years that we've been here hosting these Benzinga Global Fintech Awards. This is the Lifetime Achievement Award. For our space, I don't know, I look back at the alumni. I don't know if I've seen a stronger or more impactful group of people. I mean, these are the folks, these are the names that have really revolutionized the industry. The fact that, my little cousins can, go on their phone, be connected to markets nonstop, be investing, be involved, be engaged. It seems like, that's the way that the world is to them, but it was the hard work that a lot of our alumni and this year's winner put in really democratizing markets and making them accessible. So I'm proud to announce the 2021 winner, Benzinga Global Fintech Awards, Lifetime Achievement, Thomas Petterfee of Interactive Brokers. All right, Thomas, congratulations on winning the award.
Thank you very much for the award. My greatest achievement was building the company, Interactive Brokers. And the company's most recent achievement was the building of the Impact app that was released just a few days ago. It's a beautifully designed, simple to use investment tool dedicated to align the user's investment choices with her values. We hope that people will try it, download it from the App Store, try it and love it just as much as we do.
And Thomas, I've had the honor to meet you before and hear your story as to how you started Interactive Brokers, and I mean, really built the business from nothing. I hope you don't mind, but I'm going to ask if you could take a couple of minutes and share that story, sort of the early days and what inspired you to build Interactive Brokers for anybody out there who hasn't had the chance to hear it.
So when I came from Hungary, I was 21 years old. I couldn't speak English. I had to make a living. So I thought that the easiest way to do that was to learn computer programming, which I did. As a computer programmer, I got a job on Wall Street. And one day I was asked to figure out how to price put and call options. And eventually I came up with a program to do that. And later it turned out to be not very different than Black-Scholes. I was so enamored by my way of doing it that I bought a seat on the American Stock Exchange, became a market maker for options on the floor of the exchange. I built a company by hiring more and more programmers, and eventually, we became the biggest market makers in the world. We had 220 people on the floors in the US. That was still open outcry. And then we were members all over the world in electronic exchanges where we could just plug in our machine. And so eventually other folks came in. We started a brokerage business on the back of our international network. Other folks came in, they started to buy order flow. We didn't like the conflict, so we gave up the market making, and we are since continuously growing electronic broker on the back of our market making business, which we have closed.
Awesome. And I will admit, I'm an Interactive Brokers customer. You guys also launched crypto recently. I've seen tons of improvements to the interface. So Thomas, congratulations on all the success. I mean, it's truly an amazing company you've built.
Thank you. And don't forget to try our Impact app, IBKR Impact app from the App Store. Easy as pie.
Awesome.
Okay.
I have not given it a go yet. Shame on me, but I will absolutely do that on my way home back to Detroit.
30 seconds. Thank you.
Absolutely. All right, everyone. There you had it. Thomas Petterfy, winner of the Lifetime Achievement Award here at the 2021 Benzinga Global Fintech Awards. And guys, if you have not read up on Thomas's story, take some time to do it. It'll motivate you. It'll teach you about how markets developed. Thomas is incredibly humble, but he really is one of the pioneers that made financial markets what it is today. I'm going to keep us clipping here. Next up, we are going to be hearing from NASDAQ. I've got my Benzinga colleague, Dustin Blitchock, editor at Benzinga, is on the stream now. Can we bring Stephen Kalani from NASDAQ on the stream as well? But another good friend of mine. Everybody knows the name NASDAQ. We're eager to hear what's next, what NASDAQ is making available and bringing to market next. And Stephen, what I want to know, this is a little bit selfish, but am I going to be seeing you at 5:30 at Stout Grand Central?
Luke, I'll be there at 5:25.
Okay, perfect. And are you going to behave yourself this time? We don't want an incident like last time.
Until 5:30, yes.
Perfect. All right, I'll let you guys take it away.
Thanks, Luke. I'm Dustin Blitchock, an editor here at Benzinga, and I'd like to welcome Stephen Kalani, the Managing Director of Investor Intelligence at NASDAQ, to the Benzinga Global Fintech Awards. Hi, Stephen.
Dustin, thank you for having me.
Thanks for being here. I was hoping today we could start off with some recent fintech news from NASDAQ. You launched a cloud-based data link platform on September 8th. And I was wondering if you could tell us today what this product means for NASDAQ's customers.
Yeah, absolutely. And thanks again for having me. NASDAQ and both myself, really appreciate the partnership that we've had with Benzinga over the years. So I have to start with that. But NASDAQ Data Link, what you just mentioned. So to put it very simply, NASDAQ Data Link provides ease of access to the complete ecosystem of data that NASDAQ services to our customers. So that is both content that we provide, we'll go into it a little bit, but anything from your more traditional data sets to some of the more innovative solutions that we've put into the market as of recently. And then also a suite of APIs that power it as well. So for any new or existing customer, NASDAQ Data Link is going to be the platform that is essentially the centerpiece of the discovery process whenever a new data need is identified by one of our customers. We're confident that it's going to make the world a bit of a easier place to manage in the capital market space, and in terms of integrating data into processes and applications. I think Data Link is a step in the right direction.
Well, congratulations on the new product. And I guess I have a few questions about it. You mentioned both traditional and innovative data, and I looked at, I believe the website is data.nasdaq.com.
That's correct.
I'm seeing more than 250 data sets available. Is that right?
Yeah, absolutely.
And so I know that you mentioned both traditional and innovative data. Would you like to talk about just some examples of that? I know that there's more than we could ever talk about today, but just some of your offerings to give people a look at just the breadth that's available.
Yeah, absolutely. So NASDAQ as a regulated exchange has been providing what I consider traditional data for many, many years. And that can be, real-time feeds of our equity products, of our options products, indexes. NASDAQ is a calculator of over 45,000 indexes, mutual funds, and, different fund types as well. That all falls into the bucket that I would describe as traditional data or core data, some would say. And the clients of that will be your retail brokerages or direct market participants. But NASDAQ, in the last 5 years, I would say specifically, has really taken an approach to expand our innovative data solutions, or some would say next gen data solutions. And that could be, there's a lot of different providers that we work with, some third party, some in-house, but that could be thematic concept information. So if you want to see how ETFs relate outside of something in a more traditional sector-based classification, that's something we provide. ESG is certainly something that we talk about often. If you want to get some data on both U.S. and international public companies to get a breakdown of how diverse their board is from a gender perspective, that's something that we can provide as well. Supply chain is another one that I certainly would mention. I think that's pretty topical these days. We have data sets that will take a look at companies that might be a supplier to a business, but what about their downstream suppliers? Say that you are working within the e-commerce space, but the businesses that provide the servers that actually run that infrastructure, say that they're sitting in a shipping container off the coast of California. Some of this data can help you get a sense of what the downstream impact of supply chain risk would be. So there's many different data sets that fall into both camps. And Data Link is the easiest way to be able to consume and understand all of what NASDAQ has to offer.
That's amazing. So some really topical data. You just mentioned a few things that are in the headlines right now, including supply chains. Stephen, how does your division, which is investment intelligence, fit into the broader business of NASDAQ?
Sure. Yeah. So I work in NASDAQ's investment intelligence business, and that is a sexy way of saying our data, indexes, and analytics business. Okay. Outside of that business, within the walls of NASDAQ, you also have our market technology business. That will be if, say, a company wants to spin up their own exchange or their own ATS. NASDAQ obviously runs multiple exchanges both in the U.S. and globally. We can provide the infrastructure that actually powers our exchange to you as a downstream customer to run your facility off of that same technology. That's one example. We also have our corporate platforms and listing group, and that's if a company grows to be a certain size and they want to IPO on NASDAQ, that's a big business line of ours here as well. And then we also have our European and North American markets team. So if you're a direct market participant or a market maker and you want to talk membership, you want to talk, the different market structure and different tiers of accessing the exchange, we have a very built out team on the market side that will tell you everything you need to know about how to trade with the exchange.
Okay, looking at the website for the new data product, it seems like everything is built around the cloud now. Would you want to just go back a few years and talk about when NASDAQ, which of course is a storied name on Wall Street, started building cloud products and why, and where you're at today?
Yeah, I mean, the story actually goes all the way back to 2008 when NASDAQ made the decision to adopt a cloud approach to diversifying different pieces of our business. So since then, we've launched certain products that are based, or I should say, powered by the cloud. A market replay product, which gives you the ability to go back in time and look to the microsecond, where a certain trade has been placed. Our data on demand product, which can get you data going all the way back to the late 1990s in terms of access to understand where different firms traded at what time. And then fast forward a few years, you get to data link, and there's going to be a continual approach to having a diversified cloud offering for our customers. And for the why piece, we are dictated by what our customers want. So as we have continued down the path of working with our direct market participants, anybody that has a retail facing business, especially the brokerage and the research side of the businesses, we have gotten the sense from them that a cloud first approach is the way that they're moving. So we want to move in that same direction with them.
Okay, and you had just mentioned the retail side of the market. And of course, during the coronavirus pandemic, it seems like one of the biggest market trends has been a real rise in retail traders and investors. We saw that with the GameStop short squeeze most famously, and many other stories that we've written about here at Benzinga. And I was wondering, what the last year or so has looked like for you from that perspective. What role is NASDAQ playing in this whole market dynamic with your products?
Yeah, the retail investing phenomenon, if you want to call it, has really been an amazing story to watch. We certainly here at NASDAQ have been dialed in very closely since the pandemic and even before. A bit of a personal anecdote. I've been with NASDAQ for over 7 years. I've always been working in the data business and alongside our markets team that I mentioned previously. And we've never seen the emphasis on retail investing that we've seen since the pandemic. That's both from the different platforms that support the retail investor all the way down to the retail investor themselves. So we're very focused on partnering with those retail brokerages accounts, helping with things like education in the markets. There's more market access to the retail investor than there has ever been previously. So a big focus that we have is one, ensuring that they have safe and accessible access to the markets, making sure that they understand the markets. Education is a big thing that we focus on. And then, with that, we have seen new retail facing applications, whether that be a research application or a brokerage application, coming to NASDAQ, almost on a weekly basis, over the course of the last, let's say 13, to 16 months, who want to capitalize on, the new interest that we see from the retail segment. Show that, that kind of leads me, full circle to talking again about data link and, our cloud presence, for a lot of these firms who, to be completely blunt, sometimes are, a 1-2-man shop, educating them on the data space is part of it, but they want data solutions that are powered via the cloud. Some of these more traditional ways of consuming data, they're just simply not familiar with, their computer science background that they may have gotten in school, or something that they learned in their off hours, is very much so tied to the cloud and being able to understand different languages that are powered through something like NASDAQ Data Link. So, we're not exaggerating when we say that, these new aspiring firms are somewhere we spend a lot of time with. And, we certainly hope that trend continues into 2022 and beyond.
It's interesting because what we're talking about is really sort of the behind the scenes of how all of this happens. Apps like Robinhood and TD Ameritrade and where the data comes from and how. Would you want to talk a little bit more about NASDAQ Basic? I know you had mentioned the role that plays with brokerage clients and others.
Yeah, absolutely. The NASDAQ Basic is one of the equity streams that we provide in terms of real-time or delayed data. Within the U.S. marketplace, there are certainly optionality that customers have when they want to talk about what data sets they're going to use to power their applications. NASDAQ Basic sits in a unique and valuable middle ground between being cost-effective and also accurate. NASDAQ runs several U.S. exchange facilities for the equities markets, which includes the NASDAQ FINRA trade reporting facility, which in today's day and age actually makes up the majority of the market share in the United States. So a lot of trading is taking place off exchange. And for regulatory reasons, those trades have to be reported to a trade reporting facility. And NASDAQ, because we have, what we like to think is, superior market technology, we've worked with FINRA to enable that data to be part of our streams. So a lot of the retail brokerage applications, all the way up from, a Robinhood or a Webull, but all the way down to some of these retail brokerages that are, spinning up over the course of the last several months, are looking to have that kind of fine middle ground between having a low cost solution, but one that is also, highly accurate throughout the trading day.
Stephen, thank you so much. I've taken this down to the very last second, which I usually do. I really have enjoyed getting to meet you and learn more about NASDAQ's data products. And I thank you for joining the FinTech Awards today.
Yeah, thank you again for having me. We very much so appreciate it. And, Dustin, I think we'll be working on some new announcements, some new news coming out in the next couple of weeks. So everyone should stay tuned.
I hope so. Thank you so much, Stephen.
Thank you.
Hello, hi. This is Justin Roberti. We're just about to begin a panel discussion on the new empowered retail consumer. So I should be having our cohort joining us shortly. There we are. Okay. I just thought we'd get some sort of introduction, but that was way more fun. Like I said about just being sort of blasted off, like transported. And all of a sudden everything starts. That's exactly what just happened. And hello, Crystal. It's good to see you.
Hi, good to see you.
I'm glad you could join us. So we have with us today Matthias Bauer-Langardner, a manager director of UK and Ireland Bitpanda.
Hello. Thank you very much for having me, Justin.
We have Crystal Rose Pierce, who's a partner with Unicorn Ventures.
Hi.
And we have Rehana Sharif Askari, Director of Investor Relations and Business Development with Grayscale.
Thanks for having me on. Excited to be here.
Thank you, everyone, for joining us. The intent today was to talk about really, there was a lot of talk earlier in the year, particularly about the role that institutions played in this, long. Prosperous bull run that we've had. Of course, Bitcoin just hit 68,000, hit an all-time high. So let's hear it for that. It's good to have some good news in crypto that isn't necessarily related to NFTs for once. It's a nice change of pace. But obviously there's more than just institutional involvement driving this kind of huge appeal. I mean, at some point, certainly if you compare talking about crypto right now versus 5 years ago, when talking about crypto in a company that weren't crypto friendly was quite nearly impolite, frankly. There were so many people that didn't want to hear about it, reporters that didn't want to hear about it in particular. It seems things have changed a lot. And we'll start with you, Ray. Where do you think this shift in perspective, the kind of the great mainstreaming, which I believe is underway, where did the shift in perspective come from?
The people have called it the age of the retail investor. I think since early days for digital assets, retail investors have played a large role. Certainly institutions over the years have gotten more involved. But that role for retail investors has really changed. It's as though, and I will give an anecdote, but Bitcoin is almost a foregone conclusion at this point.
Sure.
And just like in a traditional asset class, we see folks diversifying. So too are we seeing that in digital assets. So for example, I have a sister, she's a doctor, she's a surgeon. She has nothing to do with cryptocurrency, never has had any interest, barely has time to breathe. Or, I'm like, are you coming to my wedding? And no response. I get a text from her the other day that's like, hey, Ray, like, should I buy something in the metaverse? And I'm like, wow, Bean, like, that's really interesting that you should bring that up. So that's just really telling of what we're seeing. And
is she going to have her wedding? Is the wedding in the metaverse?
There is no actual wedding.
She's trying to get her.
I'm not getting married. But it's telling. It's a good analogy for how engaged she is on the chats with us.
Sure.
But this is the sophistication that the investors are really moving like beyond Bitcoin into other asset classes. In the metaverse, Facebook's put the metaverse on the map. And now we're seeing a ton of interest in Decentraland, for instance, which is a DAO that has built a city on the metaverse. We have a product that's getting a lot of interest. So the diversification within digital assets is something that we're seeing a lot from retail investors, and is a really natural evolution as the asset class becomes more mainstream.
Mm-hmm. It's true. I've interviewed just traditional financial planners and nothing, not relating directly to crypto at all. And at this point, particularly for millennials, but for Gen X as well, having crypto within your portfolio is just kind of standard these days. But again, any asset class, gold, 10,000 years old, Bitcoin just passed its 12th anniversary, I believe. The two are not the same in the grand scheme of things. Not when you put it that way, anyway. Not in terms of safe havens. So how did we go from some really kind of unfair beliefs that I think the general public had about crypto, which is it's all a scam essentially. That's what I heard from everyone up to maybe about 3 years ago. To Bitcoin being considered a safe haven by many and a necessary part of or crypto being a necessary part of your investment. What do you think has brought us here, Matthias? It certainly has been a busy past 2 years with many and quite eventful.
Oh yeah, definitely. I agree, Justin. It has been quite a rough ride even in the last couple of years. To be honest, I joined Bitpanda only 3 months ago, so I've got a really good view on how the retail space evolved at Bitpanda, which, by the way, if you shouldn't know them, is one of Europe's leading digital assets platform. But I've also had the opportunity to actually see those things from a regulatory perspective, because previously I was working at the FCA leading crypto assets and DLT stuff. And it was quite interesting to see how the narrative shifted from actually what you just described, something that was just associated with financial crime, with illicit use, with drugs, to something that actually was talked about in the context of, can it revolutionize financial services? Can the technology revolutionize the services, which was the first thought some had. So we're talking about blockchain, we're not talking about crypto, we're not talking about Bitcoin, we're talking about the technology that underpins all of this, which was the first sort of like step into this new idea of having decentralized infrastructure as a first instance. But I've also seen discussions moving on from actually having these sort of like decentralized infrastructures to something that values digital uniqueness. And I personally think it's incredible to have something like Bitcoin and other crypto assets that are, for the first time ever, digital representations of ownership that are completely independent from third parties. And I think as retail is adopting, as the use cases are getting much more interesting, institutions are getting into this space, retail investors are getting into this space. I think there's a lot of legitimacy that has been given to crypto assets, and including, and that's sort of like what I was working on for quite a while, regulatory frameworks. They slowly evolve. I mean, obviously there is still a lot of regulatory uncertainty, especially around DeFi and all these innovative new products. But I think with the first steps into AML regimes, so regimes to tackle anti-money laundering, you can see the space really growing, and even extremely well-known regulators and personas from financial services, they now see that there is a merit and that there is something really, really interesting about this space, and they move on. So I think if you combine all of this, you start to understand why digital assets become much more important, why they are going to be part of a diversified portfolio going forwards, and why I think we are just at the beginning of a pretty exciting journey. This is just the start. It's definitely not the end. Not for digital assets and not for retail investors at all.
Those are all observations I expect to resonate with the crowd watching, and certainly resonate with the panel. But I still wonder if there's have we and I'll bring this to you, Crystal, since I'm going down the order. Have we? Is it a matter of have we made the experience more accessible? Is there better education available? What's gotten people outside of the crypto sphere, which used to be a really hard delineation between those who would talk about crypto and those who didn't? What's brought it to the fore of public discussion?
Okay, mark the timer when the first mention of NFTs happens, because that's now. I think
no, I mentioned them earlier and how I was glad to not be talking about them. Actually, I love NFTs. I was just kidding. But go ahead.
I've been through it all. I started, and just in terms of technology, building on top of the Bitcoin blockchain in 2014, and then we continued on as smart contracts evolved and other chains were emerging. And my companies have built messaging tools, and we have built wallets on top of the EOS blockchain, Ethereum, and Bitcoin, most recently launching Bitcoin Libre, because we're seeing a resurgence in retail, not retail investment, but actually retail. One of the missions that I've been working on with my husband, Brock Pierce, and a very large delegation of amazing leaders around the world is called unicorn.org. It's the United Council of Rising Nations. We have been responsible for and participants in going into Central America and helping to advise on things like pro-innovation policy, pro-blockchain policy, and you'll see that the first successful country to bring Bitcoin on as legal tender in the world just happened in September. That was El Salvador. We are really excited to see that it's not just an investment vehicle anymore, but it is actually something that is having a retail use. If you have a piece of plastic in your pocket, you still don't need to use Bitcoin day to day. You are still not likely to use an asset class like this for purchases. But if you are in a developing nation, and for instance, El Salvador has 70% of the population unbanked, and you can get access to financial tools and non-traditional access to remittances that won't charge you fees, this is a big deal. So more than half of the population was already onboarded and had Bitcoin in their wallets within 30 days of this new law. That I think is one aspect. So where before I might not have said government is responsible for adoption, this is the first time ever. And going back to what Matthias was saying, that there used to be such a stigma. When I have been told in El Salvador that being involved with Bitcoin associates me with government, I was laughing because in my career, being involved with Bitcoin has associated me with anarchy and all the other aspects. And so I see that as a major success. My favorite project, though, and the thing that I think is the most fun, everybody loves being in metaverse. I'm building an NFT gallery here in Puerto Rico, and the amount of excitement and the amount of people involved, because it is now moving into the creative realm, and people are understanding fair value of creative output, whether that's art or music or anything that can be shared digitally. This is a new revolution. I keep saying that today, artists are going to be making more money living than dead, because for the first time they can create a perpetual royalty system. They can add a royalty to every single sale of their artworks down the line. So, I'm really straddling sort of two areas. I love the investment side as well. And that's, Unicorn Ventures has fortunately been a participant in some of the biggest companies now to date, like Block One and Casper and others that have emerged in these last years. I feel very fortunate. But the most fun and the most interesting, and the thing I think is going to actually touch the majority of people and be that like mass adoption moment, that has to be NFTs in the metaverse. It's here, it's coming. Government will help, and the artists and the musicians, they're the ones that are going to take it over the line.
It has been a bit of a surprise. It's a valid point that well, Mitch in the comments is saying, a Doge caused everyone to respond to crypto. Which, if that were verifiably true, I'd find that hilarious. I'd love to write about that. I don't think that's actually true. But by putting, it seems it's been one of the big surprises that NFTs have been such an excellent mascot for relations from crypto to the outside world, which previously Bitcoin was pretty much our sole star. But there's so much information available to people now, Ray. Do you think that we're dealing with, obviously the numbers are showing that more people are investing in crypto, and that especially among millennials and Zoomers, more people are thinking about investing at a much younger age than they ever have before. Americans who notoriously don't save or invest in anything have really stepped up, particularly if you got TikTok investing and crypto on TikTok, FinTok, they call it. In terms of picking out your sources, arguably at this point, professional investors and retail investors have exactly the same tools at their disposal. But how do you sort out? Everyone says do your own research, but how do you sort out like reliable indicators and reliable sources to draw from as you make these decisions?
I think you make a great point. Obviously, a cute dog is relatable, and nothing like a cute mascot to anthropomorphize crypto. But it is being used in a much more serious way than that. And I think when you think about people actually investing in this asset class, they're using it in their IRAs. So for instance, we have 15 products, 9 of which trade publicly. People can buy them in their brokerage accounts like GBTC, ETHG. And so as part of that, there's a lot of retail investors that use those products. We've created a body of content and primers, and we've put them on our website, and others have done the same thing. So I think, we like to think that we're a trusted source for information and for education for investors. That's a role that we like to play. And I think that's, folks can continue to use our content, our products, and continue to do their own research as they have been.
Mm-hmm. I think it's worth noting that companies like Grayscale, in a sense, play a role in the mainstream awareness. Just that you've got a fund so large, people respond to it. I wouldn't say necessarily in all things that retail investors are following the institutional investors, but perhaps in this case they are influenced by that. Certainly a lot of fence sitters who are looking for places to put their retirement funds and so forth, right? Would you say that you've seen some of that, right? I know that from talking to other people at Grayscale, I know that there are traditional finance companies that have been working with you to sort of build out their crypto capabilities. So you've seen a lot of those kinds of requests sort of coming in. I know that you're on the product side of it.
Yeah, we have. So we have a lot of, obviously institutional investors are a huge part of our business. Right. But at the same time, the IRA angle, for instance, is a big part for retail investors. And we've seen a lot, that's a trend we've seen increase a lot in the last year or so. A lot of people have made a lot of money investing in digital assets. And so they're like, wow, I'm paying a lot of this to the government. Maybe this is something I can be doing in a tax advantaged account. So we're trying to work with platforms to send the message out, like with the pharmaceutical companies run their commercials and they're like, hey, go ask your doctor about your drug XYZ. That's what I'm trying to put out there. Like, go talk to your IRA provider about getting access to products that give you exposure to digital currency.
Mm-hmm. So Matthias, how long have you been involved in crypto, by the way? I know you were a regulator in the UK. You've been in this game for a while now, I take it.
Yeah, actually, the first time I got into crypto in a sort of like professional way was back in 2013 when I did legal and regulatory analysis on on Bitcoin. Back in those days, Bitcoin was just a small little thing, but it already sparked some interest because of its digital uniqueness. Yeah.
I hope you bought a whole bunch of it at the time. that would be wonderful. What do you think is drawing people in now? Like what's changed between I mean, at the time, honestly, like I couldn't imagine most people wouldn't touch it, frankly, going back that far. The majority.
Yeah, I think back in those days, basically my work was to identify risks, so it was all risk focused. Especially for regulators, which they always are. But I think there's a multifaceted picture here. Why are people interested in crypto assets? And I'm sure each and every investor has got their own intentions and will act according to what he's actually interested in. There is the typical crypto assets, the older ones, I'd say, the classical ones, and I'm sure there is loads of retail investors who basically see prices go up. They see, social media adverts. They are inspired by peers, but they also, at the same time, and I think that's the really, really big advantage that we should all harness. Younger people are suddenly really interested in financial concepts, in monetary policy. They ask questions around, what is money? I don't think that I did this at the age of 18 or 20. Thinking about these sorts of things, and it really triggers their interest in financial returns and what is inflation. How can I actually, ensure financial safety over the longer period of time of my life? And then they suddenly start to diverge from just crypto because it's cool to other asset classes. And that's exactly why at Bitpanda, for example, we are offering the same trading experience across crypto assets, traditional shares in a fractional way, and also metals, because we think, essentially you're spending like 3,000 years here. But we think that all these assets do have some interest for retail investors. And I think retail investors, because they are learning, because they're engaging much more, they also have got completely different expectations of how they want to be treated by traditional, or let's say by financial institutions. They simply want to have an instant, 24/7 slick experience when they invest. And I think because it's so easy, accessible, it's interesting, and it's also really something you should do. Invest for the future. That's the reason why I think people are getting more interested overall.
Right. And in the future, maybe it'll be more of a blurred line. I mean, honestly, it already is. And
I think it totally is. I see so many crypto assets firms. So I've worked with quite a few as part of the FCA's regulatory sandbox. I was part of enabling the first DLT-based e-money. We've done tokenized shares. We've done all these sorts of things. I think increasingly these two worlds will merge together. I see Bitpanda sort of like bridging these gaps, and more will follow as you see institutional interest growing basically on a daily basis, right?
And it's good to see that we've moved past the stigma of Bitcoin as being the province of shadow economy and drug deals and terrorist funding, because it always annoyed me that they would make that claim without showing me quantifiably that it has exceeded the US dollar. Do we want to surrender that? I mean, that's one of our accomplishments. I'm just kidding.
Honestly, like one of the greatest things I've ever experienced was back when I was at GCHQ, which is essentially like the FBI in the UK, where a really senior leader said that we would really love criminals to all use crypto assets, Bitcoin. He was mainly talking about Bitcoin because it gives them an opportunity to trace payments. That's incredible, globally, instantly. And for me, that was a really important moment because I finally realized that law enforcement is also seeing, a potential here rather than just a threat.
Right. Well, so Crystal, certainly, like you had alluded to a lot of the things that were also kind of mentioned, were alluded to in our keynote today, talking about essentially using Bitcoin to create greater access to financial instruments, greater financial equality. I know that this is something that this is work that have been done in Puerto Rico following the storm that they had a few years ago, and of course that there's you mentioned also the work in El Salvador. Do you think that we are moving toward a world that has some of these utopian ideals from the Bitcoin white paper about equality of access to financial instruments?
I think it's evident that we have our first test case. We have a country of 6.5 million people that onboarded more than half their population. And by the way, they only have 4.5 million adults. So, we're probably at 70% at this point. It is proven that in a cash-based economy, and they're a dollarized economy as well, so it worked really well to bring Bitcoin on as legal tender. It's proven that it is already working, that these people have at the baseline financial tools, financial access. The thing that surprised me is that the ATMs from El Salvador have popped up in Los Angeles. It's showing that the diaspora is using that to send money home to their family, and that the remittances market is going to be flipped on its head. So we have now visited other countries. We've been in Ecuador, Honduras, Panama, and others that have invited us. We have a list of about 30 more where the governments and the administration has requested these delegations to come of technologists and of experts in the field to give advice as they are writing policy. It's a very, very big movement, and I can't stress enough how this is such an impactful moment. We celebrated September 7th as Bitcoin Day, World Bitcoin Day, because for the first time ever, a country has adopted it, and this makes it a very serious issue. The IMF is still questioning what to do, but in their own policy, it says that they must accept any country's legal tender, and this has to be noted. Bitcoin, I think, it's taken a different form, and it's a much more serious tool. And the UN released a report that said that Bitcoin money laundering that they can find is about 0.3% versus the US dollar is about 2 to 5%. And it's hard for them to even trace that number because they don't have the same trackability. So there's definitely this movement and adoption. And I think that we're going to see that it's much more fun and much more interesting for people to put collectibles into their wallet. But in order to enter into that market, they have to get into crypto in some capacity. I'm looking forward to 3.0. I'm looking at the the next layer chains, and as we see things like Casper evolve Ethereum, and as we see things like EOS come with another version of a transactionless network, or in an attempt to bring on more retail investors, and retail use cases, this is really exciting because I still think that Bitcoin is digital gold, and ultimately, even though this is a really good step for adoption, is not likely to be the one that people use to purchase bread.
Well, that's fantastic. I think we're going to wrap up in the next couple of minutes. I think we're also getting toward one of the last sessions of the day. So, in terms of advice for investors, we're all honestly, you're all deeply immersed in this and have a point of view that's deeply immersed in this. So I know that. I like to create sort of awkward situations sometimes, I guess. What advice do you have for investors? What do you tell people? You must have people outside of your sphere, Crystal, who are not into crypto. What do you tell them in terms of getting involved?
I never tell anyone to invest in anything other than themselves. And if you have the knowledge, then you're going to.
What if they say, "How do I get started?" Something like that.
Absolutely. Well, I mean, in that case, I usually ask, where do you live, or which jurisdiction are you? Because that informs what is the best wallet, what is the best exchange. In our country, in America, we have an issue still where we have things like the BIT license in New York, which prevents people from using common tools. So we're still struggling. Regulation is still in an area that needs to be worked out, and hopefully favorably to the world, because we don't want to be left behind. So usually it's who are you? What are you looking to do? What is great about this is that there's not a one for everyone. There's not a one size fits all. There are so many tools, and part of the reason why we endeavored on building the Bitcoin Libre wallet was because we were seeing that people have thousands of options, but they're still not all very good. There's always some reason why it's difficult, and I wanted to help that very use case of everybody's mom, and all of our families and all of the people that are coming into this generation of it, say, how can we use this the most easily? And so we built sort of the Venmo of Bitcoin. And now what I do is I look at tools that just have the best user experience and try to guide them that direction.
Mm-hmm. What about you, Matthias? What advice do you have in closing for our retail investors listening and the people you talk to in your own life?
Yeah, well, obviously, this is not financial advice, but if people ask me how, what, why, I think Crystal has said it all. There is no one size fits all. I would try to understand what people are actually curious about. Do they want to buy a crypto kitty, or do they want to go to Decentraland, or do they just want to have some sort of cost dollar average investing into Bitcoin because they think that there is something valuable in it, and they want to do some saving plans. I think it's really hard to give general advice, but obviously here in Europe, we're still not in the US, but here in Europe, I would say, just use a Bitpanda platform. It's the easiest way to get exposure.
Ray, you have anything to close us out with? Something positive. That would be good.
No, of course. Yeah, so not investment advice, but everyone out there, think about this as a new asset class. Think about it like you think about other asset classes. This is a risk investment. If there's a right size, whether that's 1% or 5%, you have to decide that. And, become aware and educate yourself on the on-ramps that already exist. You can go into your Schwab account or your Fidelity account and literally buy stocks that give you access to Bitcoin and to other digital currencies without having to deal with these headaches of getting on an exchange or losing your private key or getting hacked. So, and we're here to help, but think about it like a traditional investment, traditional asset class, and take your risk profile into account and right size your investment.
Well, thank you so much, everyone. What an outstanding panel. It was great to speak to all of you. Thank you so much for joining us today. Great conversation, and look forward to talking to you again soon. Thank you for joining us.
Thank you very much, Justin. Thanks, guys. Bye.
See you soon.
Hey guys, you are muted.
I'm unmuted now. Thanks, Aaron Thomas, for the heads up. I just did a whole thing, but let's try it again. It'll be even smoother second time around. I'm sad to say that our Global Fintech Awards are coming to an end. 7th year we've been doing this here at Benzinga, but stay tuned. We are moving into our very last batch of awards. These are the companies that are the movers. These are the companies that are the shakers. These are the companies that are defining what we are going to have access to for years to come, okay? They are pushing the needle, pushing the boundaries of how investors interact with the markets. And so I'm happy to get us moving into this first award category, simplifying access to futures. This is something we did not have at our first Benzinga Fintech Awards. We've had it for the past couple of years as the number of asset classes that have moved from being purely institutional to being available for a broader audience has changed. Again, simplifying access to futures, making it easier for us. The winner of this category, drum roll please, NinjaTrader. I'm joined by Martin, CEO of NinjaTrader. Martin, congratulations on the award.
Luke, thank you so much. It is great to be back. Like some other recipients today, I wanted to make sure I brought my hardware from previous years.
You brought the hardware from previous years?
Brought the hardware, yeah. We love to display it. Yeah, thank you to the whole Benzinga team. Today's been great. Thank you to all those who voted for us in other categories today, including Best Futures Broker. We're honored. Very excited to accept this award on behalf of the entire NinjaTrader team. As you know, Luke, we are laser focused on simplification and access to futures. as the secular trends have continued to evolve and access has become readily available through different trends, through microization and exchange level innovation. We launched our FCM this year solely focused on access, simplification, and a modern fintech experience that was dedicated exclusively to retail and exclusively to futures. With all of this change in retail and all this change in futures, we believe at NinjaTrader this is the very, very early innings of what you'll see not only in retail futures, but from NinjaTrader. So again, thank you so much. We are honored to be here today, and thank you for hosting such an amazing event.
And can you hold up that trophy again?
Absolutely.
And I hope you've been doing some workouts because now you're going to have two. You're going to have one for each arm. They're going to get heavy, okay?
I can't wait. Let's go.
Awesome. Congratulations.
Thank you so much.
Hello, hello. This is Jason Rasnick back at you. Let's see if the camera's on me. Okay, there we go. All right, so now we're moving right along to Best Investment App. Now, this investment app has got a lot of press. It is definitely, grown from zero to what it is today really fast, a lot of development. And the winner for Best Investment App, give me that short drum roll. Webull. Hello, Michael from Webull. Are you there?
Hey, how you guys doing? Jason,
congratulations. Congratulations. You guys have moved fast from like 4 years ago. I don't even know if you're around. Today, everyone knows you. How have you done it?
I've been around. First of all, I just want to say thank you to Jason, Luke, Nicole, and the entire Benzinga team. It's great being a partner with you guys for over the past 4 years. It's a real honor to accept this award on behalf of Webull and the Webull family and for the best mobile brokerage app. To be honest with you, I mean, the award epitomizes what a world-class organization is all about. It's a real dedication to all our colleagues globally whose hard work has made Webull what it is today. And to be honest with you, the best is yet to come. So thank you. We really appreciate it.
Well, I remember when it was just you and Anthony Denier in the office. So, I mean, you come a long way, a lot of people, and so many new developments. You guys had crypto last year to, I don't know what's next. I mean, do you have a huge product pipeline of things you want done and just so little time kind of thing?
I mean, there's a ton of stuff in the pipeline, right? I mean, we started with equities, we went to options. We had, crypto's been rolled out for the past year. So, I mean, there's a lot more coming. 2022 is going to be an exciting year. So just watch out.
All right. Well, thank you again. Thank you for coming on. Webull winner, and congrats. If you haven't checked it out, make sure to check it out. Thanks again.
Thank you.
All right, everyone. I am going to keep us clipping. Again, we are down to our final award segment of the day. Stay tuned. These are the companies who are moving the needle for all of us. Next category we're getting into, Best Reg Tech. Regulation technology. Regulation, it's important. It is the guardrails that keeps us all in line, keeps markets fair and transparent for all of us. I am proud to announce the winner, Trillium Labs Surveyor, Best Reg Tech 2021.
Surveyor is designed to increase compliance team efficiency, cut costs, and accurately prevent crippling fines. Surveyor's groundbreaking alerts keep your firm safe, while saving your compliance team time, money, and effort by reducing false positives.
All right, Melissa, the entire Surveyor team, congratulations on your award.
Thank you so much. It's so nice to be back. Thank you again for this amazing award. We're so excited to be recognized. And thank you again for such a fantastic event show today. I know everybody's been enjoying it. So, we're incredibly proud of our industry disrupting RegTech product for Surveyor, which is a market and surveillance solution. Surveyor adds value to compliance by providing our users with accurate and reliable data so that they can have insights to inform how they execute their roles. We're in full growth mode. So this year we launched a 605, 606, and BestX module, as well as a FINRA import tool. And we're continuing to grow the product, continuing to expand coverage, and continuing to grow our diverse team. So, thank you again for recognizing us. Surveyor continues to, detect accurately and display intuitively. And congratulations to all the winners. And I will see you at the after party later.
Awesome. 5:30 Eastern, Stout Grand Central. We will see Melissa there. We will see everybody else there. If you are in the area, you're in New Jersey, Connecticut, make the drive in, come hang out with us and celebrate. And Melissa, let me ask you one of my favorite questions to ask. Given that you are director of product, what are you most excited for?
Oh boy. So I am I'm the most excited about the opportunities that we have and the opportunities that we're going to take. So, we're like I said, we're building a team that's excited, that really wants to innovate on our product and provide an industry leading tool. So, the world is our oyster at this point, and we're excited to continue to expand and develop.
Excellent. Congratulations again.
Thank you both. Thanks so much.
All right. Welcome to the next award. We're moving along. So we got best options apps, and I use this account actively. I use this company actively. So let me go to it, and the winner is, drum roll, none other than E-Trade. Hey, I'm excited, truly excited to have on one of my favorites, Mary Ryan, VP of Trade at E-Trade. Mary, do I have you here?
I'm here. Can you hear me okay?
Oh, yes. Oh, you're in the office working away.
Yeah, I'm honored to accept this award on behalf of E-Trade. Thank you to Benzinga, Zinger Nation. As you guys know, we've introduced a whole new set of features and education geared to our options traders, especially on the mobile app. The Earnings Move Analyzer, which allows traders to visualize the stock's expected move based on the options market ahead of earnings. We enhance the mobile trade ticket by adding snapshot analysis so options traders can see the risk reward prior to placing a trade, sending their orders off to the market. We're thrilled. So we really appreciate it.
So that risk reward on the options thing I've used. I'm an active E-Trade user because if I ever have a question, I'm hitting up you, of course, the whole team. But I'm active, and E-Trade has been a forerunner in tech and ease of use, usability. Where do you see, how do you see, I know you have tons of experience in option trading. How have you seen the options trading market just overall evolved over the last 3 to 7 years, I guess?
We've seen a lot of new entrants to the marketplace, and where we've really put an emphasis in the last couple of years is implementing education within our platform, as well as just in the tools itself, as well as our education team. This year, we actually just launched the new weekly options playbook webcast series. It's been great to see new retail traders, especially option traders, enter the markets. We're really trying to supplement our offering as much options education as possible.
Yeah, and I can attest to that because some of those educational terms I listen to, I put them on in the background and I just listen to, and they're helpful to learn the basics. Because back in the day, I started listening to the webinars and I learned buying calls is not the only way to deploy options. It took me some time to, I was like, I'm buying calls, but then the time decay, I learned about that. So if you don't use E-Trade for options or check it out, there's new developments that you guys keep introducing, which I love because it helps you look at options another way. Back in the day, I just never knew it was so scientific, and it seems like it is. And the tools you guys do make it easier for users. So, Mary, anything else I'm leaving out that you want to add in before we go on to the next part?
Just thanks for everything. We're super excited to receive this award. It really validates all the hard work that the E-Trade teams have been doing the past year. So thank you.
Yeah, no, it's exciting. Mary Ryan is an expert, been in the industry for many years. So you're using E-Trade, you're in good hands. Mary, thank you for joining us today, and we will talk to you soon.
All right. Thanks, Jason. Thanks, Benzinga.
Yep, thank you.
All right, everyone. I am honored to be bringing us the next category. This is a new category. This is a 2021 category, and it really speaks to how our industry has progressed. Okay, when we started this award ceremony 7 years ago, there were banks, there were brokerages, right? Everybody had to have both, right? You don't have to have a brokerage, but all of our audience, you had to have both. You didn't have a 2-in-1 experience. And so this next award is called Best Money Management App. And what we were looking for is who did a really good job of bringing the whole world of financial services together. Without further ado, I'm honored to be announcing, drum roll, here we go. First winner of this award, Best Money Management App, goes to JP.
All right, guys. So we're moving along. It is now 4:55. All right. So this will be finishing in the next 10 minutes. But what I want to say is, you guys, I don't know, sitting at home, sitting at your office, everyone here works so hard at the end of the day to do three things. One, make people's investing life easier, which is save money, make more money, or just help people understand the markets. You're all working so hard to do that. And why do we do these awards? Someone said, hey, you've been doing this for 6-7 years. Isn't it time to retire this? I don't know. Do we not watch movies anymore? People deserve to be honored for the work they do. And it's hard. Some of this stuff is hard. We had so many judges, so many applicants, and it's hard. So some of these people that didn't win, like I've seen some emails, and I argued with Luke. I'm like, I love that company. I use that company. And so
and Jason, let me step in with some stats. How many companies do you think we had apply for an award this year?
I have no idea.
Over 1,000.
Really? Okay.
Judges, over 100. So, finalists, down to a final list of about 100 finalists.
Yeah.
Amazing.
So it's truly difficult because it's so hard because I like, the Oscars. I remember one year, it was Wolf of Wall Street. I thought Leonardo DiCaprio should got the Oscar.
Or Jonah Hill. Jonah Hill did a good job too.
Yeah, and so it's really hard, Luke, to just subjectively say this is the best, this is the best. But the answer is, yeah, there's winners, there's people that don't win, and there's that Joe, like the brother, what's his name, the car racing movie. He's like second is the first loser or something. But I don't think
Talladega Nights.
Yes, I don't.
If you're not first, you're last. So
yes.
Just so everybody has that, if you're not first, you're last. That's the line.
And I don't thank you because I'm bad at that. I don't think this is the case here, Luke. I think there's winners, there's list makers, but you guys are all working so hard and deserve to be honored.
Every single company that's here has customers whose lives are changed because these businesses exist.
100%. So Luke, I opened an account. I'll tell you, I opened an account with a winner earlier in the day. I didn't open it today. I opened it like last week. It's called Ground Floor. I opened that account and then I looked at, because I was looking at the alternative investing category. There was another one that I opened an account with too. And I didn't even put money in yet, but I'm trying to get involved with all these things. And it's because we want to help grow this market. At the end of the day, there's going to be a lot of winners. Think about this. Every single corner you go on, there's a bank branch. There's going to be a lot of winners. And so we want to help evolve, and we understand the product too, even though we have judges. And I think that's really important. So I'll stop as the vocab word of the day, bloviating. I think the next category is me, Luke. Is that right?
All you.
Yep. Okay. So the next category is best broker for mutual funds. Drum roll. Drum roll end. This winner is Fidelity Brokerage Services.
All right. Congratulations, Fidelity. I'm going to be bringing us the next award. It's Best Research Aggregator. All of these companies are companies that we work very closely with, given our business of producing content, actionable content, data sets, tools here at Benzinga. Dozens and dozens and dozens of incredibly strong applications in for Best Research Aggregator. I am honored to announce the winner of this year's 2021 Benzinga Global Fintech Award, Yahoo Finance.
Hey, it's been a long day. Producer Rohan fell asleep, and I apologize. His drum roll sometimes doesn't key in and key out, but we love Producer Rohan. He's working his butt off. Producer Rohan, come on the screen real quick and say hi to everyone. He flew in from, I don't know, but he did fly in. Can you say hi? There he is. That's Producer Rohan. Good job, man.
Thank you.
Very good. All right. Thank you, Producer Rohan. Wanted to say thank you to him. And then I also want to remind you that hashtag BZ Awards. Congratulations to the winners, the list makers. If you have any questions about the process, email us at events@benzinga.com. Now, best broker for CFDs. All right. Forex.com.
All right, everyone. We are down to our last two awards of the day. Again, take this video. Take what we went through today. Skip back through it. Look at what some of these panels were. Look at who some of these winners are. I mean, we got insights. We got sneak peeks. I mean, we got to see what the future of our investing lives look like. We got to see what partners, competitors, new entrants in the space are doing, how they think they're going to make an impact. Second to last award of the day. This is another new category, not new to 2021, but I think we've had this one now for a third year. Again, this speaks to the evolution of our space that's happening so quickly. It's Best Multi-Asset Brokerage. Best Multi-Asset Brokerage. Again, when we started this, you had your place to go for stocks. You had your place to go for futures. You had your place to go to crypto if you even knew what crypto was at that point. Now these experiences are coming closer and closer together. 2021 winner, Best Multi-Asset Broker is eToro.
Hello. We are at the final award. This is the People Choice Award. Now, I have to say, there has been over, a few hundred emails coming about this, but over tens of thousands of votes. And I know voting changed. We did the best we could to regulate email addresses, IP addresses. I know there was a lot of people voting, but
yeah, the Benzinga tech team went a little bit crazy trying to monitor this one.
Yes.
To keep it locked down and secure.
Yeah, at one point they made you log in to vote. I don't know if that was still the case. I'm like, come on, no one want to log in to vote. So we did our best to make sure that you have an accurate winner The crowd chose, and it went up, down. There was multiple people. I mean, honestly, you know what we should do? We should show like where it went, like how the votes and calculations.
It didn't look like a horse race where it's neck and neck at the end. I mean, this was like neck and neck and neck and neck and neck and neck. I mean, there was like a couple dozen.
It did look like the horse race. I thought you said it did not, but it did.
A horse race, you got 2 that are close and the rest are.
Oh, you said it did not then, because you're saying
we had like 2 dozen.
Got it. Okay. I didn't know it's horse race analogy. I'm not like a horse bettor. That's more of a Joel thing. Do you bet on horses?
Not yet, but you know, this online gambling stuff is crazy.
Yeah, they just announced New York. The Penn National didn't get it. I don't know how they decide how you get it or what. So it's a strange one. And there was another one that didn't get it. That was a surprising one. But we are going to go to the last award. This is the People Choice Awards. We're going to go do the drum roll, and then Luke's going to announce the winner. So People Choice Awards, drum roll.
Aries by TradeStation. Pash, Retta over at Aries. Congratulations, guys.
Yeah, thank you, man. It's actually an absolute honor to be winning, man, especially as the people's choice. We consider ourselves for the people, by the people, and you know, we've only been around just for a couple months. So to win as the people's choice is really, it's kind of unprecedented, man. It just goes to show the support that's coming from our users, especially over the last couple of months. We've had incredible amounts of growth, and giving small investors seamless access to the markets has been our goal forever. So hopefully,
go
ahead.
So what would you describe your value proposition or differentiator?
Yeah, so we're available in over 100 countries, right? And almost every week now, we're releasing brand new tools. In fact, we're using this award as an excuse to release our web platform later today.
So how are you doing that? How are you developing so fast, so quickly, and every week?
I can take that one.
Cash.
Actually, I've been working as an agile coach and in agile development for many years of my life. So I do have some tricks of the trade. Speaking of which, I did want to take this quick opportunity to thank our users. For those who, especially the ones that joined our Discord channel, you guys really made it what it is as an app. Yeah, we're always getting feedback from our users, new suggestions, what's working for them, what they want to see in the app. They really help make the app what it is. And I think that's one example of how we're taking that like radical agility and applying it to our app. You know, we launched back in June, and only 3-4 months later, launching a whole new platform on web. We have so much in store for you guys for next year. Really excited to bring it to you.
Pash, you gave a tease, and we need to know one of the teases here. So you said you're an agile.
I don't want to give away too much, but what I can say is
no, you don't know the question. Not what you're launching soon. You said you're an agile coach, etc., and people always want to know how to move faster. Can you give one trick of the whatever of how you're so successful at releasing products so quickly, or an agile coaching over the years? Just people seeking advice here. You know, you go to YouTube, seek mental health advice. We're asking you product advice.
Well, I mean, I've worked with small companies like our own startup, and I've also worked with large enterprises like major banks in Canada. Mm-hmm. And the number one thing that I've seen is it should be okay to experiment and make mistakes. There's so much time and bureaucracy spent around trying to like create this perfect package and ship it out to the people. But then when you launch it, it still has bugs. It still has issues. People are still finding problems, right? If you have something that people are going to get value from and it's not broken and you don't think it's going to really like offend anybody, just release it, see how it goes, and get closer with your users. Don't try to create this like professional wall. Like that was big in the 90s to be like, hey, welcome to our customer service department. How can we help you? But like we're in a whole new age. We have the internet. Get close to your users. Actually start talking to them. Hear what they have to say.
Awesome. And you mentioned the Discord community. Do you think that's why you built such a fan base, or is there something else to it? Again, among 1,000 companies, you guys won the People Choice Award.
I'm going to toss that to Reto a little bit because he does trade on the side as well. He has a pretty big community of followers.
Hey man, I've been an investor my entire life. So the whole goal here was to just give people exactly what they wanted, right? We listen to our users, we take their stuff in, and then we try to bridge the gap. We try to make what seems impossible possible, especially with data, right? I feel like a lot of huge companies nowadays are charging ridiculous fees for data. And our main goal at the start was, how can we give users access to what they need and make it as cheap as possible? And I think that's what garnered such a large following at the start. And then just listening to our users at the end of the day, talking to them, interacting with them, even hopping live on voice calls with them just to see what they want. And then with Pash moving so quickly, it's like a never-ending train, man. Our users come in, they see how much work we're putting in and the platform that we're actually loving to build. And, you know, the feedback, it's just a really good positive feedback loop.
Well, congratulations, guys. And we're going to be at Stout Grand Central at 5:30, so in about half an hour from now. And we're going to be just sitting there at the bar waiting for that web platform to come out.
Yeah, man. Even beyond web, we have so much more to come over the next year. We're so excited to bridge the gap for our users, man. I think that just the growth that we've seen in the last 3 months, we could 10x it. Man, the support from our users, it's showcased with this great honor. So we're excited to see you guys there.
Thank you so much, Benzinga, for the opportunity.
Congrats again. Congrats. We'll see you soon. Thank you again. That is Aries, powered by TradeStation as the People Choice Awards. Thank you.
Woo!
Ooh. All right, Luke. So we've come to an end. We've come to a conclusion. What do you have to say?
What's so surprising to me is I think back to what did this world look like when we started doing these awards? I mean, there were not commission-free brokerages. There were account minimums. It wasn't every single 18-year-old with the cell phone was connected and could actually participate. I couldn't go invest in wine or art or in a multi-family apartment building, right? We didn't have that. That's what we have now, and that's why we do these awards.
100%. And then you have cool things like Benzinga Pro that we innovate on all the time, newsletters, and these are things that we're trying to give edge to investors. If you can make 10% a year, 8% a year, 12% a year, sometimes 20% a year, you can have the power of hedge fund tools in your hands. And there's a lot of these alternative investments that we're looking at ourselves. You have a lot of these amazing winners. Check them out. We just had Mary Ryan on. She's talking about our options, different thing where you can do like basically take a scientific method to option products. And that's what this is about, finding new ideas, finding new strategies. Again, if you have any feedback for us, how we can improve, get better, email us at events@benzinga.com. The hashtag is BZ Awards. Go to fintechawards.com. And, you know, we're always also hiring. So if you're looking for an opportunity to impact the outcome, reach out. My email is jason@benzinga.com. Luke's is pretty hard. It's LUKE@benzinga.com. That's BENZINGA.com. And Rohan is ROHAN@benzinga.com. He's looking for people in his multimedia department. So we thank you for tuning in all day. We know this is long. We'll cut up the clips so you can let the individual clips, email us for individual clips. We have a whole team on this. We work our butts off. We've been going about 36 hours straight on this thing. So thank you. Thank you. And we are here for next year. Any ideas, bring it to us. We love you, appreciate you. Follow us on Twitter @Benzinga. Luke, any final words since you started this off by yourself without me? He's really mad at me about that. So any final words?
I thought you were pissed that I cut you out of the beginning, but okay.
Yeah, there you go.
Yeah.
No, I was. He snuck up and they started before. Yeah. All right.
Final words. Everybody who's in the New York area, if you're on Manhattan, you're in New Jersey, you're in Connecticut, it's not too
You're
late.
on Manhattan because it's an island?
You're on it. It's an island.
Because I want to say you're in it.
Chat, please clarify. Are you on Manhattan or in Manhattan?
Can we get a clarification on that?
We're going to keep going until we get that clarified.
Yeah, I would like to know that. But either way, we'll be at Stout Grand Central. Food, drinks, surprises, giveaways. I think there's a couple iPads. Rohan, you get to have him come video. If you have a wedding or bar mitzvah coming up, Rohan will do free video services. He has a Benzinga polo he's going to auction off. And there's giveaways, T-shirts.
Yep. And we're going to put Spencer Israel's phone number in the chat on YouTube. So if you need help getting there, you need help registering, you'll have that phone number.
Yes.
But guys, we're about to run over there now. Come hang out. Let's celebrate what we've done as a group. And
check out Benzinga Pro before you go. Thank you.
Boom.